Good morning, you knuckleheads. Happy Friday to you both.
Hello.
We made it.
I don't know, did we? Look at this market. We finally got some volatility to it.
Yeah, it looks like nothing today. If you were watching overnight, they got down to like 65.50-ish, and they've rallied back. You got vol down, gold coming off. Looks
What
like
is going on? I haven't done a Friday show with you guys in like 3 weeks.
I know. I'm sorry. It's been me. It's me. It's not you. It's me.
It's him. It's not you. You have a great personality.
Yeah, we had a lot of travel. Dallas. And then what was the other one that we had?
I don't know.
Oh, you don't know. It doesn't matter.
I don't remember.
You want to get vacations. Who knows what you do?
All that matters is that volatility is back.
It is back, thankfully.
Volatility is back. Volatility.
It's about time.
How are you, Vanetta? I got a little off track there. I apologize, but it was a crazy market last night, overnight.
No, go ahead. Yeah. That's what the people are here for. That's what puts the butts in the seats.
Completely understand.
Do I take my micro gold short off that I had at the beginning of the session on for last call yesterday, or do I keep that on? Are they gonna? My thought is because volatility has come in pretty significantly, we've bounced. I think we got a little bit of a bottom today. Maybe we rally a little bit. Gold comes off. The what?
Rallying gold?
No, rally in equity markets. Yeah, I think gold kind of takes a little bit of a pullback.
Sure, you had that overnight capitulation 100% across the board. Even the S&P is getting down, as you said, 65, 70 range. You had gold up, $200 at one point to just about 4,400. It's 4,300 now. I mean,
thankfully, I was asleep at that point. So the money I was losing, I didn't know I was losing, so it's okay.
You have a bunch of gold positions that benefit from down moves. So
not really. They're pretty far in the money.
Now they are. Yes, that is true. So what do you think you should do?
Well, I think I should probably take it off. It's got 25 points out of it. I mean,
what are you waiting for?
And I think the answer to your own question.
Is today expiration?
Well, not for this contract, not for the futures, but it is an expiration.
Okay.
Right.
Not the expiration.
Like SPY October expiration,
yes.
Which is usually a bullish expiration. I have a viewer that sends me all that information. It's one of the most bullish expirations. That's yesterday's close and today. Now, today, it doesn't seem like it's anything but bullish. I mean, it's slightly down right now, and it was down big last night.
Yeah, big. I think that was kind of our capitulation.
Mm-hmm.
It feels that way. Volatility.
Do you know what the expected move for the market is today?
Sure, always. Expected move for even the S&Ps on the 0 day is around 59 handles. That's a big.
We're there.
Yeah. And SPX obviously is going to be like a little bit more than half of that. It's 33 right now. That's the AM options alone. The regular daily options, remember, because you have an expiration, these options in October 17th, there's AM options that are going to expire right here on the opening. They're pricing in almost a 30 handle move this morning. And October.
That's a settlement. That's a settlement. So like all the stocks in the S&P 500, when they open, there's a 30-minute window where they decide on the set. I think
it's more than 30. It could be more than 30 minutes. It's when they all open.
Okay. So, I mean, it depends on where the like opening mark is for all those, and then they take it. So that's when Tom will say, like, this one is underwater, or So
yes, and they don't all open right at 8:30 or to 8:35 Central Standard Time. Some of them won't open for a half an hour. There's no telling when they open, but they all have to open to get the settlement price. And then when they do, then you get your SET number for those options that expire in the morning of October 17th. The ones that expire in the afternoon, you're looking at a $66 handle, $66 move in SPX. So big volatility, even though volatility is down by almost 50 cents now, which last night, nobody would have said that.
No. Looked like it was going to be rough.
Volatility got all the way up to 24.
Whoa.
Yeah. It's just under 22 right now. Big move. It's still, still elevated.
We didn't even bomb anyone. Like, what is going on?
Sometimes the market goes down. I know it's a shock. It's
It is a
there's a lot of people shocked. Sometimes it just goes down. It doesn't really need a specific reason.
Is the plunge protection team affected by the shutdown?
Absolutely.
That's why this 3% move has been so deep and
vicious,
painful.
yes.
Is the plunge protection team, but the liquidity is on the way as it always is. So don't worry.
Yeah. I was wondering when the government shutdown was going to affect me, and now I realize it was the plunge protection team.
Yes.
I had no idea. Anyway.
Darn it.
But let's switch gears here for a quick second. Give me something eventful you did last night or you plan on doing this weekend.
Well, I'm being forced to socialize this evening, so not super jazzed about that.
Damn.
But no, I just went to the gym last night. It was hit legs. You asked. And then I think it's just gonna rain all weekend. So there was a ride I was gonna go on, a group I like to ride with, but they called an audible and they were like, we're already just gonna reschedule because it's just gonna rain here all weekend. So
yeah, my streets today is an auspicious day. The streets outside my house have been worked on for it's been almost a 3-year project in my little subdivision. It's finally coming to fruition today. We finally get blacktop on our roads. It's been a mud pile outside. Haven't been able to go in my driveway for 2 weeks.
wow.
Sad problems, but all over today.
Are you cutting the giant ribbon with the giant scissors?
No, but I am taking out the power washer tomorrow because there's mud everywhere. I mean, everywhere. You have no idea.
Wait, but so you got the power washer back from Tom? Didn't he have it?
Oh, I never.
Tom had Scott's power washer.
That's Scott.
Gotcha. Okay.
Scott makes bad trades like that. I would never make a trade like that with Tom. Are you kidding me? He's an abyss. Whatever goes in never comes out, whether it's food, tools, whatever you need, money, whatever you need. It only goes in, doesn't come out.
See, but now you can set up your elaborate Halloween party garage because your driveway will be done. It'll be power washed.
Yes. I don't know. I've got a lot of new neighbors now. They're real young. They make me feel very old.
You decided to have a kid when you were 50, so that's on you.
Pretty close, pretty close to 50. Yeah, just under. I round up. I'd be fine with that. You're right. The day Beth comes over to see my Halloween decorations is the day I know I've made it, or I'm expiring very soon. One of the two. Yeah.
Ooh, Beth getting called out. That's rough.
It happens.
Okay.
What about you, son? What's an upwardly mobile gentleman like yourself do on a weekend?
That's the new line. No, I watched some football. We made harvest bowls. How does that sound? Harvest bowls
with quinoa?
No, we went wild rice.
Oh, wild rice. Oh, I love that for you.
Kale. Sweet potatoes. It was really nice.
A sprinkling of your testicles on top because you don't have them anymore.
Yes.
I really thought you were going to go in a different direction. I didn't know you became Susie Homemaker. I thought you were going to talk about like the Steelers Bengals when you said, I'm going to watch a little football.
I only watch half the game,
Wow. Okay.
And then you had to watch Love is Blind. What happened, girl?
we haven't got to that point yet, thankfully. So Love is Blind is not yet a part of our routine.
How did the harvest bowls turn out? What was there meat in them, or
we put prosciutto? We did a little prosciutto in there, crispy.
Oh, okay.
Yeah.
Did you fry it or microwave it?
Fry it. You can't microwave it.
No, you can.
I guess you can. Yeah, with the bacon you can do too.
Yeah.
Kind of a cop out, but
you don't want to look like me when you get to be my age. Maybe you should stop microwaving some of this stuff. You know what I mean? Stop frying it.
Wow. Well, it has enough oil in it. You don't need to fry it. You can just put it in there. You don't have to put any extra oil. All right.
You use your air fryer.
Ooh,
that's true. Yeah. That we were using that for the Brussels sprouts.
Oh
Oh my
God.
God.
Oh,
I don't know
Yes.
what has happened to you, son. It took a long time, but I don't know what has happened to you. Wow.
Yeah, it's gone downhill really quickly.
Do you sprinkle some of your Zen on top of your harvest bowl or like?
No, but we did have some pine nuts. They're quite delicious. Toasted them. A little bit of shallot in there,
What
homemade
has happened?
dressing. Yeah, it was. I'm Susie Homemaker now. It's really sad.
Wow.
I mean, I used to be somebody, guys. I used to be somebody, and then not anymore, unfortunately.
I'm without words. Takes a lot to shut me up. You've really done a good job.
I tried. I tried.
You succeeded.
Yes.
You succeeded.
So probably no golf for you this weekend, Nikki, huh? Because of the weather.
No, we're gonna try and do one in San Diego. That's what we're
Ooh.
debating. That Mike and I. We'll see. We tried Torrey Pines, and they gave us the little okay, that kind of thing.
I mean,
you
it
know?
seems like we know a viewer that knows somebody. Get Tony from Mexico on the phone. He runs that town.
Yeah.
Yeah, you can't use that, calling card for, a quick game at Torrey Pines. You know what I mean? Like,
But you can use it to take a helicopter in Mexico?
yes. You see that? See, that's valuable. That was valuable because it was me. It was valuable because it was me.
Okay, great.
You got to call on that when you have a whole week of festivities you need to get taken care of. You don't want to use it for just one quickie day.
Yeah, but it's Torrey Pines. Yeah, you use that for one quickie day.
Yeah.
The YouTube chat says Beth should go steal your pumpkins. So Beth, if you hear that, you can go see his decorations and steal his pumpkins. I think that's a good call.
Payback is definitely it's warranted. It's definitely warranted.
Well, how about you, Bat? What is on tap for you this weekend? Just full of the sauna?
I was in the sauna last night twice, actually. Put it at night too. I put some lights in, so I wanted to
Ooh.
yeah.
Wow.
Very zen-like. I don't know who I'm becoming, but very what do you know? Who knows? In a couple of weeks, I'll be making a harvest bowl.
Yeah, it sounds good. I was gonna say I could come over. I'll make the harvest bowls. You can warm up the sauna for us. We can get in bed by 9. It'll be perfect.
I was in bed late last night, about like 11. Another late hockey practice. We got a New Trier game this weekend on Saturday. That's a big rivalry for us. New Trier, Glenbrook South. So we'll do that on Saturday. But that's really about it. And
that's Beth's alma mater. Maybe she'll come out.
That's mine too.
Nikki's alma mater.
Yeah.
Oh, I didn't know you were a New Trier kid.
Oh yeah.
Wow.
Yeah, what do you think? He got that attitude from me?
I have no idea.
You got that attitude from New Trier, not from me. So that's my weekend.
Oh, that's good.
All right. Well, then we've reached a lull here. Just talk amongst yourselves.
The Dow hasn't. The Dow's had 1,000-point range last night.
Yeah, we almost ticked green on the E-minis. They were only down like 4.
Yeah, and the Dow is up actually 16 right now. Nasdaq's down 89. Nasdaq had about almost 750-point range last night. E-mini S&Ps had a 100-point range. Talk about the overnight move in E-mini S&Ps and the overnight move. The whole day move for today is about 60 handles. We had a 100-handle move last night. You think we test the lows from last night, Nick? People are writing me in.
I don't think so.
Yeah, I don't think so either. But I get a couple of emails already saying, we never make the lows or the highs.
Yeah, never bottoms on Friday. I hear that.
Yeah,
I get it. Yeah, I wouldn't have. I
think it actually. I don't think you go down on Friday. But go ahead.
I was gonna say. I mean, I was not expecting after the week we've had for Friday to be our easy day, our tight range day, vol crush, kind of end of the move. I was not expecting that. Do I lay this gold out again?
I was just going to tell you, good close on your gold. You're 25 handles lower than where it is right now. No, I think you sit. If you're going to get something in gold, maybe you get. You got to play gold now for 50 handle moves, right? You know what I mean? At the very least, I mean, you look at gold, the expected move for today is just about 50 handles. So I don't know. You took a nice profit. I would probably wait. You can make fun of me when gold is down 100 later today.
I need one more. What I do need, I don't know if the market's going to be at lows today, but I need these frothy stocks to have one more day. I need one more day.
Like
One more day.
Like your Oclos, your INQs, that sort of stuff. I need one more day out of them. E-mini's only down 3. Cancel crash.
Yeah, cancel crash is right, down 5.
Well, maybe they got some emergency pay to the plunge protection team.
Yeah.
Definitely two-sided action in the market. You talked about it yesterday, Nick, how you're going to get some two-sided action. Yesterday's action was really nice, too, for two-sided action.
Yeah.
Hey, we got a two-sided show for you today. How about that on this fantastic Friday here at Tasty Live? A lot of great content headed your way. It is hashtag Fan Friday at the top of the 8 o'clock hour. We're going to do the weekend stocks. Jamal's going to come in and do what he loves to do. He is titled this week's segment, Cracks in the Levee. Nikki, go ahead. Take it away. You want to sing it?
No.
7, 8.
No. It's all you.
I think you were singing before we came on air.
When the levee breaks.
They were praising your singing, too.
Oh, yeah.
All right. And then we got Fast Market at around 8:40s where viewers submit their trade ideas. And I'm sure the trades that they wrote up last night, I'm sure they've moved, but it'll still be interesting to see where we are and what we need to adjust. But the bats are going to do some viewer submitted trades. That's at 8:40. Then 9 o'clock for the market measure, all about the VVIX index. So volatility on volatility on volatility, racks on racks on racks. But all just diving into what is VVIX and what does that mean? So
it's a really good one. We're looking. It's kind of like a look at a new way to kind of look at volatility. It's very similar to what we use as like an IV rank and implied volatility, but this is a more I don't know, different way that you can look at volatility.
Okay.
Cool.
And then around 9:20, we got live from the trade desk. Quentin will be in to tell you what are some of the top trending tickers over at Tasty Trade, just giving his insights to things that are going on the brokerage side of the business. And then 9:40, talking with the bats. If you have a question for the bats, drop it in the chat or give us a phone call. It's going to be around that 9:30, 9:40 time frame. So just keep your cool your jets for a second. But the bats would love to hear from you today. If you have questions or kudos, or you just want to know what Nikki puts in his harvest bowl.
Yeah. How do I answer these emails right now? Going like, WTF happened to Nick? I mean, but how do I answer these?
I mean, the gray hair, the it's coming quick.
It is the love of a good woman. That's what happened to him.
There we go. We'll teach you how to answer those questions, Nick.
That is our run of show for today. Yeah.
Cool.
Also, Dr. Jim is going to be in Detroit this weekend. So if you have some time and you are in the mitten, you can go see Dr. Jim in Detroit. Go to tastylive.com/events. His options crash course live. If you, however, cannot make it to Michigan, I believe Dr. Jim over the weekend will be releasing a new video series on YouTube.
Yes. A good one.
Accurate.
Yes. So we try to make and we do all this for free, man. So yes, Dr. Jim starting another options crash course. It'll be the video version. So see, we got you covered either way, whether in person or on the web. But hey, in the meantime, in between time, let's get to some of these headlines that are moving this market. You want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story. Breaking news.
Across
the wire.
This just in.
Top story.
Our
Just in.
Today's headlines.
This just in.
Breaking news.
All right, everybody. Today's a fantastic Friday. It is October the 17th. What? This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Investors keep adding to a mountain of cash in money market funds, but it's not about to flood into riskier assets in the stock and bond markets, despite the Fed recently resuming their interest rate cutting cycle. That's according to the latest research from JP Morgan. Cash in money market funds has risen to a record $7.6 trillion after strong inflows in 2025 and will probably keep rising by year end. They estimate that only about 800 billion of that is susceptible to flight risk, and that's all primarily retail cash. How come retail is the only one that's driving this market? 100 million option contracts, and now we're a flight risk?
Yeah, it's a silly kind of headline. I mean, you can look at it two ways. The other side would be saying, well, they got all this cash on the sidelines waiting for some sort of dip in the market or trying to time the market. You can say the other side would be, hey, we're at all-time highs and they took money off. Maybe that's the prudent thing to do. But really what it really is, nobody knows. I mean, that's
what they're saying, though, is that people aren't just, yes, it is on the sidelines, but they're saying JP Morgan is saying they don't see it going back into the stock.
How did it freak today, though?
Well, they're JP Morgan.
Yeah, right.
Yeah.
Well,
Money supply goes up as everything goes up. So it's not a shock that there's more money in the system now than there was a year ago. Like it's kind of a for lack of better words, like deceiving stat. I mean, there's more money. It's just a fact. Like,
there'd be less if everything went lower too, right?
Yeah. Yes, exactly. If there was less money, there'd be less money held in money markets.
Yeah. Well, JP Morgan on that news is up $1.50. Been going kind of lower to sideways for Ivy ranks only 29 in JP Morgan, and it has earnings not until after December. So good trade in there if you're looking to do something.
E-mini's unchanged.
Unbelievable.
Bonkers headlines coming out last night, which I think is what kind of tanked the market, and that's shares of regional banks and the investment bank Jefferies tumbled as fears mounted around some bad loans lurking on Wall Street. Zion's Bank Corporation dropped more than 13%, while Western Alliance Bancorp dropped around 10%. KRE lost more than 6%, just because everyone was freaking out. Jamie Dimon boss said that the regional banks were like cockroaches, and just because you see one, that doesn't mean that there aren't hundreds more. It's like, oh my God, that's so creepy. But the bankruptcies of two auto industry related companies this year have raised concerns about regional banks' loose lending practices. Let's take a look at these smaller regional banks.
Yeah, KRE really did take a big wallop, went down from around 60 and change down to just under 50, just about under 58, just about 58 and a half or something like that. It's where it's sitting right now. It's actually up $1.50 to 59 and change. Of course, if I was the biggest bank in the world, one of them at least, I would say that these are all cockroaches too. I mean, yeah. And I'm saying a lot of people say you got a Trump tweet last night about the tariffs on China won't stand. So.
I think Basent did come out last night and then say he was like, it's like, LOL, JK.
Gotcha.
Yeah. Taco Friday. Yeah.
What a time to be alive. Super fun for everyone involved. Hey, in other news, the SEC says, hold up there, whippersnappers, pump the brakes. The SEC now came out yesterday and saying that it is now unclear if all of these 3x and 5x leveraged ETFs would be approved. I did not actually know this, but it's unclear if these ETFs would comply with derivatives rule 18F-4, which generally limits leverage to 2x. I did not know that there was a rule in place. I just thought that was interesting.
I haven't heard anything about how they're going to clear these too, like at expiration. Like how are they going to? I mean, are they going to be cash settled? I mean, I don't know. So I think there's a lot left for them.
Well, they changed the rule after XIV. So when we had Volmageddon in 2017 or 2018, because we had all those short vol funds that were like 3, 4, 5x. They were crazy, and they went to zero overnight. And so I I believe that's when it was changed. I think
Okay.
when it was changed. But yeah, I mean, these things, they have that risk.
But these funds, they were so confident. Like, I just thought this was a done deal. They're like, oh, yeah, no, ain't no thing, baby girl. They're like, yeah, you could do this. And I was like, oh, okay.
That's, yeah. When you open up the people in control right now of all these things are a little looser, which is good generally. But, with that, you get the tail actors where you get people that take it a little too far. When you open the levies,
Well, it'll be interesting to see, like you said, in this regulatory climate. But this seems like some pretty firm pushback by the SEC. I would point out, though, because we are in a government shutdown, the SEC is not SECing. So they aren't actually able to review things or approve or deny things right now. But they did put out this statement yesterday. So just putting that out there because they're a federal agency. So. The government is
Glad they were able to get to their teleprompter to put this out. That was really
Hey, bad news if you're hunting for deals online. Online prices rose year over year in September for the first time in about 2 years. The company analyzed price changes for around 60,000 products. Tariffs and businesses' rising costs are likely contributing to inflation in the e-commerce system. So people that are scouring for deals online found that those prices for items in their cart were higher. Again, that's probably for the first time in around 2 years. Do with that what you will, but that sucks. I love a deal.
everybody loves a deal. I find out that like if Instagram sends me something, if I Google search for it, I could find it cheaper somewhere else. They always seem to be like some sort of drop shop. I'm like, they nail me with that. So do your homework.
Just be careful. Be careful out there, kids.
Yep.
Hey, in other news, Bitcoin continues to sink with safe haven bets clearly favoring gold. After a crypto washout, Bitcoin has had a rocky first half of October. With the world's largest cryptocurrency did surge to start the month, and then it's just plunged, got as low as 104. Meanwhile, gold looking like a rock star, continuing to hit new highs. How do you play this gold Bitcoin differential?
Bitcoin's sick. It's had about 10 straight down days after making those new highs at 125,000. It got down to, like you mentioned, just under 104, 103.7. It's about 105.7 right now. It has not had any kind of rally with the market rallying or any other asset currency rallying. Nick, you really should have sold those gold futures. They're down by about 18 handles from where you want them.
You stink. It's because you're just you're neutered.
From where you wanted to sell them.
Thought when I took this over that you'd get those cojones back, but it's going to take a little more time, I guess.
They're up $5 right now, but a huge move in gold, up to just about 4,400, down to around 4,300. It's sitting right there, 4,309.
What do you think is rocking the foundational belief in Bitcoin right now?
I don't think anything's rocking it. This is the product. I mean, it has. It had too low of a volatility. It had a very high volatility in years past. Now volatility's come back to it. I think this is probably a typical move and a needed move in this, but it hasn't had an uptick. You are right. I mean, it's definitely seems like risk off in Bitcoin for sure.
I mean, but we made all those Uptober shirts.
I know. Doesn't that always stink? That's always.
We still got time though, as Ryan said. It's a discount. It's a discount.
All right. Hey, in other news, this is so funny. You talk about, you guys, you've been trading for, over 40 years. I'm sure a time or two you fat fingered a trade, typed in something that you didn't mean to, or, bought something when you wanted to sell it or sold something.
I did it yesterday. I I did it yesterday. It happens all the time.
It happens all the time, but this has got to be one of the greatest fat fingers of all fat fingers. PayPal's crypto partner accidentally minted $300 trillion worth of stable coins in a technical error. Paxos mistakenly minted the coins as part of an internal transfer before it immediately identified the error. They're like, holy that's a lot of zeros. Then they burned the excess PYUSD, the company said in a social media statement. How do you accidentally mint 300? That's more than all of the money like in the galaxy. Like,
yeah, that's a hard one on me. I don't know how this is done and how you reverse it either. But I got to ask you, Nick, because you know a little bit more about the stable coins than I do. If they're looking at all these stable coins, they have to be kind of backed by something. They're backed by dollars. Wouldn't that kind of prop up the dollar a little bit?
This event?
Not this event. I'm talking about just in general. If we're going to mint all these stable coins, they're backed by something, backed by dollars. Doesn't that kind of put a demand on the dollar at least?
Yeah, I mean, in some way, it's not going to directly prop up the dollar though, because there's no spread here.
It's minted at that time of the coin, you mean?
Yeah, like it's not adding or taking away from dollars. It just is dollars.
Mm-hmm.
Yeah,
Like,
and
so
there's not enough dollars in global circulation to back 300 trillion.
Well, that, yes. This event is, not a thing. I mean, like it's reversed. It's over. It's done.
What is Coinbase doing this morning, or something like Circle, which is a stable coin that is backed by something?
Coinbase is looks like it's down around $6, what you would expect with the weakness in Bitcoin. CRCL is down also about $1 or so. It's been going exactly sideways. I mean, this is the same price or a little bit higher than where it was in the beginning of September. So it's stable. CRCL has been pretty lackluster. Ivy rank of 40 is pretty good in there. It has earnings on November 12th, but markets are quite wide, even though that there's some open interest, like thousands on some lines. Markets are quite wide. If you're going to do something in there, it's probably going to be with defined risk. At least if I was, that's what I would look to do.
An interesting filing could provide some insight into what the world's most popular YouTuber has planned next. Jimmy Donaldson, aka Mr. Beast, has filed trademark filings that he wants to launch Beast Financial. So he could be working on a financial services app. Is the biggest YouTuber diversifying? He could be getting into banking and crypto. Maybe he would make you spend 100 days locked in a windowless room, but then you get relief on your student loans.
I think a lot of people would do that. That's good.
Oh my goodness gracious. But he wants to launch Mr. Beast Financial. I'm not sure. But everyone wants a banking charter. What are your thoughts on this crossover between popular culture and fintech?
Trying to get legitimate here, I think, is what he's looking to do. He's going to find out that the regulatory body here is quite powerful. Going to be quite a hurdle to get this done.
Yeah.
I think it happens.
Yeah, I don't know. I mean, that guess, Vanetta, I think is about as good of a guess as you can have as to why he would want to do this. Like, yeah. I don't know why a rich guy like him would want to charter a bank. Like, what's the upside here for him?
Sure.
Other than doing
laundering money?
Yeah, that. Yes.
I don't know, but what a time to be alive. We will see what happens with that. Hey, ding, ding, ding everywhere. Getting to some tech stocks here. Oracle moving around pre-market, and that's because they expect cloud sales of $166 billion by your favorite date, Nikki, 2030. As business expands, Oracle said Thursday they expect cloud infrastructure revenue to continue to grow, and it would make up nearly 75% of their total sales by then.
What do you think of that?
It should be capped at like a 2-year out in time.
Yeah,
and there should be like some penalty for being off by a certain amount.
Certain percentage, right? Like 50% or something like that. You should get your hand slapped. You'd have to go down to 1 year.
Yeah. Or
Right.
some sort of, I mean, it's just the number.
I plan to fit into a bikini by 2030.
Yeah. I
With
mean,
revisions. With revisions.
Yeah.
Oracle down around $6 or $7 to 306. Oracle had been going sideways, trying to mount itself a little rally the last couple of days. Oracle was up pretty good yesterday. It's down this morning pretty good by about $7.
New York State has approved a power line for Micron's $100 billion semiconductor plant. Yeah, that's normal money. A new underground transmission line was approved by the New York State Public Service Commission, so the project can go ahead. We haven't talked about Micron in a while, but they're getting a $100 billion facility. That seems like a lot.
We haven't talked about Micron because it's been ripping people's faces off. New highs yesterday. It's down about $2, but it's again $2 off of its highs. Just about a month ago, this stock was hanging out at around $120. It's $200 right now.
Gotta buy those dips.
Got to buy those chips, is what you wanted to say.
Nikki, what are
True.
you doing in Micron or any of the chippies this morning?
We've been trading these with upside call ratio spreads because the upside vol just explodes in these stocks when they go higher. And we had a big move yesterday that was like a $10, $15 move to the upside. And I put the call ratio on. So it's a Johnny way to be short because you have a lot of extra protection to the upside, but it's really a short vol play on the upside call volatility that they seem to have every time these sort of events happen.
Yep.
In e-commerce, Alibaba says they are already making back what they have spent on AI. That's pretty impressive.
Yeah, and I don't know how they did it, but or allegedly did it, but
Yeah, that's the big word.
Baba's
Allegedly,
down,
yeah.
allegedly down $1.50, $2. Been going sideways the last week, sitting here at 164. So place your bets. Good IV rank of 48 here. Earnings not until November 21st. So Bobby is definitely something that you could look to trade if you do. I know I think you have a strangle on in Baba, pretty delta neutral, 145, 200.
Yep. Hasn't really moved.
Mm-hmm.
I mean, we put it on yesterday, so you can't expect it to move all that much.
Yep.
Cybersecurity firm F5, that's FFIV, sank 10% yesterday after disclosing a nation-state hack. Oopsies. The cybersecurity company said that they were disclosing a system breach by a highly sophisticated nation-state threat actor. The attack prompted an emergency directive from CISA, which again, the government's closed, but still they're like, yeah, we should probably do something about this. The breach was later attributed to state-backed hackers from China. FFIV down still around, I don't know, $3, $3.30 this morning.
That doesn't, like you said, but that doesn't tell the whole story. I mean, this was a $20 stock 24 hours ago. It was a $350 stock 48 hours ago. It's under 300, 292, down around $3, as you mentioned. I think liquidity is what saved a lot of people here. The markets in FFIV are quite wide, a couple of dollars wide. No weekly options. If you take a look at stocks that don't have weekly options, that's another indication that maybe it's not the right option market for you. I mean, if you want to do something with stock, obviously play at your own will. But on the option side, that kind of makes it a little bit less liquid.
Okay.
Yeah.
Good to know.
Yeah.
In other news, Snowflake is partnering with Palantir. Does that just give them both a license to print money? Snowflake shares did inch higher yesterday after the cloud company revealed a strategic partnership with Palantir. Snowflake is integrating their data cloud with Palantir's Foundry and AI platform. If that means something to you, great. Snow and PLTR.
Yeah, Snow is down around $3. What's up? Even though the E-mini S&Ps just turned green by $1.25. Palantir is down by about $1. Palantir and Snow really haven't gone anywhere. They've been going sideways, kind of like the market the last week or so. Some downside movement, some upside movement, really not going anywhere. A skosh off of their highs. Good IV rank in both 40s and 50s.
Yeah, we have an iron condor in Snow. which hasn't moved all that much. Vol's been pretty sticky there. Palantir, I think we put on an iron condor as well yesterday. Yeah, we did a big wide one in November, 220 and 150 for the shorts, and then we went $30 wide, make it like a synthetic strangle type position. You've had a pop and vol across the board, so just looking at new positions.
Mm-hmm.
Meta Platforms, an alternative asset manager, Blue Owl Capital, are going to split ownership of a Hyperion data center in Louisiana. They're getting $30 billion to finance the package for the site. I know, Nikki, you scoffed at them building just a $1.5 billion data center in Texas. Well, I got something for you today. You told me to bring it. So now $30 billion going to the Louisiana.
This, you wonder why the money market funds are bigger. I mean, these numbers, come on, you get 30 billion. When did we have a headline that was 30 billion pre-COVID?
Right?
Yeah, that's a good one.
I mean, that's what I'm saying is like, there's just so much liquidity out there. It's amazing. But this is more in line with the numbers that I would expect from Meta. Like, I'm glad Zuck opened the wallet up.
Yeah, at least he came to play. All right.
I mean, 1 billion. It's like, come on, that doesn't even move the needle.
Right. He probably got called out by the wife or something like that. It says, shoot, Johnny. Meta trading 7.10 down about $2.
Okay, there you go.
Haven't found a stock that's higher yet that you've mentioned so far.
It's all the junk.
Yeah.
It's all the ACLOs and the INQs, all that stuff.
Oh, that's true.
You mean the new rotation?
The new rotation. I needed one more day. I'm gonna get it today too, because Vol's gonna come in and they're gonna sell that crap.
Nice. I like your confidence.
I want that for you.
We had that yesterday.
Yes, you did. Yes, you did.
A company called Beta Technologies is filed for an IPO, and it could value the electric air taxi maker at $7.2 billion. They joined the likes of Joby and Archer. They priced their shares between $27 and $33. The deal would raise as much as $825 million and value the air taxi company at $7.2 billion. This seems to be the next hottest trend.
Yeah, I don't see this taking off. No pun intended.
Ooh, there he goes.
Bump.
I'm not sure what Joby is doing. Joby. You ain't got no alibi.
They've been moving higher with the rest of the new age stocks, quantum, nuclear, flying cars. That's kind of the soup du jour this week, and for the last couple weeks, Rocket Labs, a couple names in there. So. They gave it up a little bit yesterday. We'll see what happens today. But Joby basically unchanged here. Archer basically unchanged as well from yesterday's sell-off.
You asked. Oh, go ahead.
I was going to say I was a big fan of the Jetsons when I was a kid, watching the cartoon The Jetsons, where they flew around everywhere they went. Sure. It was based in the future, and I figured in about 10 or 15 years when I was watching that cartoon, we'd be flying around basically.
I mean, it's 2025. It was always like 2025 in the cartoons.
Yeah.
And
here we are. So maybe it's not the Simpsons, it's the Jetsons that we have to go back to see what's going to happen in the future. So
maybe you asked me for a green stock. This is very just minutely in the green, and that's Uber this morning. Uber says drivers and couriers in the U.S. can make money through the app even when they're not on the road. Uber says drivers could help by uploading photos to help train Uber's AI models. Oh, no. And it would offer a way for drivers to supplement their income. I don't know how I feel about this.
Don't do it. Soylent Green is people. They're trying to get you to map out your whole route so they can replace you.
Yeah, basically. You're right.
Yeah. I'm sure they have that data already. I mean, everything.
They need more.
Yeah.
Maybe they need more is right, but don't do it. Don't do it.
What is Uber stock doing?
You're right. It's basically unchanged. I'll give you the uptick if it trades on the offer by about a dime.
Yeah.
There we go.
Hey, something that is cool and that I know, Bat, you are a fan of, is that's Waymo announced they are going to start driving for DoorDash in Phoenix. That's pretty cool. So you could have a driverless delivery. So instead of just those little robots, it's a Waymo, but there's no one in the car except for your Chipotle order or your Harvest Bowl is in a Waymo.
Yeah, I don't know how I feel about this. I'm kind of torn. I don't like DoorDash. I don't like using it. I think you complain about food prices, yet you won't go outside and get your own food. Makes it kind of.
I do what I want. It's my money, Bat.
Right. Then don't complain about the food prices. I don't know. I don't know how I feel about this. I'm torn. I think I still get up off the couch, get my own food. I think you should too.
Nikki, how about you?
I don't
the place too, and call up the place. Talk to the owner. Say, hey.
That doesn't exist, Boomer. Okay, that doesn't exist anymore. You can't call. You can probably do that at Little Red Hen. You can't.
And some of the places on DoorDash are ghost kitchens, like they're not actual restaurants anyway.
I don't do DoorDash either. I don't even have a.
I'm
an
Uber Eats girly.
I do it every once in a while, but I agree with you, Dad. If you're gonna eat, you go out and you pick it up, and it's faster, and you get it hotter, and when it's like ready.
Sometimes you don't want to put a bra on. Leave me alone.
Free the knit. Do your thing, Vanetta. Come on.
Well, we go commando. We don't care.
Yeah, I don't put boxers on.
All right. Hey, it's gray sweatpants season.
There you go.
EA Sports, I put this in for you, Nikki. The latest Battlefield 6 has sold over 7 million copies during the opening 3 days. EA's the sales have hit an all-time high for the franchise sales during the first 3 days of the launch. EA is betting on the latest Battlefield title to restore the franchise's reputation and to loosen the chokehold that Call of Duty, which is published by Microsoft-owned Activision Blizzard, has on the first-person shooter genre.
I have been playing. It's nice.
We have our own Battlefield 6 expert in the room.
No, not an expert at all. I've played about 2 hours, maybe.
Well, you should be ready for a YouTube channel.
Are you on Twitch? Are you on Twitch now? What's your Discord?
You got to kind of, listen, it's crowded with the experts who know everything already. You can go on there and you can experience what you're finding.
What I've found is that I am not nearly as fast on the reflexes as I once was. So there is, it's not as enjoyable when you're just kind of mid. Like I feel that pain. Now
you know how I felt. Now you know how I felt when you would show me these games when you were younger, and you say, "Hey, you just do this and this and this," and I would say, "I can't look at it in this mode." Like you would be looking at it like through a shooter's mode. I gotta stand back and see the whole screen kind of thing.
Yeah,
it's disorienting.
It is definitely disorienting. It definitely gets you dizzy.
Can you do anything in EA stock?
Well, every time you mention this,
they had I think it's still on the table of the buyout because they had that deal. I don't know.
Yeah, they're going to go private from a Saudi corporation for like $50 billion.
Yes. So it's sitting here at 200.
Yeah.
This is a dead play. It's sitting right at 200. It's been sitting there for the last month and a half or so. It looks like the deal is going to go through. I mean, this is a take a shot if you wanted to buy a call or a put, but this is not a trading vehicle at all.
Finally today.
Sorry, and the open interests are very small.
Finally today for my last story, congratulations, a Hoosier through and through. Coach Kurt just signed an 8-year, $92.8 million deal. He says, "Get off of me. I'm going to retire a Hoosier." Look, if you told little baby Vanetta when her freshman year, our football team was so bad, they literally gave us season tickets for free. And if you told that little sweet baby Vanetta that in a few years' time, that then one of the top highest paid coaches in college football would be the Indiana coach, I would say, what are you smoking? And can I have some? But congratulations. I love this guy so much. So he's just behind Coach Kirby Smart at Georgia, who's making the most. Ryan Day at Ohio State pulls in number 2. And then Kirk Cignetti right there at number 3. Lincoln Riley from USC and Dabo Sweeney at Clemson round out the top 5.
Buy low, sell high.
I read that as Rigetti, and it made me mad because I have
Cignetti, Rigetti. Finally today for my viral video of the day, I like to pull cool recipes that I see, and then I would like to do a little thing I like to call Trader Taste Test to see if you guys want some of this. It's going to be kind of cold and rainy this weekend, but some games will be on. Spend time with your family. See if maybe you would make this a Reuben melt dip. Ooh.
Sounds like it's got my name on it already. But
Look at this. This looks pretty good. Roll that.
Appetizer will be your go-to from football season through the holidays. It's called Reuben Melt Dip. It's 5 ingredients and a huge crowd pleaser. In a bowl, combine a can of sauerkraut, chopped corned beef, shredded cheddar, and Swiss cheese with some mayo. Mix well, add to a casserole, and bake until bubbly. I like to serve this with crusty French bread. You can check out the full recipe in my caption. This appetizer will be your go-to from football season through the holidays. It's called Reuben Melt Dip. It's 5 ingredients and a huge crowd pleaser.
I mean,
in a
that's
bowl,
pretty
combine a
good,
can
right?
of sauerkraut, chopped corned beef, shredded
Who
cheddar,
would say
Swiss
no to
cheese
that?
with some mayo. Mix well, add to a casserole, and bake until bubbly. I like to serve this with crusty French bread. You can check out the full recipe in my caption.
All right, thanks.
Is she like from Wisconsin though, or something like that? Where is she from? Do you know? Because
I don't know. It just popped up.
that's yelling Swiss to me. Like that's saying you gotta have Swiss. I mean, how do you put cheddar?
That could be. Did she say cheddar? I didn't hear that. Or did you? Are you just assuming it? Because it looks like it could be a Swiss.
Cheddar. It looks white.
It's cheddar. Yeah, it's cheddar, but also Swiss. So it's in her recipe here in the caption.
Okay.
It's 8 ounces of cheddar and also 8 ounces of Swiss. So
Okay.
Yeah.
That feels better.
Yeah, I got to question her cheddar choice there.
Thank you, Laura. Yes.
The Swiss doesn't melt like cheddar melts. You know, cheddar gets that like kind of like more liquidy melt, I feel like. No.
How about this?
I like the combination. You gonna make this for me? I'll bring the harvest bowl. You make this. Perfect.
That's where I was going. You bring the harvest
We'll
bowl.
sit in the sauna together. It'll be beautiful.
And I'll let you sit outside in the rain. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next?
Got confirm and send.
Yes, we'll be back in 90 seconds. Viewer emails.
New from Tasty Trade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new Tasty Trade account. The Money Match event starts now, exclusive to new Tasty Trade customers.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University, number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Nicky, we are back, son. You know what that means. Time for a little bit of confirm and send. But before we do, let's take a quick look at the market. I'm going to go to gold real quick because it's back at your number 43.28 where you wanted to sell them a moment ago. Now it's your trade, son, as opposed to my trade. Silver is down big. That's a 2% move in silver. Down.
There it is, Johnny.
You're so easily manipulated. Oh,
there it is, Johnny.
No wonder you made a harvest bowl.
God.
Unbelievable.
Be a man. My God.
Unbelievable.
It's a micro. It's a little nothing.
Yeah, it's like 100 shares of stock. You are right. You just sold micro at 660 here. You're up $1.60 already. You're brilliant.
Should I take it, Johnny?
Silver down $1.20. Let's see if gold follows it. Kind of actually like the call that you're making here. Platinum is also down. I'm just mentioning it because it's a metal. We don't really trade platinum. Too big of a product. Nat gas is under 3. Got down under 290. It's 294 and change, basically unchanged, up small. Even the S&Ps. Let's get to the market. You'll see here a full $100 move in the futures last night, down to 65 and change, 65.71 here, back to basically unchanged, down 850. They were just green a moment ago. All night last night, they were down around 25 handles before I went to bed, and then promptly sold off. NASDAQ did the same thing. NASDAQ down 82 right now, down about a third of a percentage point. I guess that's the biggest mover, but it pales in comparison to the the $400 move, $450 move that it had last night. Russell down 5 and change, and the Dow up 22 after having about a $600 move overnight last night. Volatility in by 50 cents. If you told me volatility was going to be in this morning, I would say absolutely not. But it still is elevated at just under 22. If you remember yesterday, that was the high end of the range. Going into a Friday weekend with the amount of volatility we had, I don't think you're going to see volatility contract too much more than this. If you do, then you definitely have some legs to the rally, because obviously if the volatility is going lower, the market would be going higher. Volatility is high across the board in a lot of products. You could even be looking at your ETFs now. SPY, you remember, was hanging out in the teens, low 20s of IV rank. You now got an IV rank that's approaching 40. So any of these, I think IWM is the least, 33, yes. And then you got the Qs, which are 39. So Qs, S&Ps, IWM in that order all have decent and good volatility. Bonds been going higher. You can see they're at the higher end of the range, but they are down 7, 118.20. Bonds last night got up to 119.11, down to 118.14, about 5 ticks off of its lows right now. Bitcoin we talked about really early on the show, and for good reason. You look here, you got 4, 7, 9 down days in a row for Bitcoin, down almost $3,000 to 105.5, got under 104, flirted with going over 110, but didn't get there. 109.4 is the high. It's about $1,000-ish, $1,500 off of its lows. Ethereum doing the same, down about 3%, a little bit more than Bitcoin. Oil really not going anywhere, son. Kind of makes a low, bounces off of it, and then goes lower the next day. It is up 24 cents. Good IV rank of 32 in there. That's all I got for right now, my friend.
Cool.
Confirm and send.
Let's do it.
Friday, October 17th.
Flying by.
It is flying by. What are you going to be for Halloween? I mean, now that
I'm going to be on a flight to San Diego.
Oh, that's right.
I know. I'm missing it.
Oh,
sad. It's sad. Should I whip out the Tom wig early?
She'll be a socket without a plug. How sad.
Oh no.
Sad. In markets with strong call skew, how do you choose strike prices for hedging strategies?
So I think just for the strategies that I've been using, like these call ratio spreads or these 1/3 type trades, or crab trades are another way to kind of do this. But really, I'm just trying to reduce a lot of the cost of that long option that's closer at the money by selling as much tail volatility as possible. You're looking to do these trades as not a short position, but more of just a short vol position. You're playing for kind of a sideways move, sideways down, sideways up, but a little bit of a vol contraction is really what you're playing for. So that's how I look to trade these. I mean, if you're trying to get short on any of these, just selling the calls, these tail calls will do that. But I think it's a cheaper trade to do something like a put diagonal spread or something along those lines versus just selling the calls.
Sure. I mean, if you're looking to put on a trade that has call skew, the mechanics don't really change that much. You're somewhere between the 30 and 15 delta with your trade, right? I mean, maybe the longs at 30, the shorts at 15, maybe longs at 25, the shorts at 10, somewhere in that range. You want your sweet spot to be somewhere around that 20-ish delta option. So that's how I look at them. And then I try to go as wide as possible. When you have call skew, you'll notice that on the call side, and I'm just going to make this up, you're able to go $20 wide and still collect a small credit. If you look at the put side and you go $20 wide, you'll be paying a debit. That's the advantage of having call skew. You're able to catch a credit and go wider, or go tighter. In my example, go $10 wide on the call side and collect a couple of dollars in credit. While the put side, equal distance away, equal distance of $10, you'd probably be getting a minuscule credit or small debit. That's the advantage of call skew products. Next question, please.
Do I take $100 on this gold?
I would. I mean, that's what this market is right now.
It's wonderful.
This is a volatile market. This is a trader's market, and that's what you should be doing. So good scout by you.
You got to think at some point you're going to have a 100-point, 200-point candle here in gold.
Sure.
I mean, and we're getting to that point. You're kind of getting the Bitcoin, is dead. Gold, everybody's now talking about gold, has not mentioned gold for 5 years, and is now everybody's a gold and mining expert.
We're actually starting a gold fund.
Yeah, there you go. We're talking about palladium and platinum and copper. Yeah. I mean, rare earth,
lead, zinc. I'm going to go to the people's metal.
Did you even know what a rare earth was prior to
no, I thought the earth was rare. There's only one of them. I mean, how much more rare could it be?
I agree with you. I think it's getting to that point where you got to
and the experts, the amount of gold experts and rare earth metal experts and everybody else. It's amazing how much.
Yes. In markets. Oh yeah, we just did this one. Let's go to the next slide here. What are the pros and cons of buying synthetic longs using short puts and long calls versus outright stock ownership?
It really buying power. That's the key. It's about 10 times as capital sensitive, 10 times better for you than using stock. So for argument's sakes, and I'll just use round numbers, just go big. If it's $50,000 to buy the stock, it would be $5,000 approximately, to do the call, do the risk reversal here, selling the put and buying the call. That's really what it comes down to. It's a 50-50 shot. The disadvantage would be that you don't get the dividend if it pays a dividend, but that's built in to the price that you paid. If it does pay a dividend, it'll be a little bit less or higher. So really, I think if you were really being strategic with your money and you just wanted to be outright, long or short, because you could do it the opposite way too, right? Sell, call, buy, put. You can make you short. You put the rest of the money in some sort of guaranteed interest-bearing thing like a BIL or something else like that. That would be the way to maximize your return, in my opinion, if you're looking to use synthetics.
Yeah, I agree. I was going to say
you could create a synthetic covered call too, which would really optimize your buying power. Again, capping your upside is just like any other covered call, but you sell a put at the money, buy a call at the money, or even just in the same strike. And then you go out and you sell that 30-ish delta call. You basically have a covered call at the 30 delta strike. I talk about another synthetic. You could just sell a put at the 30 delta strike. You have a covered call also.
Yeah,
same thing
in the money put as a covered call.
Yeah. A strategic play by any other name is still the same, but really you're using less buying power. That's the key.
I think the only con would be if you are looking to hold this for some sort of duration, like 5 years or something like that. I would rather just buy the shares.
Time out for a minute. I'm going to call you out here for a moment. So you don't like them making calls and projections on where a stock is going to be in 2 years, but it's okay when
No. I don't like projecting out revenues 5 years in advance. You could make your own assumption on a stock being higher 5 years from now. That's fine. That's fine. That is totally fine.
I'll give you that.
I don't like when they say, we project 100, 5x our current revenue in 5 years, and it's just an ad hoc, assumption. Okay. I don't think that's, that's good.
All right, I'll give it to you. I'll let you have it.
Thank you.
You're welcome.
Next one, please. How do you defend inverted strangles when the underlying moves against you?
So let's say this has moved very quickly, because I've always said from the very beginning, going inverted is not only difficult for the public to understand, it uses a lot more buying power. If you're $10 inverted, it uses $1,000 more buying power than a regular strangle. If you're $20 inverted, it uses $2,000 more buying power than a strangle. Why? Because inside that inversion, you can lose double the money. That's why it's using more buying power. You can lose that. If you're $10 inverted, you can lose $5 more, $1,000 more on that strangle. So for me, if your stock moves very quickly, you did an earnings play or something like that, you're rolling down the untested side or rolling up the untested side, the stock is going higher, and you go inverted, I'm cool with that. But sometime during the day, I would be looking, because you want to defend the deltas. It's all about deltas. You want to go in and buy that inverted strangle and go back out to a regular strangle. Uses less buying power. Remember, you're going to do that for a debit, and we love to do everything for a credit. So you are closing a meteor strangle and selling another strangle. You are left with theta decay, the same type of strategy you had when you first put it on. So the way I defend it in something like this is looking to get out of it by putting on another strangle, or if the stock has moved too far in one direction, doing some sort of directional trade. Maybe it's just a naked put or a naked call or a call spread or a put spread in there, as opposed to doing both sides.
Yeah, ultimately the mechanics don't change. I mean, we are looking to reduce delta by 25 to 50%. At a certain point, if a stock goes too far against you, you have to roll inverted and be inverted on that position. And the mechanics don't change. Like my dad said, if you don't like having the inverted strikes, you can buy in that intrinsic value and roll to an out of the money strangle, or put your short strike closer. If you're inverted to the upside, put your call right at the money and sell a 20 delta put against it. It allows you to keep the directional assumption.
Sure. Again, it's all about doing something. You can't.
Yes.
You have, in my opinion, you have to do something.
Agreed. Next one, please.
How do you defend inverted? Oh, we did this one.
We did this one. Yeah.
When is it better to roll the untested side of a short strangle versus recentering the entire position? You can see here we're getting a little bit of, we've had a exponential move relative to where the market has been behaving. So you can see we're getting a lot of questions on strangles and strangle issues. It makes sense. Go ahead. I'm sorry.
Yeah, no, I think, I tend to recenter when I roll out in time. If I'm still in that front cycle, the first part of the trade, I prefer to be a straddle or inverted, taking a little bit of directional exposure in the shorter term versus when I roll out in time, I like to adjust the strikes and get a little more neutral because that time value gives you more extrinsic value. So that's how I approach it. Again, if you don't like being directional in whatever that stock is at whatever the stock price is, then, you got to make the adjustment that fits your own assumption.
Yeah, it does go down to fitting your own assumption, but whatever your assumption is, make sure you reduce the delta. You talked about it on the last confirm and send. Make sure it's not like, you started out with 10 long deltas and the stock has moved against you. You have 50 long deltas. Obviously, you were comfortable with 10-ish deltas, and now you have 5 times as much. You have 50. Go back down to 20-ish deltas. Like, do something.
Yeah.
You can still keep your a little bit more of a bias, but do something. I think you'll find it really fixes or helps your P&L curve of your overall portfolio. Hey, listen, we're right on time here. Let's take a quick 90-second break. I know Jamal's got a lot to talk about this week in stocks. We'll be back in 90 seconds as Tasty Live. Even the S&P's down 4, NASDAQ down 70, Russell down 5, and the Dow up 58. Volatility in by 50 cents. We'll be back in 90 seconds.
Trading is hard enough. Here's what liquidity is. You want to be like water. Liquidity is in reference to how easily you can get in and out of a position, from volume to open interest to actual price at which you can buy or sell your position. It's important for all traders, from stock traders to futures traders to options traders or even crypto. Tight bid-ask spreads and high volume are characteristics of good liquidity.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Nicky, we are back, and we're joined by my friend Jamal here this week in stocks. How are you, Jamal?
Great, gentlemen. How you doing on this Friday morning?
Doing well. Middle of the month. Market's at the middle of its most recent range, maybe a little bit on the lower side. We'll see what's going on here. It's going to be a exciting Friday, I believe, not a boring one.
No, I don't think so. What's in my head is just going back to when we did last call the other day, and I think you said at the time there was like 84 points for the rest of the week, and
yeah,
I think we caught it.
And some. I think we
caught it last night.
Right, we
had that full range last night.
Yeah, yeah. So, it's not a boring market anymore at all, fellas.
No.
And, As much as I want to bullshit with you, let's pull up some slides because actually the market's
Yeah.
more interesting than anything right about now. It really is.
Cool.
It's fascinating, and there's no shortage of trades. I mean, there's so many different ways to trade this market right now, and I think that's been one of the kind of hallmarks for me. Like over the last 10 days or so. I mean, when I look across the book, I got like all kind of trades on. I got strangles on. I got diagonals on. I got calendars on. I got short puts on. Just a plethora of different kind of trades.
Yeah, definitely opens up the strategy book for you for sure. Like you definitely go to different strategies than before.
Yeah, for sure. Let's pull up the slides.
Cool.
Let's do it.
I mean, it's probably as good a time to mention as any that Options Trading Concepts Live will be going to the floor Thursdays starting next month. Tom, is there anybody on the floor you want me to say hi to? Is there anybody?
Doug will be standing to your right, I believe, when you're down there. You can say hello to Doug, ALO, old friend of mine.
Yeah, ALO, yeah. Oh, the tall dude. Yeah.
Tall guy,
right? I couldn't remember his name. Yeah, that's right.
Yeah, he's an old timer.
I'm shocked that you know his name. You must really be friends with him. That's usually not how it works.
We've known each other for a long time. We used to go after the same type of talent, so we would have to compete.
I love it. See that? I mean, you guys look like you could be brothers a little bit.
Yeah, I mean, like not really adversaries, but brothers in arms kind of thing.
Yeah, for sure.
Amazing.
Yeah.
I'm just upset that I leave and you take my work wife on vacation once a week. It gets me.
I'm spoiling her early.
I'm the Gumata now. It's really sad. It's really sad. Oh.
I mean, maybe you can come on vacation every now and again.
I want to get
work wife can't come.
Yeah,
for sure. Let's move to the first slide. Cracks in the levee. I mean, it feels like a little bit. You know what? Regardless of what you think, all four major indices are still positive on the week. And of course, because we had a huge move to start the week, but you can feel the trade war tension starting to build up here in in these markets. As a matter of fact, I just saw something on Twitter a bit ago that said the World Trade Organization is worried about escalation in this thing. And again, this is the two largest economies, and it's starting to show a little bit. OpenAI partnered with Broadcom to design some custom 10 gigawatt AI chips. The stock took off this week. It's another partnership with OpenAI. Big banks surpassed the Q3 earnings. Most of them did pretty well. We did see some pullback in some of them. I feel like JP Morgan and Goldman that come to mind on their earnings day, they actually had a bigger drop, but eventually erased that drop throughout the day. Some of that might have been their stock. Some of that might have been the trading day, I think, too. Crude oil, look, it's sitting at under 57 and near the lows on the year. There's really not much demand. Thomas did a really good piece this week on OTCL talking about the difference between a lot of the different months of oil, the ones stacked next to each other, right? SEP in August for next year and August and July for next year. And most of them are in Contango, showing you there's kind of lack of demand. And honestly, I mean, on the geopolitical front, there's really not many risks right now. And that's good, by the way. But at the same time, we all know that usually is something that props oil up. 1 week after touching all-time highs in Bitcoin, it's back to about 3-month lows right now and looking kind of weak. I'm sure a lot of people have been picking up long deltas there. I've kind of been waiting a little bit, but could dip the toe in maybe today. It's just a matter of how things go. And look, the truth is that Bitcoin's been tied to the it's basically been pretty correlated to the S&P 500, the Nasdaq, whichever one you want to look at for a while now. So this is actually not that much of a surprise. And then VIX is positive for the third consecutive week. I'm not sure if it's 24, but that's basically 1.5% daily moves are. It was yesterday at the close, and VVIX is at a close at a 6-month high of 133. What do you think of all that?
Yeah, we're going to do a piece on VVIX at 9 o'clock, I believe. That's going to go over that, so I'll save that for then. But you are right. I mean, obviously you're right. You're recapping last week here. Volatility is here, and it usually is mean reverting, but I think it's here to stay for a while. I don't think we're going to see those lows that we saw for quite some time. Trump's back tweeting. I'm surprised it took so long, and now you've got yourself a trader's market as opposed to just the geniuses going in one direction all day long. So we'll see what goes on. Bitcoin's sick. It looks sick to me, like it can't catch itself a bid. Usually with that type of volatility, you catch a little bit more of a bid. I fear that it's going to move one day, $5,000 in one direction. Could be the downside even overnight, kind of like the overnight action that we've had so far now. I think that'll be the telling moment.
Yeah, it's down 3,500 right now. I mean, that's enough. That's 5. That's right there. I think your first point is a good one of just like all 4 major indices are still green on the week.
Yeah.
So if this week had too big of a P&L swing for you, you might be a little bit too big with your positions, and you might have to roll some stuff, reduce some size. I mean, this was a pretty routine so far down move. There's a lot. The pain seems a lot greater on my Twitter feed than what is actually happening in markets. So
the implied, the realized pain is more than what the implied pain is suggesting.
Yeah, it seems like a lot of people have some extra oomph in their portfolios right now that maybe needs to get taken off the table.
Yeah, right. The reason why we started doing this is because honestly, this is something that I've always done in my head anyway. It's kind of like, when the hell just happened this week? And you look back, and it's crazy when you stack these. You kind of see, like in this situation, you kind of see where things are headed. I remember one of these we did like a few weeks ago, and we were talking about the SPX moves, right? Remember that? Like towards the middle of the SPX straddle, towards the middle of the day, and what was going on and how it was fairly low. And so it was one of those situations like you probably shouldn't do 4, 5, 6 of these in one sitting, because it's fairly low at a certain point in the day, and at some point it's going to expand. And that's exactly where we are now. So it's going to be a lot harder to do some of those where we are now because the expected moves are about to grow.
Yeah.
Let's move to the next slide. So yeah, I mean, this is the snapshot here. We're in backwardation now, compared to the previous 3 other weeks, and things start to get a little crazy when we get to backwardation.
What's it usually mean to you, Jamal?
It's funny you say that, because once upon a time, it used to mean, okay, get more aggressive and get long theta, right? It used to mean that like
because the front month is a lot higher than the back month, right? For
yes, yes. And again, this was trading a prop firm style, so I mean, options and stock. The fact that you can get long theta, you can get long options, and hedge with stock means things are going to move a lot more, and you're going to get paid to hedge those options, right?
Whereas you can inventory.
Yes. Yeah. Whereas now, what it means to me is, I will not get as crazy with as many strangles. I'm going to back off a little bit. I'm going to try and find sort of a little bit of downside out of the money, maybe a little like a month out more for, say, some SPY. I'm going to look at the SPYs, the IWMs, the Qs of the world. Now, I really haven't traded much of those. Now I'm going to start looking at those because those are probably higher IVR. And sure enough, they are. I think they're close to high 20s, 30s now. Right. So that's what I'm looking at.
Yeah. Right. That was my point early this morning. I agree with you there.
Yeah. But it's just funny how, the mindset changed. But again, it's prop versus retail, right? Very different.
Right.
Yeah.
Yeah.
Let's move to the next slide. This is actually something that I didn't really notice until probably about the middle of the day yesterday. I don't know about you guys, but the whole complex of the regional banks, they've been struggling more recently, and Zion and Western Alliance were the ones kind of ringing the alarm over credit quality. But a lot of these regional banks have been struggling more recently, and so we're back to this again.
Yeah, round 2.
Vanetta mentioned that this morning. Frankly, I didn't see it. Like, I don't have any of these in my portfolio, these regional banks. I don't have any of these fringe kind of stocks, so I didn't notice it at all. But bonds are strong. So, I mean, like, it doesn't, I mean, maybe, I don't know. Bonds down 10 this morning. I think it's much to do about nothing again, but who knows?
Yeah, I don't know. I mean, it's hard to tell in this environment. I mean, is it something to dig in deeper to? Is this saying like in this environment people are having issues with credit? I mean, I'm not really sure, but Yeah, it was kind of interesting. But when these banks are saying that, it's something I guess to pay attention to. But you're right. As far as the stocks, I swear I didn't notice it until like maybe middle towards the end of the day. And I was like, wait a minute. It was actually like right before I was about to start engineering and trade, and so I ended up using it. But it was
Could
crazy.
you imagine if they said something like, the rare earth metals stocks are having a hard time getting credit?
Oh my God!
Then you would have seen something.
Oh my God! Talk about in the zeitgeist.
Yeah.
Let's move to the next slide. You're right. I would have definitely noticed it then. All right, here we go. I got one for you here. All right, this is the largest gold bull markets of all time. Late November of 78 to beginning of 80. You can see the start price and the end price. The percentage change of 334%, 418 days. A couple of things to look at here. I got it sorted by percent change of all time, right? So you can see right now we're at the fourth highest. Excuse me. If we move correctly today, just 2%, we could be at number 3, top 3. It's nothing like witnessing history as it happens, right? And I think the other thing to pay attention to here is not only the change of percentages and the times when it happened, but the days, the amount of days in some cases. I mean, that top one tells you something. Only over 418 days was there a 300% move. That's probably about the beginning of the trading career, right, Tom? Somewhere around there. And then you see the others. Some of the others, a lot of them are 1,000 days plus, right? Like 1,800 days in between 01 and 06, 1,000 days between 08 and 2011, and then right now we're at 1,000 plus days. So this is just kind of fascinating to me, just to kind of put it in perspective. No, it's not crazy. This thing has really been running over the last 3 years, and it's really wild to watch.
Yeah, I mean, listen, you could have said it was overdue for a long time, just because there was no downticks in gold at all. But even the gold bulls, I was with Frankie last night, and he's my biggest gold bull. I know Liz a gold bull too. But even he was saying, like, I sold a call spread above the market, and it's being tested already. Like I never, in a week, when it should have taken 3 weeks at best. I mean, everybody here is astounded by this move, and it's probably not going to end well. I don't know if it's this 9th week or 10th week. I mentioned you yesterday. You retweeted something.
This is the 9th week. Yeah. It's never been up 10 weeks in a row. So we're still on the 9th week.
It doesn't mean it has to go down, 10%. It could be down, 1/10 of 1%, and that would, break the streak. But we'll see.
Yeah, it's pretty wild. I mean, again, looking on here. So the 2000s show up a couple of times. Obviously, the 2008 crisis kind of shows up in the third one there, kind of the beginning of that run. And I mean, I guess the beginning of our run really started during the middle of rate raising, right? When inflation was really kind of starting to run rampant. So. Yeah, it's just interesting to look at.
Did you close your gold? It hit 4,200. You were talking about 4,200. Were you disciplined enough to close it, or just
I haven't yet. No, I haven't. I haven't.
I love it. I love the projection. I love the I'm going to close it kind of thing, and then when it happens,
that's what happens, man. FOMO runs in both directions.
I mean, when I see this chart, it makes me not necessarily want to. It makes me want to.
Oh my God!
Turn. It does. It does. But it's something I gotta think about at some point soon for sure. Yeah, either that or I mean, that's the thing. I could probably buy some GLD calls against, but those are expensive right now. They really are.
Oh yeah.
It's almost like I really can't do much else besides.
The downside is basically free in gold. Right now. I mean, you can do put diagonals or long put spreads, and they trade for nothing.
Yeah,
it's crazy.
Yeah, it is.
All right, last slide, Jamal. Before the market closes. I'm so sorry.
No, sorry about that. Yeah. Walmart had this partnership with OpenAI with ChatGPT, creating a ChatGPT experience. You saw Bloom Energy make a big move this week to some investment from private equity. And then JP Morgan is supposed to be pledging $10 billion to companies considered essential national security. October OPEX is today. And then research, OJ, day-to-day longs versus shares versus short puts. Take a look at that.
Awesome. Thank you very much for your time, Jamal. We're going to take a quick 90-second break. We'll catch this opening bell. Great stuff today. Thank you, Jamal. Appreciate it.
Mm-hmm.
New from Tasty Trade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new Tasty Trade account. The Money Match event starts now, exclusive to new Tasty Trade customers.
Got trader's block?
We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Nikki, we are back, my son, with the bell imminent here. E-mini S&Ps are down 11. They've had a relatively tight range since we've been on the show for the last hour and a half. Really maybe 15, 20 point move, a handle move. It seems like a lot when you had a 100-point move last night. 20 handles top to bottom doesn't seem like a lot. Dow has been green for most of the morning we've been on the show. It's flirting with going unchanged right now. And the NASDAQ's about as low as it's been since we've been on the show, down around 100. The bell is imminent here, so I won't quote the rest of the market, but oil was up. It's down small, 2 cents. Gold is hanging out near the higher end of its range for this morning, and you just had your opening bell right there. Silver is the weakest of the group of all the metals. Well, I guess I shouldn't say that. I mean, I don't trade it, but platinum is down 5%, a $91 move, bigger move there than silver, which is down $1.30 and change. Big move in silver. Nat gas is up small, 7-ish cents. Let's see what's going on in the overall market here as we quickly come out of the turn here. Lilly down $30, big move down. Oracle down 11, coin down 10 with Bitcoin hanging out at 105 and change. You would expect Coinbase to be weak. AVGO, which has been a leader in the market, down around $6. UNH down 4 and change. ARM down small. Tesla down 4. Baba, we talked about a moment ago, down around $4. Let's see what the buckers are trying to move us higher. Costco, as the E-mini S&Ps go down 20. Netflix up $1 and change. And some oil-related stocks, XOM up small. Bank-related stocks up small. Not too many things higher here as we open a little bit weak here on the overall market. What's your plan here?
You had AXP had earnings too. That stock's up like $8 and change here. Getting a little bit of relief on some of these positions here. I got in some short delta in some of the frothier names, at least what I consider the frothier names here, that I would like to see a little bit of a continuation here. Choppy market though. E-minis just rallied like 10 points as we just talked here. Volatility at 22. Coming in a little bit. I mean, it's still very, very high. I think you're going to have more two-sided action today. I think today is going to be another good trading session.
Yeah, I don't foresee a face ripper in the market, which would make volatility really contract.
Yeah,
we are lofty at 22, but I think it stays bid through the weekend. I think volatility has to stay bid through the weekend with everything that's been going on in the market. So even if E-mini S&Ps are up 30, 40 handles, I wouldn't expect, let's say, volatility to come in by 4 or 5%. It's in by almost 2% right now. Like, I wouldn't expect that kind of move in volatility. So you could definitely be leaning into, and I think Jamal touched on it a little bit, some of these ETFs. I think you can get paid there. You're not going to have the weekend volatility, in my opinion, so far. Listen, we rally 100 handles on the E-mini S&Ps, and I'm completely wrong. But I don't think you're going to have the weekend come out. You always talk about, like, do you get paid on selling premium Friday into Monday? I think this, and again, nobody knows, but I think with the type of volatility we've had, most are going to say volatility is going to stay big. You're going to get 2-3 days of volatility contraction if on Monday you get a market that's inside the expected range, up or down. So if you're playing the expected range game here, you might be looking to put on some sort of positions that take advantage of that. And plenty of time in all of these positions. When you look at SPY, you've got 35 days to expiration. Plenty of time in these positions.
Yeah. They are taking some vol out of some of these names. I've got my Bloom Energy position is moving significantly. I have this 0-day butterfly that expires today. I'm long the 95, 105, 115. When we were when we were talking about this last time, we wanted to put in a $4 credit for this to close it out. It's currently marked at like 425-ish. So I'm going to see if I can get something out of this, like maybe 450-ish. I mean, these markets are, you could drive a truck through them. They're $2 or $3 wide. So I have no clue where we're going to get filled here, but it's a 10-point wide. So I would expect, or I'm sorry, it's 10 points wide.
10 points, 95, 105, 115. It's a classic butterfly. This is going to trade closer to, I don't know, two.
I'm going to put 4 in and see if we get like a little bit of a move lower here.
Yeah, you need the stock to go lower. You need the stock to go closer to 107, 108 to get your $4 price with the stock at 111 and almost 112. I don't think you'll get it. But you have it on for free, right? Basically, right?
Yeah, it's on for free. So I'm going to leave it in and see what happens here. Another big move is silver. Silver down a little over 3%. Gold's been choppy. It's been, that high has been like 43.25-ish. I've scalped that 3 times now this morning. Been a fantastic little two-sided action there. But I think you need gold to come in for us to bottom on equities. I think that's been kind of the little bit of a rotation here. I think you need gold and the INQs, the ACLOs of the world. I think those got to come down, and then that money will go back into the Magnificent Seven, those beautiful stocks that just go up every single day.
Yeah, and as you mentioned that, even the S&P's up 2, NASDAQ only, I'm sorry, even the S&P's down 2, NASDAQ down 38. It was just down 100 a moment ago, just moved 70 handles in the last 4.5 minutes. Russell down 6, Dow up 130, volatility hanging steady at just under 22, down 42 cents here right now. Let's take a quicker look at what's going on here now that the markets have opened a little bit. You mentioned OKLO just a moment ago. Up $4.
It was down $4. I mean, these
$10 range already this morning.
It's crazy.
Right. Volatility probably catching a small little bid there now that it's moved higher. I would imagine these stocks, when they go lower, volatility will contract to them. But still, Apple up $1 and change. Apple very weak yesterday, up small right now. But most of the action is to the downside. Oracle down 14. I already mentioned AVGO and Coin. Some of the other stocks, the GDX, big move lower, down $3, but still $81. Hood down $1 and change. So you have some two-sided action here. You definitely want to stay nimble in these positions. Gold now down.
Vol getting bid a little bit too.
What is
Vol?
Yeah. I mean,
it's you're above 22. VIX at 24. I know it's come in a little bit, but it's kind of to your point of not expecting vol to like come in significantly today. That definitely seems to be the case.
Yeah, definitely. I don't think you get the weekend premium taken out. So you should notice your on the top of your screen, if you have a short premium position, if you look at your theta decay number, that's probably grown. Like even the S&Ps are unchanged right now. I'm talking about SPY price down 19 cents. And that theta has probably grown without any positions being placed on in your portfolio.
Yeah, they just whacked gold too. Gold just moved like $40 in the last second.
Yeah, you should close the future that you did it already. Wow. Okay, Johnny.
I know. It was 3 25-point scalps. It's almost had a comma. Almost had a comma.
You did the right thing.
What do you want from me?
You did the right thing.
E-mini's up 4, cancel crash. We're back.
Even the S&P's up 1. That's how quick they move. I mean, it really is. I don't think you want to marry anything right now.
No.
I think you really want to.
You take the money and run when you got it.
Take the money and run when you got it. That is correct. That is correct.
But this is when we go through the 5 or 6 month period where you don't get any volatility, you don't know how good you have it right now until that comes, like where you got nothing to trade. I was talking to Sahil and Gad yesterday. They were asking me if SPY IVR had ever been 0, and I was like, listen, when I first started trading, and in the first couple years from 2015 to 2018, we would talk about the VIX going up 10 cents. And that being a pop in volatility, you'd open the day with the E-minis up 5 points, and they would be in a 7-point range the entire day. You know, it'd be like up 5. Apple was up a nickel, you know, every single day for 3 years, 4 years. When you get those periods in time, you pray for this to come back, and now we're here, and we're getting markets like this for the last 5-6 years now.
You just mentioned even the S&Ps are down 9. We're just up 4. You're right. This is definitely a trader's market. Be nimble out there.
Yeah.
Don't think that you grab the bottom, grab the top. I think this is really a trader's market. Get into a groove. If you get into a nice groove, I think there's some good money to be made here on both sides of the market. I think you have to stay.
Size. Watch your size.
Yeah, watch your size for sure. But I think you got to stay away from 0-day options right now. This morning, early on at 8:40, expected move is about $57 in ES, and in SPX, you would imagine it to be the same, and it is $57.50 or so, basically the same thing. You want to stay nimble in there. Take it easy right there. I think you can wait to see if there's some sort of settlement in the market here. Maybe even in volatility growing down 27 cents to 22.15. That's up since we've been on the show here. Speaking of trades and everything else like that, let's take a quick 90-second break. Ioana, we got fast market. We got 10 trades. Should be interesting to see how these prices have moved.
Yeah, for sure. We got a couple that came from our Reddit that we've been dabbling in. So some of the Reddit peeps coming in with some trade ideas. It'll be cool.
Awesome. Let's take a look at that right after this. We'll be back in 90 seconds of Tasty Live.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch Tasty Live because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Nikki, we are back, son. You know what? You had to get that move in Bloom Energy. I said down around 111 to get filled on that butterfly. It would trade around $4, and you did get filled on your butterfly. I think 385 or 95. What'd you get?
95, 395. So nickel below.
Yeah, I mean, the stock went down $4, like I said, around 110, 111. Again, just pricing those 0-day. Whoa, what do you got going on here?
I'm getting bailed out on so many things right now. This is, ding, 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 ding. I closed out this Hims butterfly for $1. So I took that was another like risk-free butterfly. And then I just closed out of that call ratio spread that we did in AMD yesterday when did I do this in AMD? Hold on, I'll tell you.
For $1.30 and change.
We did it on the 15th, so we did it at 232.
Mhm.
It was a staggered, so we did it 1-1-1, like a wide ratio on the upside. I've been doing them in like micron as well. This one just came in pretty. It came in $1 in 2 days. So what more you want?
It's beautiful. It's a beautiful thing, and you're able to hold those butterflies because they were actually worthless at one point, right?
Yeah, I mean, they were fully in the money. They looked like they were perfect, and then all of a sudden, these stupid stocks go up 50%, and you're like, God, I had an out of the money butterfly that was in a nothing position, and now it's in the money. It's insane.
Nice hold. Even the S&P is down 26, 27 right now. Cancel rally. NASDAQ down 150. Russell down 18. Dow still holding on to some small gains, up 7. Volatility up 28 cents to 22.62. I think a good call on volatility, even if the market going a little bit lower here. Bonds down 8, haven't moved. Gold, you've been trading a lot of. It's trading down to just under 4,300. Still a relatively small move in gold.
Yeah, Vol getting bid.
Vol getting bid. Yeah, it makes perfect sense too, to be quite frank.
Yeah.
All right, let's look at fast market here. 10 trades.
Yeah, let's do it.
Oh, no music.
Fast market.
SPX.
SPX. So if I'm to play SPX to 6790, 6800 by next week, into November 1st. How do I play this properly with your strategies? Thanks. This is Victor Jones in Chicago.
What's up, brother? If I want to play SPX 6790, 68 by next week, followed by 6700 in November. Wow, he's looking at a
pop and flop.
Pop and flop, as you would call it.
This is a tough one. I mean, I would probably say a diagonal spread. I would use SPY just because it's a little cheaper. I mean, this is kind of an everywhere all at once type position. So it's a tough one. I think probably a call diagonal would work because you want to sell that front volatility. You're expecting an up move of 2 or 3x the expected.
Well, you got about $160 expected move for the next 7 days. If we look at a full calendar, 7 days, so you're just outside-ish that range, but it's right where we closed on SPX. That's probably the numbers that he's using. So all of the move to the upside, and then all of the move or more to the downside in November. November expected move is closer to around 250 points. So you really are playing expected move all the way to one side, expected move all the way to the other side. If I was going to play this, I might be looking to buy volatility on a dip here. That's the way I would look at it, as opposed to SPX. /VX products, $1,000 a point if you use the big ones. That might be the way to go. I would do nothing right now. Any kind of weakness in volatility on a rally, I'd be looking to buy it, and hopefully it would pop going into the next week. I think it's a tough play, though.
Yeah, you'd be long calls, long volatility. If you get the move higher, you get long the volatility into that move.
That is correct. That is correct.
I like it. Next one, please.
Thank you. AMD. In Singapore. Look at us.
Yeah, there we go.
Punished pixels.
Yeah, go on.
AMD, massive run up over the last week. Time to clip its wings and bring it back to earth. Sell a 20 delta call in AMD. AMD down $4 today. I hope you did this and didn't wait for us, which would be nice. November 4th, the earnings. What do you think about AMD? Definitely bearish in AMD.
I mean, we just took that position off, had a little bit of short delta, and they want to be short here as well.
Yes.
So, I mean, the stock has not had as much downside as some others in the market right now. So
Mm-hmm.
I don't hate this idea. What do you think about like a skewed strangle here?
Ooh, I'd be okay with that. Yeah, Ivy rank of 63, earnings not till November 4th. That's definitely sounds like a play that I would make.
You do like a 2010-ish, 280 on the upside, 180 on the downside.
Okay. I'm into it.
All right. Trades at like 855 is what I got filled at. Markets are moving.
Markets are moving. Volatility in by 7 cents. Even the S&P's down 6 or 7. Dow trying to bring us over up 100.
All right, so we're in.
AMD. Okay, cool. Let's do it. Yep.
Sorry, I'm gonna push these through just so you get those.
Sure. Yeah, and I'm sorry. I think we missed one trade yesterday, a 0-day trade.
Yeah, that was your fault. I mean, I can't do everything here. My God, you know.
I understand. Well, someday you'll give me the permissioning, and then I'll be able to help you.
I will try.
Thank you.
Next one here. So we got the AMD. We did a skewed strangle in AMD. So 10 short delta. Oscar. So ACA subsidies to be extended soon. I'm playing it with short puts, 30 delta to reduce on my current stock position. But pick your poison. Juan and Cali. Columbia.
OSCR. I've never traded this stock. I'm taking a look at it.
It's kind of in the HIMS realm.
Yeah, $20. Take a little bit of a breather off its highs of 22. I mean, a couple of months ago it was around 13. They are bullish in this. What do you think here? It's down $1. Earnings are November 6th. What do the markets look like? They're a little wide here.
Yeah, like 10 cents wide. I mean, why not like they're looking at what, the 30 delta?
Plenty of open interest everywhere on calls and puts here. So this would definitely be a product I would look to trade.
What about like the 17 strike puts?
Just go $1.40 put? Sure.
Yeah.
Sure.
All right. I'm going to see where I get filled here.
Volatility in by 20 cents now. Even the S&P's down 4.
Yeah, this is a wild day.
Yep. Unchanged on the even the S&Ps. They're moving 4 or 5 clips at a time here.
All right, I'm in 17 strike put. I did a $1.36.
Beautiful. Very nice.
Cool.
Good job out of you.
Next one, please.
Next one, please. It is.
Whew, we are getting in the weeds here. PAAS selling the November 37 put for $1.02. Bullish over the ongoing term, 15% discount if assigned in 30 days. Not a bad thing. Carlos in Cherryless, North Canada, I believe.
Yes.
The Cherryless North.
The Cherryless North.
Got it.
Canada.
Got it.
God, do we owe you guys a mulligan somewhere?
Yeah. No, that's why Tom left. He could never get Canada opened, and we had to get rid of him.
You are right. Even the S&P's unchanged. Volatility in by 30 cents. What a market.
So this is a Silver Corp. So, I mean, that's why it's moved this significantly. I don't mind the trade. I mean, what about volatility? You got an IV rank of 77.
Yeah.
What about doing something like a cheap call diagonal spread? Like, I don't want the downside risk here, just given the move that we've had here. I'm thinking something like December, the 40 strike, buying that and then selling the 45 against it.
Yeah, I mean, they're
in
bullish
November.
stock that really hasn't had a downtick till today, down 2. I mean, you really got to have some conviction here. So I like your idea of a diagonal spread. I don't really have the conviction in PAS that our friends in Canada have. And markets in here are really wide. So I would go in with,
I'm going to try 250. Well, and I will get 250. That's 15 cents off the mid price.
Got it.
So they really had no problem giving me that, and I got price improved to 244.
Yeah, I would have. Okay, yeah. I mean, all right. I wouldn't have been so aggressive with the price. You got 50, 60.
I wasn't aggressive. I was 20 cents below the mid price.
Yeah, but mid price in there could be subjective. Like the mid price right now is 240. Now the mid price is 245. So I mean it moves pretty
E-mini's up 8. Look at this.
Even S&P's up 8. A little surprising with the move higher here.
Yeah.
Volatility is collapsing now by 30 some odd cents.
Yeah,
so.
but Vol's got to come in more for this to keep
Agreed.
going.
Agreed. Definitely agreed. What's Bitcoin doing? Bitcoin catching a bid too, 106 and change, very small.
Yep.
All right, cool.
Next one, please. I thought we were going to switch off, but okay, Visa.
I'm sorry. I was looking at the wrong market. I go Visa. There should be a little run prior to earnings. Sell Visa Nove 310 put. Let's see what Visa's doing. Maybe it's down here.
We got all the tasty list people. Yes, it's so sad. What? Yeah, I'm sorry.
Soul rack. Visa here up $4. I hope up almost $5. Good call on you. Great call on you in Visa. I think I abstain from this. Volatility expanding in Visa. So you hit this all at the right time if you did it yesterday. Volatility expanding, price low. Earnings coming October 28th. If I was you, I'd be in the catbird seat right now, even looking to take some of it off if I sold this option. The November 310 put is trading for around $2.40. I'm sorry, $3.40. So you got about $1 in there overnight, 25-ish%.
It's a good trade.
I might look to run like a thief for the night.
Yeah, it's a good trade. Congrats on your wealth.
Congrats on your wealth, good Lord. Yes.
Next one, please.
Sure.
All right, so UPST, zigzag stock, good volume, sell the 35 put on November 7th. So this is a shorter duration, $1.20 in credit, less than $1,000 in buying power here. Conviction, it won't go lower than 30 based on recent history. UPST trading at 47.50 here, near the lower end of where it's been trading. These markets stink too.
Yes, they do. They do.
November 7th goes into earnings there too. 35. I don't know if I like this. I think this is another one where you do a cheapy diagonal spread.
Yeah. If at all, you know what I mean? Like,
and these November 7th options, they're like $2 wide on some of these strikes. I think this is just a pass.
Okay, I agree with you.
We got our PAAS, junk trade on, so we'll pass on this one, unfortunately. And by junk trade, I mean just wide markets. Who knows what's going to happen? It could certainly go up, but when you look at those markets, it's just not ideal.
Yeah, liquidity is king here for sure.
Yes,
for sure. Yep. Gold down $5.90. Just giving you your gold update.
There you go. 4,300 on the dot.
Yep.
Next one, please. Let's go. NVIDIA pulling back with the rest of the market. IVR 21 after vol expanding. Sell the 170, 165 put spread in November. This is Justin in Atlanta. NVIDIA has not seen the same level of weakness as some of these other stocks.
No, not at all. Matter of fact, it's up 20 some odd cents right now. Been pretty bullish. It has come down the last 5 days from a high of 190 and change. From a high of around 190 and change, only into the 180. So you are right. It has not pulled back as much. Ride the wave here, son. What do you think? Earnings November 19th.
I was thinking maybe we sell the strangle.
Ivy Rank's only 24 in here.
You don't like that? You want to do a wide iron condor, or you want to do a put spread?
I think an iron condor. I mean, you got so much volatility abound here.
Yeah.
I think you can definitely wait.
What about something like you sell the 160 and the 210 and you go 20 points wide?
Sure.
$4 and change?
Sure.
Yeah.
I like it.
431.
Beautiful.
All right. Next one, please.
Good job out of you.
Silver gold. So this is Loose Ventures on Reddit. Greetings, Batman. I'm a silver-haired
Batman.
Batman.
That's the two of us. He included you here.
Yes, yes. I'm a silver-haired pony seller shorting silver and seek your thoughts. Arbitrage between London and COMEX is tightening and should reverse soon. CFTC reports delay by shutdown will likely spark moves. RSI near 85 signals overbought. I'm in a long silver put spread and short gold call spread. Thank you for your time. Loose Ventures, you're certainly getting a little bit of money back today with this move in gold down 18 right now, but let's call it $40, $50 from where we started this session, which was significantly higher in the overnight session, and silver taking it on the chin down $2 and change here. I think you caught your move.
Yeah, I think you caught your move. I think you take it off, but good job out of you. I wish I had it on when you put it on.
The silver move. I mean, if you were short both these, it's obviously a great day today. But the gold silver ratio, if you're short silver versus gold, that's been good too.
Yeah, absolutely. Even the S&P is down 5 now. Talk about being nimble here. This is definitely a nimble market.
What a market. This is wonderful. So we're going to pass Loose Ventures, but I like it. I'm short gold right now with a variety of positions. Some came from option trading or from option trades today and are feeling a little heat, Mr. Bat over there. But we're with you on the short gold here. I think that it makes sense at this point.
Gold down 24, helping that gold position that we have on.
Yes. Yeah, that's another one where I legged into like a very cheap / free butterfly about a month ago when I put the trade on, and it's 3,800, 3,850, 3,900. I thought, there was no chance we would ever be close to that, and now it's 300 points in the money. It's unbelievable.
Yeah, that was my intention too, and I got pierced by almost $100. Now back under where I need it, so I'm hanging tough.
I hear you. Next one, please. Oracle neutral strangle in November. I'm not going to say this name. Ghost Cipher Rink on Reddit. We actually have. I legged out of into the move yesterday. I legged out of the put spread that we had on our Oracle Iron Condor, which obviously in hindsight has worked quite well. I'm going to close out of this call spread here right now and see if we can get on a new position here, maybe sell some volatility with our man Ghost here.
Yep.
Or woman, who knows. Let's see if I can get filled on this real quick. There we go. All right. So that Iron Condor, we did a wide Iron Condor, 240, 220, 330, 350. We legged out of the put spread yesterday, which probably saved us a couple bucks just to bring that up, just to kind of talk about that real quick. So that put spread we legged out of 78 cents yesterday. It's now marked at about $1.50. So that saved us 70 cents. We netted about $100 in profit overall on that trade. So, it saved you a couple bucks. I like to do those sort of adjustments into big moves, lean a little bit short into, kind of the explosion that we saw yesterday. So I'll get that one posted momentarily. What are they thinking here? So we're just doing a neutral strangle in November. What do you think on that, Pops?
Yeah, taking a look at Oracle, down $17. Volatility Ivy rank 64. They want to do a neutral strangle in Oracle. Oracle has been going sideways. Volatility here, if I could take a quick look, has been expanding over the last 5 days or so. So I don't have a problem putting anything on in here. Earnings are in December, so I really think it's a trade that you can look to put on. I would probably go somewhere.
What about, I was saying going and basically getting back into this position, but just as a naked position, you do the 240, 340.
Yeah, you're going quite wide here.
Yeah.
You're going 10 delta, 22 delta. That
A
doesn't
little bit short. I
that
mean,
makes you short. I would probably, if I was going to do something like that, I might go like, let's say, 250, 250, 350, or 250, 260, one way or the other. I'd probably move it out a strike to the upside and up a strike to the downside.
you
Just
want,
because
yeah, like what about 240, 350?
240, 350.
I guess
That's
let's
short
do
deltas.
250, 350.
There you go, son. I knew you would get there eventually. I knew you would get there.
You know what?
$8 is the mid price here. Market's a little bit wide. I go in at the mid price and just
$8.
$8.
Yep, it was moving, but you're getting
$7.95, $8, $7.97. That's the mid price. I think it's a fair fill. I looked at both options. They both are around 25 cents wide. So both options are 25 cents wide. They're both equal distance between the bid and the ask. Then mid price is going to be pretty solid. You're going to get filled somewhere around mid price, a couple of pennies around mid price, one way or the other. If you've got one option that's 50 cents wide, another option that's 25 cents wide, like we saw in PAAS, then the mid price isn't quite as accurate, I guess.
Gold down $55 right now. And just to go off what you were just saying with the fill, on a day like today where you have volatility whipping around, you have markets whipping around, and you've seen it live with all these trades, go at good prices.
Right.
Like market makers, traders are going to be taking whatever they can get today.
Yes.
Just because things are moving. So if you see a mid price at $1 and it's 20 cents wide, go at $1.10.
Yes.
And if you're selling, and then adjust it, because you might be getting, with the movements in the market and the changes in volatility, you might be getting, better fills than you expect. Gold down 60 now. Here we go.
Yeah, gold down big, down $60 as you just mentioned. Volatility in only by 22 cents as even the S&Ps are up 6. A moment ago when even the S&Ps were up 6, volatility was in by 45 cents. So volatility definitely catching a little bit of a bid here. Only the Russell's down right now, down by 7. And you are right, gold selling off. It just was down 60. Now it's down 50. You still got volatility across the board and everywhere in these markets. That was the last. We got one more. Sorry, go ahead.
One more. UNH. This is Boodlei on Reddit. Selling puts in UNH November or
Budulay is the way I read it.
Budulay. I think that's good. Budulay. Selling puts in UNH November or December. Stock is down $1. It's kind of on the higher end of where it's been trading, but just got murdered, obviously, with all the UNH stuff that's going on.
Mm-hmm.
What do you think of this? I kind of like this.
Earnings October 28th. If you don't mind being through earnings, I don't have a problem with it. IV rank of 42 is good. December options are a little bit too wide for me in UNH.
And you got so much vol getting pumped in. You want to be in November right now.
You want to be in November. I agree. November monthly implied volatility is 45. December is closer to 43. So I would probably look to be in November. I would actually probably look to be spread too in UNH. I just think it uses a lot of buying power, but you do your thing.
Yeah, we're going naked put. There we go. 320.
You young kids will
320 strike at 75 or at 80 581. I got an extra penny on that. But you'll see in our market measure today, it's an interesting one. It's kind of this vol number is kind of our happy place.
Yes, that's the point I've been trying to make here all day long. Happy and nimble is what you want to see.
Yes, no doubt.
Awesome. How many we get done here? Let's take a look.
Yeah, so we did a ton of them. We did the AMD Strangle, we got the Oscar Put, the PAAS call diagonal spread. We passed on Visa because it was up $4 or $5. SPX, we passed on that as well. We did the we passed on UPST. That was one that was just the markets were just not good there. So that's an X, but it's okay. NVIDIA, we got that position on. We did the Iron Condor. They're trying to edit it as we go. It's okay, guys. It's fine. Yeah, there you go. There you go. The silver gold trade, we've been trading that all day today, or we've been trading gold all morning. So
yes.
We give that a check mark there. We did the Oracle Strangle, and then UNH, we did that short put. So we got 7 of 10, whether they be new positions or existing positions. I think we did pretty good here.
I think we did pretty good too, son, if we do say so ourselves.
Yes.
Let's take a quick 90-second break. When it come back, even the S&Ps, I'm going to call them unchanged, even though they're up $1. NASDAQ, I'm going to call it unchanged, even though it's down 10. Russell down 14. That's about a 0.5 percentage point to the downside. So Russell weak today. A lot of those regional banks probably hurting the Russell. Dow is up 100. That's been your leader in the clubhouse for most of the day. Volatility in by 20 cents. Bonds down 15. Bitcoin was trying to catch itself a little bit of a bid. It got Dikembe'd a little bit. It's 105.4. It's down about $700-800 from last time I quoted it. Oil down 15 cents. Gold is your big mover to the downside, but not nearly, down $55, but not nearly as much as silver, which is down $2.60. 5% move in silver. Big move there. Net gas, $2.95 and change. Let's go across the board before we take a quick break and see what's moving to the downside here. Just as a high option volume list, Lily's been a leader. It's always a leader, up or down. Lily's a big mover with horrible markets. Oracle down 18, CRWV, CoreWeave down $8, CRCL, these are some of the stocks you needed to move lower. It is down $5. HIMS down $6.50. You closed that one already. Coin is down $2.70 off of its lows by about $10 in coin. Hood down $2 and change. Let's see. MU also down. Rigetti down 2. Let's see what the upside brings here. You're looking at Costco up $7, OKLO up 5, Tesla catching a bit. If you remember, Tesla was down to 423 or so. It's 433 or higher right now, down $5 and change. Netflix up 4. Apple's been up around $1.50 for most of the day. We're going to take a quick 90-second break and come back. We've got what comes up next. Well, we've got a market measure for you, talking about volatility, very timely, with the market unchanged on the E-mini S&Ps. We'll be back in 90 seconds of Tasty Live.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Niggy, we are back, son. But you know what? Before we get to this market measure, we got to go over this market a little bit. Even the S&P is trading at their highs of the session, trading 66.93. If you think about it, we're 6,700, son. I remember last week, not this week, but last week, talking about, you know what? We're going to meander around 6,700 near the end, and here you are. Nothing to see. Nothing to see here. 6,700. Nothing to see here. But it really is. It really is unbelievable when you've got volatility now in by 72 cents. Frankly, with a $25 move, I think it's in a lot more than even I would have expected. You can see here it's at the high end of its range. This spike from last night when even the S&Ps were 100 handles lower than where they are. Volatility still elevated, still high. Place your bets on any type of premium selling positions you want to do here. NASDAQ finally catching a bid in step and in tune with the even the S&Ps. Russell, which was the weakest of the group, is flirting with unchanged. The Dow 30 holding us higher, up by 250. The Dow has had, a 45.6 to 46.5, 1,000, just about 1,000 point move to the upside, 900 and change. Well, I mean, top to bottom. Volatility in by 70 cents. I mentioned bonds down 18. They haven't moved too much. Oil hasn't moved too much. Gold has moved a lot. Trading near its lows, just made a 42.26, down 71 after flirting with 4,400. It does look like the gold at least has made a capitulation kind of high last night. Now, I got my emails from the people who tell me we don't make lows and highs overnight. I don't necessarily believe that. I actually feel that we make some of these highs and lows. I think we used to do it in Bitcoin all the time in overnight sessions. I think the overnight session gets a lot more exaggerated because the volume isn't there in the market. So I don't want to say low in the market because that's too tight of a market. But maybe after this move in gold, it might see a little bit of a breather. Could go sideways for a little while, which I think would be healthy for gold. We talk about in the market when it moves in one direction, too far low or too far high, that maybe we get a week or so of sideways action. That would actually be healthy for an extended move. You don't want to see really what you've seen in gold, this 1,000-point run up, and no kind of backfill in the market.
Yeah, no, I agree. I mean, you can't go up forever.
Well, yeah, gold showed you that you can. Whatever in my time frame is 45 days, and over the last 45 days, it has gone up forever.
Yeah, but their volatility is telling you that it's a 50-50 shot whether we're staying up or not. If not,
you're gonna have two-sided action.
Yeah, it's telling you that you should be taking stuff off when it works.
Yep. You're right. Yep.
All right, let's do it. Market measure.
All right, let's do it. I'm ready. And
got
we're
it.
looking at volatility on this market measure, right?
Yes, for sure. Sponsored by the CBOE. So this is a fun one. And VVIX is something that I love to look at. It's another CBOE product, but it's volatility of volatility. So it looks at the volatility of the option prices in the VIX. So it's a derivative of a derivative. It's a really cool, interesting thing to look at. And it's something that, can kind of give you a peek into how much fear is out there. People trying to buy that protection. Not tradable though.
Non-tradable, and I'm going to put up there real quick if I could, just to show you. This is VVIX. You'll notice there's no bid, there's no ask. It's down 5%, trading 664 down to 227 and change. I have this in a line graph because it really is just a one-day kind of print on here, so you can't look at it really any other way. I want to, and I don't know. We'll see what the market measure does. Sponsored by the CBO, by the way. It shouldn't show you direction, but it should give you a very clear, concise look at if volatility is expensive relative to itself. That's what I would say.
For sure. I mean, and a lot of these things, they're a reflection of what has happened, not what will happen. I mean, of course, because nobody knows what's going to happen in the market. So it's intuitive that VVIX goes up when you have some volatility in the market. I mean, that's what it is. So, but I think the takeaway here and the look that we're going with here is just another way to kind of quantify what high and low volatility is. And I think you'll see that in the slides here. It's pretty cool. So let's get into it. And this goes with kind of the skew segment that we did a couple days back, which was another really good one. Another thing that I like to look at as well. Mm-hmm. All right. So the VVIX measures implied volatility of the fear index VIX. It reached some of its highest levels in the past decade during the market crash in April, as well as during the COVID kind of craziness. The current VVIX is also fairly high at 134. I think it might have come in a little bit. We did this as of yesterday. It's at 126 right now, but you can see from the chart of the last, year or just this year total, it's certainly on the higher end of where it's been, as well as the VIX itself has been relatively elevated. So we're going to see if we can gain some meaning from this here. Jumping to the next slide here. So here's a summary of the key similarities and differences. So VIX is the actual implied volatility of SPX. It's a 30-day-ish window into the expected volatility in SPX. VVIX is the implied volatility of VIX. So it takes a VIX-style calculation and applies that to the VIX itself. And so it gives you a volatility of volatility. That is what VVIX is. It generally shows a positive correlation with VIX itself. So a lot of assets, like when you think of SPX versus VIX, they have a negative correlation. When VIX goes down, SPX is typically going up. When gold and SPX are kind of non-correlated, but you kind of get that expectation. Gold goes up, SPX goes down. Bonds and equities, they're inverse correlated. VIX and VVIX are positively correlated. So when VIX goes up, you see VVIX volatility of volatility go up as well. And this is why trading VIX with short premium is very, very hard. It's very hard to sell puts, sell call spreads if you want to be short, or sell calls, which you should never do in the VIX if you want to be short, because when vol expands, volatility of volatility also expands. So not only do you get whacked on short out of the money premium into the move, but you also get whacked by the expansion of that volatility. And the same thing if you're selling puts. If you're selling puts on the VIX and the VIX goes up, you expect to make money, but because the VIX goes up, volatility of volatility goes up, and those puts, you don't make as much as you would expect. And so trading volatility is very, very hard. It's really just like kind of a long option or a spot trade versus something short premium.
Well said.
Next slide here. So here you can see the rolling 3-month correlation here. It is as close as you get to a 1-to-1 correlation as you can find here. So the data indicates that the long-term correlation between VIX and VVIX is 0.84, meaning they tend to move in the same direction most of the time. This correlation makes sense because a rapid rise in the VIX typically suggests that the market is in panic mode, and this is intuitive. Volatility expands when volatility is expanding. So just showing you this here. Jumping to the next slide here.
And a 0.84 correlation. I mean, when you look at like something like, SPYs and Qs, you're going to get something like a 0.85. I haven't looked at it, to be honest. I should look at it right now. Hold on.
It's as high as you really get here.
Yeah, that was the point I was going to make. Yeah, like Qs and SPY is 0.73 right now. So when you get 0.84, I mean, that's it. That's well over a standard deviation, 2 standard deviation, 0.16, the inverse of the 84 up to 100. So this is correlated, period.
Yeah, and the points where you don't have correlation here are when you have like meaningless moves. The VIX is up a nickel and VVIX is down a nickel. Like when you're having big moves in either direction in volatility, these two things are moving the same direction. It's a 1-to-1 correlation.
Yeah.
Next slide here. So given the unique relationship between VIX and VVIX, we wanted to explore whether their combination can help us understand the market better and provide insights into trading performance. So we tested VVIX and VIX ratio. So we divided VVIX by the VIX over the past 10 years, and we're going to look at just kind of what we found here. This is just like a different way to kind of quantify IV rank is really what we're looking at as in the market as a whole. And so getting on to this next slide here. So since 2014, the ratio has stayed between 5 and 7, approximately 60% of the time. So this is our 1 standard deviation range of that time with a median of 6. So 5 to 6 is kind of the sweet spot here, right at 6. Currently, the ratio is at 5.41, and this is as of yesterday. Last year, there was only one day where the ratio fell below 5, which was in August. And however, this year the ratio fell below 5 multiple times during the April market crash. And so at those points, you had vol getting really, really big.
Yeah.
And that's when you have like tail type events because everybody rushes to get that protection. The volatility of volatility expands more than the actual vol itself. And so the numbers get a little skewed.
Yes, they do. Yes, they do.
And so getting on to this next slide, so slide 6 here. Next slide, please. Let's get to there we go. Go back one to 6. Yes. So next we wanted to test whether this ratio can be used as a trading indicator. So since fewer than 17% of the occurrences are greater than 7, we are going to use thresholds of 5 and 6 to test options performance. So we're looking at below 5, between 5 and 6, and above 6. We analyze the performance of selling 45-day 1 standard deviation SPY strangles with 21-day management over the past decade of each scenario. So let's jump to the next slide here and look at those results.
This should be interesting.
So the results showed that average P&L decreases as the VVIX-VIX ratio increases. Performance is worse at higher ratios, showing a negative P&L and a greater than downside risk. But again, you don't get those scenarios unless it's a tail type event. What you're seeing here is that in this spot that we're at, which is between 5 and 6, is kind of a sweet spot of volatility of this ratio in terms of your win rate, in terms of the number of occurrences that you get. Like you only get so many of these huge vol moves to take advantage of. This 20 to 25 VIX range is kind of the spot where you're getting the most bang for your buck. You don't want the tail events in either direction where, VIX is too low and where VIX is too high. We're right in that sweet spot, which is exactly what we know from everything we've
Sure. This is nothing news for anybody who's watched Tasty Live for any amount of time. The problem is you don't get it all the time, and the problem is when you do get it, markets are uncertain, right? You don't get volatility without markets being uncertain, and that's the time when we think you should be looking to leverage up and not leverage down on a trade. Now, that doesn't mean more contracts. That could just mean a strategy that uses a little bit more buying power that's a little bit more risky. Maybe something that you're not comfortable with. You're not used to selling both sides, but you're going to get paid for selling both sides. And if you have the type of market like we've had so far this morning, when you've got two-sided back and forth action, you actually could do stuff like maybe taking a little bit of a leg on something. We go a little bit lower, you're selling a put, a little bit higher, you're selling a call. You can get a little bit more advantageous, especially if you're going to trade more than one contract. If like you're a two-contract trader, you can kind of take a little bit of advantage of that and play the market and the swings in the market because you have volatility. When you don't have volatility, you get such a small move in the market. Everything is magnified, meaning every nickel or dime move is like death. Today, you've watched options move $1, an opportunity on both sides.
Totally. Next slide here. So this is because the ratio typically decreases as the VIX increases. So when you get these like 50 VIXs, the ratio is going to be really, really low. In other words, the higher the ratio, the lower the VIX is. So when you get these really high VIX numbers or the high ratio numbers, which is where you had the negative P&L, it's when the VIX is really, really low, and VVIX is kind of at its kind of low, which is around like 100-ish. That's kind of like the bound of VVIX. So you have a lot of risk when there's no risk priced in the market. You have a lot of risk. And when you have a very high risk priced in the market, you have much lesser realized risk. It's counterintuitive. It's another negative correlation there. But this implies that strangles underperform in low IV markets, consistent with all of our findings. This is not a shock to anyone. Since the election, the median VIX has been 16.7, which is pretty historically average, with a VVIX to VIX ratio of 6.3. Currently, the VIX is trading near 24, while the ratio is at 5.4, aligning with long-term data. So this is kind of the spot that we want to be deploying capital. You could see it here. The VVIX of the ratio being 5.8 is when you're somewhere, 5 to 5-ish range is somewhere in the 15 to 25 VIX number. And that's right where we're at.
Yep. 100%.
Last slide, a couple takeaways.
Like you said, though, it's counterintuitive, right? They say, volatility is expanding here or volatility is high. There's a lot of worry in the market, but options are priced to put that into account. Everything is perfectly priced. You know what I mean? So you could trade the same kind of move with very little volatility. And you know what? Some people like that. Like they like the small, steady, incremental move, especially when they have conviction on direction. And that's what we talk about, taking more of a directional bias on something because you're not going to have the big premium advantage to it. You've got the advantage of high premium right now. I think you have to seize the moment.
Yeah, the counterintuitive part is the execution. Like you should be looking to put risk on when there's a lot of fear. And you should be taking risk off when there's no fear.
That's correct. Good job.
So examining VIX and VVIX together can provide a deeper understanding of volatility and the potential market directions, unlike most underlying assets and their implied volatilities. IV goes up when stocks go down. VIX and VVIX are highly correlated and move in the same direction. When VIX goes up, VVIX will also typically go up. The VVIX to VIX ratio can also serve as a trading signal for option sellers. A lower VVIX to VIX ratio correlates with better performance. You have higher win rates, max profits, all that stuff, and that's because you're selling higher volatility. However, IV and IV rank is a more straightforward and simpler signal for most traders. Both serve the same purpose. This is just another way to kind of quantify high versus low volatility, something interesting that you can look at on your platform.
Nice. Very, very good. A nice little segment on volatility there. Let's take a look at the market while we're here. Even the S&Ps are up 7. They were just up 20 a moment ago. NASDAQ up 42. The Russell continues to be the weakest of the group. It got to unchanged when we first started that market measure, back down, not on its lows, but down almost 0.75 percentage point, down $18. Dow up 90. Volatility in by 47 cents, 2% move, decent sized move, but still elevated at 21.95 at the moment. Bonds down 17. Bonds have been a non-event. Really not too much movement there. Bitcoin back under 105, 105.9 on the futures. That's down $3,400. Off of its lows by about $1,000, well off its highs for the day by about $5,000. Ethereum also doing the same as Bitcoin, and oil down 4 cents. It's been wrapped around unchanged to up small, going a little bit lower. I got a quick little email. I got to give him a shout out. My man Armand said, is it time to buy gold when it was down around $75? And I said, nice. NFW. And it rallied $20. So don't listen to me. Listen to what you do is a great idea. You should benefit from it. Silver flirted with going under $50 just a moment ago. It's down 4.5% or 4.75%, 4 5/8, trading 50.70 and change. Let's take a look around the market here on the downside or upside. We'll go to the upside first. I apologize for scrolling like that. I know it's hard to see. Even S&P's up 2. Netflix up 12. Costco up 11. Tesla up 8. OKLO up 2 and change. That's off of its highs of 71, trading 64 right now. OKLO has had a huge range.
The last grasp. That thing's down $10 by the end of the day. Has to be. You heard it here. You heard it here first. Get your 150 puts if you need them. Well, we talked about it yesterday. The volatility is just getting, they're pumping some vol on the upside into this move today. But if you get a $3 or $4 down move and a vol contraction and the market moving the way it is, I don't think people are staying around in this stock. Yeah, it's definitely a speculative stock, right? This is and with volatility expanding to the upside, maybe that call upside skew goes away too. So you got both sides here. NASDAQ flirting with going unchanged is up 15. All I'm trying to show you here is markets are going to be very dynamic today. Don't fall in love with anything, but certainly look for everything. There's definitely opportunity abound. We're going to take a quick 90-second break and come back. We've got the trade desk coming in next. We'll see who we got there in about 90 seconds. Let's Tasty Live.
New from Tasty Trade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new Tasty Trade account. The Money Match event starts now, exclusive to new Tasty Trade customers.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move. Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Nikki, we are back, my son, and you know what that means. Time for a little more Tasty Live with, well, we usually go to the trade desk, but they're quite busy right now. Don't want to pull them off from doing their job. So I do want to mention at this moment that Dr. Jim will be out traveling about this weekend. Let's put up an art card if we could on where he's going.
Mm-hmm.
There we go. Options crash course. Well, that's this. That's in Detroit, right? October 19th. That's this weekend.
The magic stick. You get to see it in person.
I'm not even going to touch that one. But you're right. It's like a magic stick, only smaller.
No. Don't say that.
Doors open at 5 p.m. Show starts at 6. He's very generous with his time. If you're in the Detroit area or near the Magic Stick, go to tastylive.com/events to sign up for that. We also have, myself and that guy that used to be known as Tom coming out, the Fillmore Theater in Charlotte, North Carolina. That's the following week, Friday, October 24th. Go to the same place, tastylive.com/events. Reserve your ticket there. Just like Dr. Jim, Tom and I, generous with our time, about an hour beforehand. We sit and answer questions with you one-on-one or in a group setting with everybody in there. It's pretty cool, similar to what you do, Nick, before your shows and after the shows for about an hour or two. So get your tickets there, reserve them. And we've got one more coming in Austin. Oh, I'm sorry. We got the white.
Yeah, if you want to just skip over mine, that's fine.
No, go back to that.
What am I, chopped liver over here?
I'm sorry. My mistake. The whiteboard tour, trading and portfolio management, everything you've wanted to see and more. November 2nd in San Diego, California at the Music Box. You got any musical talent?
No, zero. Dancing. I can dance. Can't sing, can't play instruments.
You got that from me. tastylive.com/events. I can't play any instruments or sing either. I sound horrible in the shower. And then you've got the last one, the last hurrah, November 7th.
Yeah.
Antone's nightclub. Not the old Antone from the show, but Antone's nightclub, Austin, Texas, Friday, November 7th. Again, doors open the same time, 8. Show starts at 9. Reserve your tickets, tastylive.com/events. Thank you very much for putting that up, everybody. Let's take a look at this market right now, son. You've got, it's pretty dynamic. Even the S&P's down 3 doesn't tell you the whole story. We've had back and forth action all day long. Volatility in by 37 cents. I was wondering, we hadn't done, and it's a little bit late in the day, but we haven't done a 0-day trade. Even the S&Ps are down 4. Volatility has come off of its lows back over to 22. You've got about a $50 expected move here in the market. Maybe a 0-day trade?
Sure, you want to put one on? What are you thinking?
I think we go to the
same
area that we always go to, probably $10 to $20 wide. If you're looking at the $20 strike, let's say we do 60-40 on the downside. That would be 66, 60, 66, 40. I could put it up there. It's an 18 delta option. If you do the same to the upside, it would be 8,700. You collected $5.70. That's pretty close and further out than we used to go. 65% pop. We've been doing them with a little bit less than 65%. I don't know. Go in at mid-price, 570. See if you get filled.
Okay.
I don't think you have to be too aggressive with it. Market will probably come to you.
And we'll put the GTC in to try and take
But you got to get filled first.
Yeah, it's moving.
Definitely is moving.
All right, there we go. 565.
Moved it by a nickel. Good job.
Yeah. So we'll try and take that, and I'll put that in. I like for these 0-day orders to just put it in and let it sit and get my ding whenever it comes.
Sure.
So we'll put it in at what do you want to take? 20%? Take $1 out of it?
Sure. You can
All
try.
right, so we'll put it in at 560 or at 465 just to set that closing order. We'll see if we get filled on that.
Very nice. Very nice. Even the S&Ps just turned slightly green.
They've been moving.
They've been moving all around.
Been moving.
Yes. Totally been moving. You're 100% correct.
Yeah.
Russell, which has been the weakest of the group, still down 18. Nasdaq just caught a small bid, up 7. You want to represent the chat room real quick?
we got a couple chats in. Somebody was asking about my CCJ trade. So I did this 1x3 on the call side. So I'm long one of the 85 calls in November. I'm short 3 of the 95s against it. And I did this trade at a $2 credit. So going back to what we talked about with like AMD and Micron, I've been doing these sort of trades, but I've got extra units on the upside that I'm naked. And so I sold the 85 put against it a couple days ago into what has been like a never-ending rally in these nuclear stocks. So I have 1 put to 2 naked calls on the upside. My whole position right now is short the 85 put, long the 85 call, and then short 3 of the 95 calls. So I'm essentially delta neutral here with where we're at. I'm basically long stock, short 2 calls against it. It's basically a straddle at this point. But I have another put that I can sell into the downside move.
Yeah, you're correct. I put it on the opposite way here, trading around 885 in credit right now.
And I'm in it for about $5. So I'm out like $3 right now. Well, you got a good amount of decay here, theta decay, I mean, because you're short the at the money put. You have those 3 calls that are out of the money that, the stock has had significant call skew. So right now it's a hold. I'm basically straddled around this 85 strike.
Very good, very good. And you can see all that on the follow page under the bats. It's all it should always be there.
I know. Everybody's used to just like 50-cent puts, dollar strangles, all these just gross, just tail risk type trades. And, I kind of put on some spicier, a little bit higher upside trades, $200 on a one lot.
Some would say intelligent trades.
Sometimes. I mean, sometimes they don't work out, but you stay small.
More dynamic, intelligent trades, I think, is the adjective you were looking for.
Yes. No Quentin today. Fast markets, obviously, with the craziness that's going on. That's another thing that I wanted to reference for everybody. Things change, when you're not just the head honcho. The head honcho can go and just, kind of jump on whenever they want. For the rest of us, we're worker bees. And sometimes, things happen where, people can't come on, or we got to do a rerun or whatever. We're worker bees here. So,
you got to call an audible.
Got to call an audible. It's just, I saw some people saying these extended breaks, It's just sometimes that stuff happens.
I know. Plus, we're getting the kinks out too, trying to get all tightened up with our markets too. So and everything that we do here. So bear with us as we grow along with you. So we have that too.
Anything else we can get a couple more trades on, maybe real quick? Anything else popping out to you?
You've done quite a few trades today. I mean, I think you've done 16 trades today between opening and closing trades. We did about 12 on yesterday's show, pretty much. I think you're doing a good job, or we're doing a good job with all of the trading aspect of it. I want to ask you more. What do you think about the market here today? First of all, I'll go with gold, since I got that wrong for Armand and cost him $40. Do you think gold upside and downside move is over for the day?
I don't think the moves are over for the day in anything. I think you're going to have whippy 2-sided markets for the rest of the day. I mean, volatility is telling you that it's staying. You're having a little bit of a vol contraction, but it's you're still elevated here. So I think the moves continue. I mean, I think leaning to the short side into an up move in gold is probably the move. I think this was a little bit of the capitulation, at least in the short term. So if gold rallied back, above 4,300 or something like that, I mean, I was trading around the 43.25 mark. I don't know if we'll get back up there, but if you got up to that range, I think it's a scalpable range in gold. Certainly if you get up to the upside. That's my That's my thinking. Silver, I have no feel on. Silver, I mean, this is a huge move in silver. You probably missed out on that move. Like, I think gold is due for what is happening to silver. Like, not a crash, but a 3 or 4% down move, just to kind of wash out some of the volatility and just the speculation.
You take out the last 2 days up move.
Yeah.
That's what it is. I mean, but like like you said, not this, may have missed a move in silver. Yeah, it took out the last 48 hours.
Yes. And I see some people posting about the Johnny trades. I will be bringing those back. We're still going to do life cycle of a trade. I'm trying to figure out how to get that into the live content. It's hard because I got to put those together, before we come on air. But I will next week. Hold me to it. I'm going to have a handful of new Johnny trades for us, so we will get those on. I'm lacking. A lot going on. A lot of moving parts here.
A lot going on, and some of those moving parts are beckoning me to go to the washroom. So I'm going to take a quick 90-second break and come back. Even the S&P is basically unchanged, up 3.5. NASDAQ basically unchanged, up 10. Russell down 15. That's a 0.5% move to the downside, where NASDAQ up 10 is less than a 1% move. In less than 0.1% move. Dow up 82, volatility in by 48 cents, bonds down 14. We'll take a quick 90-second break and come back. We got more Tasty Live after this with Liz and Jenny next. Good job, son. Peace.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Hi, my name is Liz Deerking. The beautiful brunette next to me is... What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on. No, you're wrong. I'm Hold on.
She's wrong, I'm right.
I had friends at my high school who were mutual friends of Liz, and so we were all at the same party.
And then parties for the rest of our lives.
For the rest of our lives. The same thing with college. She went to a different college. I went to a different college. But we both ended up at the CBOE together.
Yep.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Hello, everybody, and welcome to the Friday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette to the left of me is Miss Jenny Andrews. Happy Friday, Jenny.
Happy Friday. Happy Friday. I know you've got a busy weekend. You are hitting the skies, headed to... No, it's next week. Next week.
No, I'm leaving at 4 a.m. tomorrow morning for Atlanta. But tonight I've got a Little Women play, so Atlanta tomorrow morning. Yeah, I've just decided, Jenny, that I just don't sleep anymore. I will never get sleep again because I'm leaving at 4 a.m. Then I'm going to a wedding where I'm going to be up until the wee hours of the morning. So
I can't keep up with your schedule. I knew you were away this weekend, Atlanta wedding, away next weekend.
Yep. I'm going to see your son next weekend on Friday, and then Kentucky on Saturday. But yes, we're out.
He is very much looking forward to giving you a tour of Miami.
I can't wait. I'm going to post some pictures of me and Logan. Like I'm going to make him do the monkey walk with me where we go like this. in Miami of Ohio.
Yeah, he's excited for you and Annabelle to go visit. And then you've got the football game in Kentucky the next day.
The following week?
That day. So it's busy. You've got a busy weekend this way, heading to Atlanta. Then next weekend, Kentucky.
Yeah, I'm never going to sleep. You have a big hot party tonight, don't you, sister?
I'm going to a hot party tonight and then home the rest of the weekend.
Oh, that's nice. I know, but I know everything's busy with these kids these age. So.
I am starting. I didn't know when I could start because it's still October, but I went to the mall yesterday and they already started putting up their Christmas trees. So I saw the Christmas trees. My daughter was with me. She's like, Mom, they're putting up the Christmas trees at the mall. I think you can get started. So I am going to start my Christmas decorations now because they're going to be over the top this year.
Because you're on the house walk, right? I'm coming. I'm signing up for it.
You can come without a ticket. I'll let you in. Okay, so we have a really busy show today. We're taking live tweets, include the hashtag LIZJNY. I had emailed someone back who asked for us to go over the synthetics. So we're going to go over synthetics, which might take like a decent chunk of time from today's show, Liz.
You know what, though? And I think it could take a decent chunk, but I will tell you, Jenny, I think it's something that is extraordinarily important that I don't care if we do a big chunk today and then actually dive deep and do it again at one point next week. Because synthetics, I think, in my opinion, you and I use them all the time. We do everything as a synthetic, right? So it's kind of important. But I got to tell you, this is a show about markets. This has been a wild ride today.
Oh, SPOO's down 8 right now. We can pop in the platform and see what's going on.
The VIX got as high as 28 overnight.
I'm going to go to the VIX right now. So Liz was kind of, if I were next to her, she would have slapped my wrist because I did a different, we always say, stay consistent, stay consistent. I did a different SPX 0-day trade today than I said I was going to be doing, but only because of the market, environment.
Market is bonkers.
Like VIX was so high. I opened up the 0 DTEs this morning and I said, I'm just going to see what I can get if I go 100 points down. And I went 100 points down and the puts that were 100 points down were still like, $6 or so. So I was like, I don't think the market's going to drop 100 points today. So I just did a real widespread 100 points down. I felt like Jack Tucker.
Can you open SPX? Because here's my, and I like it, Jenny. I'm a huge fan. But my only issue with SPX and puts is they all trade around the same price. So
You
it had
have
to
to
be
make it wide.
crazy wide, right?
You have
It
to-
had to be
you have-
crazy wide, like 50 points wide or something.
No, 25. So, okay. So,
but you probably only got like $2 for a $25 wide.
Yes. But like, it's not very often. I was like, seize the day. It's not very often. You can go 100 points down.
Yeah, if you know what's great is if you, had the capital to sell just that put.
Oh, I know. So, okay. So we're at 66.30. I literally on the open was like, 100 points down. Let me go to 65.30. I wasn't even looking at deltas. And here it's $3. This morning, maybe it was like $6. And to Liz's point, they all trade around the same price. So you have to make a spread wide enough to collect enough.
So like if you did it right now, if you did a $25 wide spread, you'd go to the 05, right? And
you're getting $1.20. You're getting $1.20.
But it's not bad, but it's still like not a lot, right? So that's what I was going to say. You probably got $2.
I got just under $2. And I was okay with that. Because in my mind, like if we drop 100, and I know, if we get to the point where we drop 110 points and we're in the middle of this spread is going to trade for $12.50. If you have a $25 wide spread and we're trading in the middle, this spread is going to trade for $12.50. With the blow up in vol that would happen, it might not even be $12.50. It might be like $10. So in my mind, I thought, I'm not afraid of this trade because if we end up down here, I'm probably going to close it and take a loss for about, I'll close it for like $10.
You're not going to, oh my God, knock on wood.
Take an $800
down there. Knock on wood.
Well, and take an $800. If I have to close this wide spread for about $10 and take an $800 loss, I would be taking an $8 could
loss
close
on the
to
$10
that
wide.
on a $10 wide or $15 wide at the money. So I just thought, take advantage of this vol. If I could go 100 points down, great.
Yeah, because you won't be able to do that if the vol wasn't through the roof.
No, and you know what? Let's on the calls. Not there was no way. You went like not even 100 points up on the calls, and you were getting nothing. It wasn't worth it. It wasn't worth it on the calls.
Yeah, I get it. So, what a two-way action week. I don't know if you saw Jamal. So stocks are up on the week, even with him as down as they were.
Did he say they were up, or did he say they were
up?
Okay.
Up.
What? Okay.
So and I believe the exact quote was, so if your P&L is too crazy for you, then you might need to take a look at it because stocks are actually up on the week. And you can go look at it. Go to SPOOS or SPX. I don't care.
Well, what I wanted to look at too was, you talk about how we get that in the option jive, the weekly expected move. Do you remember what the weekly expected move was for this?
188. And I said it's going to be under, and you said it was going to be over. It's definitely under.
So let me see. Like, what was Friday? So it goes from Friday was the 10th.
So you got to go to
this was
13th.
here. That was the 10th. Okay.
Yeah, you got to go to the 13th. That's the weekly expected move.
Yeah, but from the close on Friday.
Okay, I can't. Those numbers I can't read. Can you read it?
So 65.52, and we're 66. And we're 66.30, so it's like 80 points, which I'm pretty sure the expected move was 70 something points.
It was 188 this week.
No.
Yes.
It was.
Yes, it was 80 points last week. It was 188 this week because of Friday's volatility.
Did I miss a day this week? Was I not here for that option jive?
No, you were there for the option jive. But we had already moved so much.
No. I didn't.
You were there.
What day did you do the show with TP where you're like, we're not going to do the option jive because I just did it with TP?
No, it was oh my God, Jenny, it was you. I just did the show with Tony and then you were on with me and we did the option jive. We pulled up the 188.
Oh, right. But like it wasn't a typical week because you did the morning show on Monday.
Yes.
Where was I?
I don't know where you were on Monday. You were at Notre Dame.
Oh yeah, I knew like I wasn't here Monday for the beginning of like the weekly expected move. That's why
we went over it on Tuesday, and you're like, that seems kind of high. Or kind of low. We've already moved 188 points. Hold on, I'm gonna go back into this. I want to make sure.
I'm gonna go take it to the tape because I don't think we ever really. I don't know if I ever really saw the 180 because I was thinking 70 every week. But that's where we are now, around 80 points. Around 80 points from close last Friday to right now. We're around 80 points, which That's, the high VIX, but I see what they're saying. On the week, we're up from last Friday.
Yeah, for sure.
It's been wild. It's been a wild ride.
It's been the wildest ride in the wilderness. Sorry.
What was that?
I'm going to the slides that we pulled up in Option Jive.
No, I know it's on the slide. I just didn't remember seeing the slide.
No, I'm going to our show to see if it comes up. Just because I want to make sure. I mean, I'm not trying to prove you wrong. I'm trying to make sure I'm not misspeaking. Do you know what I mean?
I believe that after coming off of Friday where you had that huge down move, I believe that the expected weekly move was huge because vol was huge, right? I mean, the fact that I could go 100 points down and get $6 for a put this morning, like vol's been crazy. Vol's been jacked up. So I believe you that our weekly expected, and we're inside the weekly expected move. I was just used to every week 70 something, 70 something, 70 something, 70 something.
Yeah, right. And it was like 88 to like 188 or something to that effect. Hold on, I'm almost there. But yeah, so that's pretty interesting.
So, okay. Now, I was confused. I couldn't even remember where I was on Monday, but you're right. I was at Notre Dame.
Yeah. I got you, boo.
Okay. Next up. So that's SPX. As far as today, is today a regular expiration? I can't even keep track. Is today the regular monthly expiration?
It's a possibility.
It is. So, what I would do is go through my account and see where do I have any red in the money signs. We have 3: Exxon, UUP, Rocket. That's it. I have a lot. You have a lot. We don't have a lot. We have 3. So those are things that we definitely have to do something with.
Yeah, we do. I mean, anytime you have an in the money sign, you've got to do something with it.
2019 put spread and the 20.5, 23.5 call spread. So just an iron condor in Rocket. Whoa, look at Rocket, $16. So 24 days ago, we sold this and it must have been trading somewhere in the middle of this. So Rocket's down to $16.
I mean, a lot of things are down, which is crazy that it's up on the year. Do you know what I mean?
And how is this trade a winner? Oh, it's a reverse Jade Lizard.
Oh.
I mean, I can't remember Monday. There's no way I was going to remember what we put on 24 days ago.
I know.
It's a reverse Jade Lizard.
Okay. So, well, either way, let's just close the whole thing. We're up $22.
Yeah, I'm not going to close this call spread because it's all going to roll off. I'm going to close this put spread. It's a dollar wide put spread. We're going to get $1. We're going to have to close it for $1. But we made the $22 because we took in, almost $1.20 here. Probably going to have to pay 101. But this actually brings Rocket to our attention. I didn't realize Rocket had this big fall. 66 rank. What say you on short puts in Rocket?
I say yay. I'm trying to go with I say yay.
Okay, and so here's what with earnings coming, this is just an exercise I do. Earnings coming, I will look at the regular monthly expected move 257, and then I'll look at the earnings move 201. So I'd rather get paid in 14 days than 35 days. So I'll for sure go with the 14-day. Like that's what I would do.
Sure, I'm in. I like it. 100%.
16 puts, $86. Whoa, cash secured.
Boo.
Let me see something. We had a reverse Jade Lizard. How about a regular Jade Lizard? Kind of like a big lizard.
That's perfect. You're using that implied volatility rank. If it goes up, we don't lose anything. This is perfect. We're playing for just a little bit of a vol collapse or a non-event.
Yeah, so I'm not even going to go the curve view because we still have that call spread in from today. So
yeah,
getting 101. And our only risk is we have this 14-16 put spread and we're taking in $1. So we only have $1 in risk.
I like it.
Yeah,
put that in the clearinghouse. And I have both sides pulled up so I can come out. So don't worry about that because we've got a lot to cover today.
Okay. So yeah, we are going to get to synthetics to my viewer who I wrote, who we met in Toronto. Happy to go over synthetics and we're going to get to it. We just need to take care of these red in the money signs first.
I really do love that they are asking about synthetics. They're my favorite thing to talk about. Love synthetics.
We're gonna have to check my work because I literally threw this together down in 5 minutes while I was watching TV. So,
well, and it's funny because you're doing. I think we're looking at textbook synthetics, right? Versus,
I just in my head was like, when I wrote down these synthetics on a slide, called you and said, "What am I missing? I think there are 6, and I only have 5."
Yeah, true. These are all facts, as the kids like to say.
Okay.
There's like one we don't use unless you get assigned.
Yeah, you know what? They're all good to know, right? Because it kind of came on the heels of that synthetic zebra that I made. She's like, "How did you come up with this synthetic zebra? Like, how do you what are these synthetics?" Because if there's a trade where it's like 2 puts and 1 call, or two 70 deltas and 150 delta, and you've got stock in the mix, you can create a synthetic. You just have to know them.
Yeah, it was pretty good. I thought that was pretty creative on your part.
Thank you.
And it's so funny because even you could give that even to market experts and they'd be like, "Wait, what?" Do you know what I mean?
Yeah, no, I know. It was kind of funny going through. I was cleaning my closet. I've been cleaning my closet. This has been going on forever. So I was on a board. You remember this? I was on a board managing their finances. And I was on that board for 5 years. And I have binder 4 meetings a year for 5 years. So I have all these binders full of all their financial data in my closet. I'm like, I need this closet space back. So I'm taking all these papers out of the binders to take them to be shredded, and going through all the people and all the information and all the salespeople who would give their pitch to us on how to invest. And remember when we had the put fund,
the short put fund?
Yeah.
And you're like, wait a minute. Can you explain this to me again? I know exactly what you're doing. Quit trying to sell it like it's God's gift.
Yes, but it was kind of funny going through those last night, looking at all of this, seeing, way back when I remember when these people were coming in, and I remember like at the time, so many tasty traders being so bearish, and then looking at those numbers of where the SPOOs were then and where they are now is insane.
Oh God, that's got to be insane. But I mean, to me, it reminds me of you had the people coming in trying to sell you a short put fund, because to a lay person, not that matters either way, they shouldn't know what it is, but they didn't know what it was. They're like, "Ooh, this sounds great." And you're just like, "Wait a minute, hold on." It's kind of like the buffer ETFs when they're coming in. I was like,
but the board all ruled that was too risky. They were like, "This is too risky. This is too risky."
The short put fund, but they're like, "We'll buy stocks.
We'll buy it all, but the short put fund is just too risky."
Too risky. Because you say the word derivative in there. You know what I mean?
Yeah. I never belonged on that board. That was like 5 years of my life I'd like to erase. All those meetings. Because I just couldn't take it, never willing to embrace something better because they didn't understand it or couldn't learn it.
Yeah, I feel like that's very typical of a lot of boards. And you were that without saying what it was, it's a very traditional based board anyway. So they're very risk averse. How about that?
Right. Yeah, right. And there were like bylaws of like, we can't trade options, which is insane. That was in like part of some of the bylaws, like no options, they're too risky.
That's exactly what I say to all the high school kids. And I got a call from Connor, who's at UK with my son. And he's like, "Can you help me with the stock market game?" I go, "I'll only help you if they let you use derivatives." He's like, "I'm emailing my professor right now." And he said he could.
Oh, good. Good.
Yeah. Nice. He said, "Nobody's ever asked me that before. So sure you can." So I was like, yes.
Nice.
I go, "Connor, we're either going to be first or last." And he's like, "Oh, I'm okay with that."
All right. UUP. This was just trying to get long the dollar. There's no premium in UUP. So we bought a call. Do we want to keep this long dollar going or not? I don't think we need to.
No, let's just get out of it. Honestly, if it didn't work, I know we has had that on for 64 days. So let's take our $2 loss.
64 days. For 64 days, we've been holding on long to this dollar.
So let's take our loss for 64 days.
It's in the same place it was when we put it on 64 days ago, I guess.
And do you know what? Kai sent us the market measures recap for this week as well.
Oh, he did.
Friday? Yes. So I was going to say, I appreciate him giving us this. Let's table it and we'll do it on Monday.
Okay, that's a good idea. That's a good idea. Do you see this? This put is exactly the same price as it was when we bought it. Do you see? We probably put it on right here.
64 days.
Okay, so we're out of UUP. And then I'm going to flip these so X is at the top. Exxon is something that keeps going. I see it. It keeps like teetering. It's in the money, then it's not. It's in the money, then it's not.
Oh, good catch, actually.
Yeah. So if we left this and Exxon expired over 112, we'd come in long 100 shares of Exxon. No big deal, but would use a lot of buying power.
That's not the end of the world.
No, but it would use $5,000. So
yeah, so let's just close it.
Do we want to keep anything going in Exxon? This was a viewer. This was a watcher.
Well, no, we said we'd rather be where we are in MCL and CL and oil was under 58. That's low.
Yeah, and this was a what's your assumption where I think we put it on at his time frame. He was like, I think by this time Exxon's
I think you're right.
So we're out of Exxon. Now what? That's it as far as the red and the monies. And with these down moves, like I'm gonna flip this again. Here's our one bearish position. Our one bearish position. We have a $7 wide put spread and sold call spreads to pay for it.
Yeah, let's do that. It's 7 days. Let's just close it. I mean, with the two-way action we've gotten, let's take our $66.
Okay.
I mean, I'm being serious because what we're seeing today, we were up 20 and down 20.
Yeah, that's true. That's true.
I mean, that's the one thing that I do say in this market. When the market gives you a gift, take it.
Okay, we'll take it. What I did was I just took off my call spreads. I just took the risk off of my call spreads and left my long put spread.
Oh, that's fine too. But I was going to say $70. We could literally put it on again.
Yeah, it's right here. It's right here. You're right. Yeah. You're right. It's right here. But okay, so this is just, yeah, sure. We'll take $70 out of it. That's not why I pulled it up, but you're right, Liz. We'll just take it.
Only because in this market, because I keep kicking myself in the butt with me being like, oh, we had profits in this, and now we don't, and now I do, and now I don't. Where I could have put it on and taken it off 4 times.
Yeah.
Which is kind of crazy.
I know. Okay. All right. Are you ready to get into synthetics?
Oh, I can't wait. I'm very excited for it. And I want to say thank you for making these slides.
No problem. So I'm going to, on every one of these, this is how we're going to show it. We're going to actually pull it up and show it just to check my work. Cause I don't know, again, I whip through these. I got to make sure they're right.
And honestly, Jenny, I think we're checking your work maybe, cause I would be checking my work too, but I think it's helpful for me and my small brain. So hopefully it is for other people. You're looking at this on paper, be like, this plus this equals this. Well, let's see it in action.
Okay. Synthetics 101. There's one slide here. There's one slide. And here it is. These are the OG.
I also want to say something real quick. So for those of you just joining us, my name is Liz Deerking. That's Jenny Andrews. And when we got to the trading floor, Jenny was my options teacher, and I will never forget you saying this.
You're making me sound so old. You're making me sound
like the same age. You were you got to the floor a couple months before me, and so because of that, you were already teaching options at that point. And so you handed me your Natenberg book with things that were highlighted, and you go, "Hey, the only thing I want you to learn is learn your synthetics." And it was this. It was these synthetics because this is the bones. This is the structure of everything. There's nothing more you can do. You can buy a call, sell a put, buy a put, sell a put. There's 4 things you can do, and however you put them together is options trading.
Yeah, and when I say these are the OG, it's because we've come up with, people have come up with other things, other strategies, but you're always using these. Like Liz said, you've got 4 things: long put, long call, short call. That's it. You've got to piece them together to come up with your strategy.
And think about it. Yeah. And from those synthetic purposes, you can go 2 long calls, 1 short. You only have 4 blocks, but you can put them together in the old 8-legger. Think about it from that perspective.
Yeah. And so when you have strategies, and this is kind of how I came up with that synthetic zebra, when you have strategies where it's like, okay, you're long to, if I want to synthetically be long 70 delta call, if I want to synthetically be long a 70 delta call, well, how do I get long a call. Okay, here. Do you see my arrow? I don't know if you see my arrow or if my arrow is shown or not shown.
It is not. So just be descriptive.
Okay, so like second, first we've got long stack, then short stack, then long call. Okay, how do I replicate a 70 delta long call? Well, I just have to buy that same strike put and be long the stock. Get long, buy that same strike put and be long that stock, and that will replicate a long call. So if I already have the stock and I was trying to replicate a trade that had 2 long 70 deltas, 1 short 50 delta, all I had to do is buy that put, the like 30 delta put, essentially the opposite
same put. The same put, yeah.
And buy that put. So now I'm synthetically long that call, and then I just add the rest of the trade. So if you know what trade you're trying to put on and you already have some pieces of it, you can figure it out using these synthetics.
Absolutely. And keep in mind, they are actual synthetics, but they're theoretical synthetics, right? So they have a little bit of different.
No. These are actual. These are.
No, I mean, but what I'm saying is, I guess they're not all created equal. Meaning, like, if you're going to go buy a call, so which would get you to long call, right? It's going to be a different margin relief. That's when I'm saying they're not all created equal. Like,
yeah, but they're not theoretical.
Your margining might be completely different. Like, you might try to do something where then all of a sudden you're looking at it, you're like, you said it's identical. It's identical in the P&L graph, not in the margin or the capital requirements.
Yeah. Which is why so capital requirements, of course, but this is why people will use synthetics. People will often say, you know what, I'm going to buy a call and sell a put to get long stock because that's going to use a lot less buying power than actually being along the stock, or vice versa on the short stock. I mean, that's when you'll see people use these combos to replicate stock and use less buying power. So the stock is always going to use the most buying power.
Yeah.
But theoretical, like your Greeks are theoretical, your theta, your gamma, your vega, that's theoretical. But like if you're synthetically putting on one of these positions, you're synthetically in that position.
No, but they have different nuances. But they do have there are different nuances for each of these. That's the one thing I just want to show that. Like, you can't be like, it's the same if you get there and then all of a sudden it's holding up a ridiculous amount of money. There are different nuances.
Yeah, the buying power is it's the buying power that is different, but you'll still have, like, if you buy a long call and sell short put, same strike, you synthetically have long stock, and that will act like the stock no matter where the stock is. It'll never be one day not acting like long stock. So yeah, these are both the combos, the top two. Yeah. Okay, so when I say check my work, we're going to go through these. So long call plus short put equals long stock. Okay. So I'll just go to SPY. And
the other thing too is call put parity. When we're doing this, we're using the same line, the same strikes. So that's the other thing with the addendum in here. It's not going to be, it'll change a little bit if you're trying to say, I'm going to use the 655 for the call and the 665 for the put.
Yeah, right. So you would use if you want. So when we talk about the buying power, 100 shares of stock, $32,000 in SPY. Instead of long call short put, $14,000. So your buying power got cut in half.
Yes, and you will see that because a short put holds up less capital than long stock.
So here, this is the long stock graph. That'll never change. This long call short put, as long as you have it on, the only time it's going to change in 35 days, and the options are gone. But like, as long as you have this on, this will replicate long stock.
And the reason it does, and let's talk about the call put parity, is because the same strike has the same extrinsic value. So by buying and selling of the same strike, you're washing extrinsic value. That's why it looks exactly like a stock.
So that was number one. Long call plus short put of the same strike equals long stock.
Right. And so this is 1 for 1. And the washing of extrinsic value is what is very key here. That's why you and I layered some other things to create some other things.
Then you've got short call plus long put equals short stock.
Just flip the cards.
I was going to say, I didn't know if it would let me carry it up, but it doesn't.
I don't know.
It doesn't.
Yeah. Can't you? Okay. No, can you hit swap? It doesn't matter. We'll do that later.
So then instead, and again, doesn't matter where you put it. I could put it up here. I can put it wherever. I can sell a call and buy a put. Doesn't, as long as I'm using the same strike, it doesn't matter.
It doesn't have to be at monies. Yeah.
And your short stack. And your short stack is going to move 1 for 1 right where the stack is trading now. Doesn't matter where you put your strike.
No, for me and not for anybody else. This is just for me. Can you hit that swap button that's right next to expiration's time decay? I want to see what happens. You see where it is?
Yeah. There you go.
There we go.
That's funny. Okay.
I didn't know what that swap button did, but now I do. Okay, good.
Perfect. Okay, so those are just like we call them combos. It's how you replicate stack. You can replicate a stack position and use half the buying power with options.
Yes, you can.
But it has the same risk. They have the same risk. Like the long stack has the same risk of being long stack 100 shares, and the short stack has the risk of being short 100 shares.
Correct. 1 for 1 until it expires.
Okay, long call is long put plus long stack. Okay. It's very easy for the long. Like if you see long call is long put plus long stack, and then long put is long call plus short stack. It's if
the
you
long put, the long put throws me off every time.
Well, if you want a synthetic long call, you're always using the other side. You're using the long put with stack. And if you want a synthetic long put, you're using a long call with stack. Yeah. So we're gonna.
But just understand the ones you want to do. If we want to get a synthetic short put, I know how to do that. You know what I mean? Like,
okay. Yeah. So you want to.
So I think those other ones where you're trying to create a long put, that's if you get assigned. So when we get assigned on something, when we're looking at it, be like, oh, we came in, then we're just like, oh, that's exactly what we have now is the long put. And remember that phone call you got from TD Ameritrade that one time when they're like, you're gonna have to close that. You're like, nope, I'm gonna wait.
So going like to that third column where it says long call plus short stack equals long put, how does someone end up in that position? If you have a call spread, let's say you have a short call spread where you're short a call and long a call, you get assigned on your short call. Now you're short stack. So you get assigned on that short call, you're short stack. So, but you still have the long call in your spread. So now you have a short call, you have no longer have your short call, you were assigned on your short call. So you have long stack, but you still have your long call because you had it part of the spread. So what you're left with is this short stack long call, and that's a long put. Yes, and I do remember that. It was like in my IRA or something, and they called me and said you can't have short stack, but I was assigned on a short call spread, and I said, dude, all I have is a long put. Like synthetically I have a long put. Just leave it alone. Leave it alone.
Because you wanted it for the day. They're like, we're going to close it for you, man. If you close it, I'm just going to go out and buy the put.
That's what I said. Oh my gosh. When that guy that was long ago. Back in, that was probably some TD guy long before Tasty.
Yeah, but so we have to deal with some other like brokerage houses now, and I think it's hysterical because they don't know what we do for a living, right? So like, would you want us to work the order, ma'am? I was like, what do you mean work the order? I can see the bid.
I know. Well, they must hate talking to us because it's like every time we talk to someone, not at the Tasty desk.
No, not the Tasty
desk. And that's
desk.
all. Like honestly, we use Tasty Trade, but we do have. People know this. We have some IG stock, which is not traded here, and we don't have that access to that on the Tasty Trade platform. So when we have to call the guys about our IG stock, they're probably afraid of us.
It's pretty funny.
Okay, so I'm gonna go back to all I did was go through these first two examples. I'm gonna go to this long call, short call. Okay, long call, short call. So if I want to, let's say I want to buy a call. Let's say I'm like, oh, I'm gonna buy the 665 call, which I don't know. No one would ever use the synthetic for this.
Well, that's what I'm saying. These are the ones that happen to you. You don't start with them.
Yeah, no one would ever say, instead of this, let me put on that rando stock position.
That's what I'm saying. So no one ever does this. These are things that happen to you.
They happen to you. So here at long call, here's the P&L, and I'm at the 665 call. If I want to mimic this trade,
which I don't, just go quickly through this one.
Well, but again, like you said, it's things that could happen to you, right? Yeah. So then long call would be long put at the 665 level.
Yep.
Oh, I got to add this long stock is let me see.
Long stock, long put.
Yes. So here, long stock, long put, and that is the same as that long call.
Yeah, that's what I'm saying. These are things that happen to you because you're using quadruple the capital for the exact same position.
But you know what? This was how I wanted to, mimic that zebra, because I had the long stock. So I had the long stock, and I thought, I don't want the risk of, and it's really, I mean, it was kind of like backwarding into this, but it's really simple. It was like, I don't want the risk of just that long stock anymore. I'd rather have a zebra, and the zebra is a 70. Gosh, and SPY it's so far down. It's like long 270 delta, short 150 delta. So if I wanted to turn this long 100 shares of stock into one long call, all I had to do is buy that put. It's the same concept as someone going out there and saying, I want to protect that stock, I'm going to buy a put. It's the same concept.
But you started with the stock. That's what I'm saying. Nobody would start with that.
No. But it's the same concept of someone having the stock and saying like, oh, I'm going to go buy that put to protect it. That's all it really did.
True.
And then the second part of the zebra is what washed the extrinsic value.
Yes.
But that's long stock, and then short stock would be, or short call would be just the opposite, where, well, so let's say, instead of selling this call, you would sell the put, and sell the stock. Sell the stock and sell the put. I'm sure this is riveting for you, Liz.
We don't have things. I think we're losing viewership right now, but the synthetics are all up there. Well, you can see.
Well, here they are. I was just going to check my work, but I think it's right.
I think you're spot on accurate. So they're all right here. Take a screenshot. This is what they are, because if you get assigned and you are something, check it out and realize you might be holding out more capital and calm down. Or if you want to create something else from what you have, go for it, right?
And to your point, if you get assigned on something, don't panic. You could look at your new position and say, oh, I'm just synthetically long a put now. Like it does, it doesn't have to be so scary. Then you kind of know what your position is and what you would want the market to do in order for that position to come in.
And if somebody's new to this is going to be like, whoa, this is too much for me. And if I was going to teach this to my kids, you're learning 4 concepts and layering them together. You're learning 4 things.
And so, and I think an important one too is down on the bottom here. Long call spread equals short put spread. Long put spread equals short call spread. That is very.
That's Synthetics 101. Pop in, show how that goes, because you can flip the cards up, meaning like you can just drag them over and see it's the exact same.
And actually, I'm going to go to SPX for this too, because a lot of people like
it
will. When you talk about, I'm going to go 3 days since we have nothing in there. So oftentimes, let's say I'm doing an iron fly here, doing this iron fly. An iron fly is just a butterfly, because we know this short call spread is the same thing as this long put spread. So, an iron fly is a butterfly. It just depends on what side you're using.
Yes. And so then that's the other thing too, is realize that they're the same thing. So we prefer the out of the monies because so if you're doing the same thing, it wouldn't matter where you are. Some people, trade, if they understand one thing about just put spreads, you can use put spreads for everything. You can use puts for everything. You can use calls for everything, but we prefer the out of the monies because they're tighter, liquid, a little bit tighter markets.
It looks like I see Frank took a screenshot of it, and I just hope it's right. That's why I said, checking my work, Frank, checking my work.
I didn't catch any errors, but that doesn't mean much. So how about that?
We're down 25. Let's hope we don't get down 100, because I don't know if my spread ever came off.
Oh no.
I don't know. I got really aggressive with my profit target. I didn't put in a 50%. I said I want to make $150, so I put in just like a 50-cent bid.
Okay, let's take a look at VIX, because yesterday was pretty interesting. The VIX was like a tell for us yesterday, right?
Ooh. Yeah. 25.
25, but it's down. So yesterday when we were looking at it, the VIX was 21 something, and it was up 5%.
But 25 is high. 25 is high for the VIX. But you want to know how
high, but it was up 5%. That was what was my why is it up 5%? That's a big move for the VIX before the market crashed.
So you want to know what is people always ask us about trying to take a position in volatility, like, oh, VIX is at 25. Let's put on a short vol position. And I know Mikey's been selling, like he'll just sell the minis, right? The mini futures. But if someone said to you, Liz, because I think it's impossible to find, if someone said, I want a short vol position right now, those options in VIX, in UVXY, in like all those products are priced to perfection that it's almost impossible to get a great position where you're like, yeah, this is going to really make a lot of money.
They are priced to perfection.
It's hard to find. If someone said, I want a short VIX position because I don't think we're going to be at 25 for long, it's so hard. Because in VIX, it doesn't really work because
I think the risk, I mean, take it from my personal trading opinion, and maybe people are better than me. I'm not good at shorting vol.
No, I'm not saying like naked short vol. I'm not saying naked short vol, but you can't use the VIX because you can't think like, oh, I think VIX will be back to 18 in 32 days. Well, what are you going to do? Buy a dollar wide, $2 wide, $1.50. How wide is this? They're priced so they price so expensive. It's priced knowing that the vol is probably going to be back down, that you're not making that much.
Yeah.
Like here's a $3 wide is trading for 212. So I guess I could buy a $3 wide that's trading for 212 and not probably have to wait 32 days to ever get paid on it.
That's just it, is it'll keep its wings up.
Yeah. And in UVXY, because I thought about that, like people want to get short vol. I mean, I guess you could buy a put zebra.
You know what though? But I think it's got to be when you're doing volatility, you have to have tight closing orders in my opinion.
So here's a put zebra. It's expensive, $1,100.
Yeah, that is expensive.
And are you surprised UVXY is only $13.60? It never, after the pop, like I feel like it, on Friday, was that Friday? It got up to 12 something, but it's only $13.60. UVXY never really had that big oomph up.
Well, that needs crash. That needs down in order to get some steam under it. Because that's like what, quadruple leveraged?
I don't know. Ultra. Does it say ultra? Usually ultra is.
And it's got the drag, right? So as volatility keeps going, it keeps going down.
Oh, wait, hold on.
Ultra.
UVXY. Pro Series Ultra. I think Ultra means 3 times.
Yeah, it's like a triple leveraged or double leveraged,
but then it goes by percentage. So when it's low, it's a lot easier for it to come down from high prices than to go up from low prices.
Correct.
But you mean maybe I'll do a put zebra in UVXY? Maybe. I was trying to think of ways to get short vol. It's hard to though.
Mikey's scalping the mini VIX.
Yeah, I don't want to do that. Oh yeah, because look here. So see, look at this. $5 wide at the money, and you're only getting 88 cents.
Mm-hmm. It's hard. I mean, it's hard to use options to do this.
They're priced. It's priced knowing that it's going to come in.
Yeah. Because remember my whole 1 year on the road, I did this whole volatility speech where I was like, "This too shall pass," and that's what the fear index is. Everything, and that's true in life. You get there, you scrape a knee, it heals. Like you get super nervous about something, it's eventually gone. This too shall pass. That's what volatility is.
Right, and we know like it's very rare for vol to stay in backwardation for very long. And I honestly want to see, I want a research team to tell me, and I'm sure they know, what's the longest period of time we've stayed in backwardation.
Jenny, look at this. Look at what's happening right now. And I want to keep an eye on the VIX too, because SPOOs are almost unchanged again. We were just down 25 and now we're unchanged. We are getting crazy action.
You know when I said I did, so I did 2 different SPX trades today. Do you want to see my second?
Sure. I did the tried and true and I'm out, by the way.
Oh, good. So this was my second, because first I put on that put spread and then we were just sitting here, like sitting at the same price.
And I was sitting at the same price ever today. What were you watching?
I was watching and we were just like up 5, up 10, up 5, up 10. We were sitting
every time I would get on my computer, it would be up 25, down 30, up 25, down 30.
Well, I'll tell you my strikes. And it's wherever my strikes are is where we seem to be sitting for as long as I was watching it. Okay, let me see. Like 66.40, 66.45. I felt like we were sitting there for a little while. And I'll go to the minute chart and let's see. And maybe it wasn't long, but I threw in a Friday, Monday calendar because I thought, yeah. It was here. It was these five.
It was these 3 minutes that we sat there.
Maybe it was these. I think it was.
I mean, honestly, that looks like a crazy violent move to me because it was up 25, down 25. I was like, what do you mean sitting here?
No, okay, this is exactly here. So you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 minutes where we're right around here. and I put on the 6635 calendar, Friday, Monday, and then just threw in a 10% GTC for it.
Are you out?
So I'm weak. I got out early. Let me see what it's worth now. 6635. 6635. 6635.
You're using the puts?
Well, at the time the puts were out of the money. I paid $15.05 for it. And I thought, well, if I could get 10% out of this, that'll be $150. But then when it was up $100, I just took it off for $100 and it didn't wait for my 150. And so here it'd be worth it's still right around $110.
But here's my question to you as you're talking. So we know calendars. I like calendars and I do like them. Yeah. But if they don't go according to plan and you're going to lose, you'd close it because it's expensive. But the good thing about calendars is if in the two-way action, if it's not going according to plan, tomorrow's a new day and we could be totally skyrocket in the other direction.
Well, and I mean, here's what I thought. Like, there's so much decay, so much premium. Like, there's so much premium in these 0 day that's going to be gone today. And I put it, slightly out of the money. And I thought, if we just can stay around here, $15 is going to decay today. If we stay around here. Now, to your point, we can get some big move and then I'm out, whatever. This 3 day will still be worth something, but you have to close it.
If it's in the money. Yeah.
It's in the money.
Only if it's in the money. Only.
And I was really torn. I was like, calls or puts. Because like you said, if one's out of the money, you can leave the other one for the next.
And then it's like, I'm not saying a free shot, but then you're rooting for one way.
Yeah, right. Then all weekend, you're like, come on.
Make money in a whammy.
So, but that's similar to an iron fly. I mean, selling that, just doing that calendar at the money is not very different than doing the iron fly.
No, they aren't.
Yeah,
they're 100%. I prefer, if you're doing the calendar or the iron fly and the SPX, I prefer the calendar because if wheels fall off scenario, you still got a shot.
But I didn't mind this, and I didn't think it wasn't like, oh, 1,500 is way too much, because the 3 day for the weekend, even if we get a little movement, is still going to have some value.
Yeah.
So even if it's away from it, you'll still be able to get something out of it at the end of the day, unless we have a violent move.
Yeah, and I mean, right now, so let me go back to it because I was watching it as we were talking. The VIX is now down 5%. It was not, because isn't that crazy? The VIX is now down 5%. Does that mean we're going to have a massive rally? Because we saw it up 5%.
And it was 25 like 5 minutes ago, right?
Yeah, and no, I mean, yesterday we saw it. It was a precursor to what was going to happen, where we saw it up 5% and then we crashed.
But I mean, wasn't it literally 5 minutes ago?
Oh yeah, that's what I'm saying. When you're like, we're sitting here. I was like, what market are you watching?
Hey, I was like, we keep sitting in here. I'm going to throw this calendar in. I think we're just going to sit here.
I was like, you might have just been like, I think it's sitting here. No, today's a day not sitting.
Okay. It was right here. It was as I was getting ready for the show. And thought, we're just sitting here.
All right, let's pop back into Twitter. We have about 10 minutes left. I just want to make sure we get to everybody.
Okay. Yeah, because I don't think we've gone into Twitter yet.
No, I know.
Okay, so here we have Mikey, TGF ladies. $50.
And I do think there's ones above Mikey. I'm not 100% sure, and I will look for you, but yes.
Put the long, $50 in my pocket, put the long call spread on yesterday at close, hoping for a pop up today. Liz, please do your thing.
I'm on it.
Hey, 6680, Mikey, I think that's in the realm. Totally. I have a butterfly at the 6800, and I actually bought my short calls back. Wishful thinking. and Eric, happy Friday. IV rank jumped. Yes, I put on a single 7-lot iron condor at 15 delta, 145 points wide. You see how wide you're getting?
You are getting pretty wide. You are getting very wide. And then I know above Mikey, people were coming in, if you don't mind refreshing, and then we'll go back to Eric, because I think Eric's got
Jack Tucker, good to see you, Jack. If you want to get small with short vol, try selling a VXM future.
That's what Mikey's been doing. The VXM future. Yeah.
Yeah. And you know what? It'd be off already. Like when we said it on the show, VIX was 25, and now it'd probably be off.
It would be off. And that's just it. Is I feel like you got to be tight. You got to get tight outs, like have a lower percentage when you're getting movement like this.
Finally, Friday with a work let up. So I'm on platform 3 tranches, and honestly, like 15,900 in premium. Jack, with this vol, I was thinking to myself as I went to my platform to sell my 0 DTE, I said to myself, be Jack Tucker, be Jack Tucker, be Jack Tucker. And I was still like a weenie and didn't do much.
I know. I want to be Jack Tucker when I grow up.
I know.
Yeah, I love it. I love it. So good. Like he's got his 3 tranches in, and so he's collected 15,900 in premium, watching for today. But I know I do think he sets GTCs or he watches.
Yeah. Yeah. But I was trying. And then I just can never pull the trigger. Okay. AI gone wrong and done for the day. He's done for the day. 1469. Yeah. Great.
Yeah. Which is wonderful. Hopefully he's out fishing. Thank you, Mr. Market. And that UVXY mitigation insurance only cost. Oh, what did they do there? Can you read the UVXY? I think it's highlighted.
UVXY. You said that's highlighted? No, that's Meta. That's a Meta.
Oh, and then it says what Meta put?
Bought 10 October 17, 14 calls for 22 cents. So honestly, that's not a bad plan, Eric. I never really looked through this. So if he's doing the 0-day trades and on a Friday expiration, you have them. So you don't have them every day. I don't think they have we don't have the UVXY daily.
They have weeklies, but they don't have they have weeklies for sure.
Yeah. But on a Friday, there's the nice thing on a Friday is you have this. So like, let's say maybe I should have done this, load up on those put spreads and then buy some of these UVXY calls. It makes sense.
I mean, those are cheap ways to do it. And that's the greatest thing about options, having the 0 DTEs. It's cheaper to buy your insurance policies, way cheaper.
But it doesn't, like, this only works on a Friday where you've got these, because otherwise next week's will be a lot more expensive.
Yeah.
They're $1 instead of a dime.
Yeah.
But I like that. Eric, if I would have thought of that this morning, I would have sold more SPX put spreads and then just bought some UVXY calls. And let me see.
But the hard part about that, though, Jenny, is hold on for 1 second. Let's just. I don't know if it's going to be 1-for-1. So you got $2 on a $25 wide SPX put spread, and then what are you going to do? Go and spend $100 on UVXY? You're giving up 50% of your profits.
No, I would have had done like more put spreads, or maybe brought them up more.
Well, that's what I'm saying. Bringing them up to collect more. You'd need to.
Yeah, it would have brought them up
more. If you did more, it's kind of hard.
That's what I'm trying to see. So he's got a 10 lot of UVXYs. So he took like $100 loss on them. He bought them for 22 cents, sold them out for 12. And then as far as the puts go, he's got varying positions here.
Yeah, but he's done for the day. He's out. When he says done, that's what's great about Blue Wackadoo. He's done, meaning like he's on his fishing boat. It's already cast in the water. He's not even watching this segment.
But we don't think of like selling our put spread in SPX. We're never thinking of, let's hedge it for the day with some long vol. I don't really think of that. I'm glad this just kind of puts the thought in your head. And that's why we love having this community of traders sharing ideas.
Yeah. Oh, for sure. For sure. And I'm telling you, I do think options are like a menu. Blue Wackadoo is doing great. Jack Tucker is doing great, right? So everybody's doing very well, and they're doing different things.
I'm smiling when I see this because Ashvin, when he says Liz and Jenny are fantastic teachers, says no one ever. Nobody's ever said that. That we're fantastic teachers.
I feel like he's being held hostage and being forced to write that by Frank the Great because you're right. The only thing I've ever heard, Ashvin, is slow down.
Mikey, what do we think about selling a second call against a zebra, then possibly being able to take it off for 25? Yeah, Mikey. Sure. Like, so if you have the zebra, you have the unlimited profit potential. If you haven't sold one call against it, then if you sell one call against it and you're hoping for a pullback, take that call off. Sure. But if you're already sold a call against a zebra and then you're going to sell another one, there are people who will sell, 3 30 delta calls against 100 shares, but I don't like that.
Yeah, Mikey's clear of the concept too, and to try it. If we try it, well, I think what everybody's doing in this market right now, Jenny, is saying, "Oh my God, we were up 25, down 25, up 25, down 25." What can you do? Because if you're selling a call, take it off, and then when you're up, take off your put spread. We're up right now. If you want to put back on that SPY, go for it.
No.
But you see what I'm saying? We were down when we took it off. We're up now. I mean, it's been. You're getting if you're trading options right now. You're right. If you're bearish, you're right. If you're bullish, you're right. You're right.
You're getting the two-way action.
Yes.
Let me make sure with the movement we're getting that we have no more in the money signs. No.
30.53.
No. And I don't know. Do we have anything expiring today? 31, 11, 11, 11. I'm just going to quick glance. Anything expiring today?
Citigroup. But that's gone. It's a residual option.
Oh, that was a calendar. Our old calendar, 105, Citigroup.
Yeah.
Did you see, I heard Vanetta talk about Jeffries in the news that their stock took a hit today.
Did it?
Yeah. Speaking of our buddies over at Jeffries.
Oh.
When you talked to him, did you ask him what was going on?
No, because I don't care. I mean, I'm not saying I don't care about their stock. I did speak with them yesterday. If you're watching, Patrick, hello.
Okay, so this is our last chance. 67.80. Will we get there, Liz?
67.80. Where are you looking at this?
Our SPX butterfly. Our SPX Berkowing butterfly.
Hey, we locked in a profit, didn't we?
Yeah, but like when I said I wishful thinking, this is what I bought back. I had my.
Oh, butterfly. This is what you bought back. Okay, this is good entertainment.
I want to see what Jeffries Financial Group. Oh, it's up now. Was it down yesterday? Oh, it was yesterday. It was.
Ask Patrick, how you doing with your stock move?
That was yesterday. You called yesterday, all chipper, and he's like, "Don't you know what's going on?"
He did not say that to me. No, he was very, very, very nice and professional.
Their stock was down from the day before, previous day's close, 54.60, and then down.
I do think it's a big move yesterday, but can we just talk about from August? It went from 70 to 48. Like it's yesterday was a bad move, but it's been a bad month.
Yeah, and we like our guys over there.
Yeah.
We never have traded them. I wonder how liquid these are.
It says 3.75 million, but I've never traded them. And look at this, it's a $50 stock with 250 wide strikes. That shows me non-liquidity.
Hey, we might have found something, Liz. Look at these puts. The 45 puts, it's trading 51 after the fall from 70. The 45 puts for $180 only use $450. And they're over 1,000 open interest.
1,000.
I'm selling them.
Sure, go for it. I have no problem. I have no problem adding to the. We've closed a lot, so you've got. Hold on, let me look at this. We've got a decent amount of buying power.
70 rank. Okay. Yeah. 8. Okay. I sold them.
And put a GTC in for it. I'll push everything through.
Are you pushing it through?
Yeah, I got both sides.
All right. So now we're in Jeffries. So now we know we'll keep an eye on it. So before you call our buddy over there, you'll have an idea of what the stock's doing.
Are you guys doing okay? Okay, so that is pushed out.
All right, I think we're out of time. I'm gonna make sure I got to everyone on Twitter. Just want to double check. Oh no, here we've got another one coming in. Good morning, ladies. I've got myself John Blount, welcome. I've got myself a Friday condor, 10 points wide, just hoping we don't get any crazy tweets. Oh yeah.
That's true. I mean, we tweet crazy, but we don't move the market. So
okay. All right, that's good.
I love it. Good luck. Good luck. And he's got a big wide range, so hopefully this will you'll get to keep all the premium.
And I'm scrolling to this a little bit. I'm just scrolling and scrolling. But I hate this outfit, but we took new pictures, but for some reason nobody's changed the pictures. Anyway, I would watch this if you didn't. It's our 0 DTE segment from this week, and like next week is going to be, this is phase 1 of our selling put spreads. Next week's going to build on this. So if you didn't see it, check it out.
Yeah, and there were a bunch of questions that we're going to answer from there as well about this. So they're going to build on top of each other. So if you, to your point, it's 12 minutes, 95 seconds.
The best 12 minutes of your weekend.
I do like this, and I've been pretty consistent. So I'm trying to stay consistent with them.
And I'm not. I'm all over the place.
She's all over the place. That's why I gotta get my hands on her to rein her in.
All right, everybody. Have a wonderful weekend. Liz, have a fabulous time in Atlanta.
I will. Thanks. I'll take pictures.
Yeah.
All right, everybody. Have a wonderful weekend. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you on Monday.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
What's up, everyone? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal, and it is kind of a dull Friday, given the craziness we've seen in the markets. E-minis only up 18, NASDAQ up 60, well within the projected implied volatility for the day, and definitely within ranges that we've seen recently. Bitcoin down 920, but there's still some movers under the hood. Jamal, how you doing?
Doing great, my friend. And yeah, you're right. It's dull, but at the same time, the S&Ps are jumpy. It feels it's been kind of moving all over the place, but at the same, it's like running in place in a way, I guess, to sort of use that analogy compared to what you said. It feels like we're running in place in some type of way. I guess it is expiration. And you know, the nicest thing about the 4 years I've been at Tasty, I don't pay attention to expiration as much because I don't really trade many things around. Like, obviously, you know, big expirations, meaning like monthly ones, I used to have more trades on, but I really don't these days at all because, again, I usually move things prior to 21 days.
Yeah. I think it's always interesting when you have big volume days that move in particular ways, but I think, like you said, this market's a little jumpy. I think there's hesitance to, roll into the same idea. And I think that maybe we're seeing kind of a chop sideways because of that.
I'll tell you though, I'm curious going forward what things are going to look like. I feel like this was a fascinating week about like the different things that happened and what might carry over to the next week. That banking situation that kind of popped up in the last 24 hours, it's interesting, and some of the stuff with the smaller banks, the KREs of the world, the Zions of the world, the Wall world, that is something that I think is look, in this environment where you got gold mooning, you got silver mooning, you got Bitcoin starting to struggle, and the markets are still trying to figure out what they're doing with regard to whether they care or not about the government shutdown. They definitely care about what's going on in China and the U.S. It makes for a spicy environment, Mikey.
Yeah, I couldn't agree more. And yeah, you've got your individual sectors that are kind of mooning and exploding, for lack of better words. But yeah, we're seeing gold take a little breather today. We'll see if this is reversed by the end of the day.
Watch your mouth.
Gold and silver actually leading the way, silver specifically leading the way to the downside. If we look at the CME watch list here, down almost 5% today. And gold down way less, down only 1%. So that's an interesting divergence from at least the magnitude of the moves that we've been seeing. Lean hogs, or live cattle, sorry. I always look at LE and think lean hogs, but
I know, right? Makes sense. Seems like they should fix that nomenclature. I mean, we fixed Tasty Trade and we created Tasty Live just to make the branding better. They should do that because I think lean hogs too sometimes.
Yeah. But yeah, big movement to the downside. A lot of other products within 1%, which is interesting given the week that we've had. But to the upside, natty gas, heating oil, gasoline. So interesting to see those energy products moving higher, and silver down 5%. Huge move there. But yes.
So you're in the cattle.
I'm deep in the cattle. Yes. I should have used a different phrase there.
No, that's perfect.
Oh my god! But yes, this position, I forget what I did first. I had a short put spread on first, I think. Yeah, I had a short put spread, and then I layered on a short call spread. But yeah, working out nicely today into the sell-off. I was getting tested to the upside, and we'll see where we can get, if we can get some premium here. But sitting in between the range, closer to the upside, of course, 245, 247 on the call spread, 230, 228 on the put spread. But yeah, this is one of those things. Whenever we have Thomas on Tuesday, he brings the heat of research and he gives us something to dive into. So this week it was crude oil. Believe last week was live cattle. But yeah, it's always interesting to look under the hood in some of these products and get some supply and demand data and generate a thesis from there.
I see you're back in the crude. I was trying to. I was looking at it too. I don't know. I'm a little skeptical. I feel like it could touch 55 right now. So I'm gonna wait. I got so many different trades on that there's some things like a crude, which I think is at a good level, that now I just like, I want it to be awesome, because if I'm going to put it on, it means I'm probably, obviously, I mean, I'm using like, I don't know, I'm using quite a bit of buying power right about now. I'm using 80%. So I kind of want to have a situation where if I'm going to jump into that, I need to take something else off, probably.
Yeah, I hear you there. Crude oil. Yeah, we talked about how, and Thomas brought up how this could be the new range, kind of between 54, 53, and this upper level here, 63, 64.
Yeah.
But I was on the last call yesterday with Nick, and we were talking about how we like to get long at 60, and now here we are at 57 for the first time in like 6 months. So I think long term, like short term, yes, there can absolutely be more volatility. We could easily go down to 55, 54, 53.
Yeah.
But long term, if I liked getting in at 60, I love getting in at 57. So that's where I'm at. And it's just one contract with the micro crude static contract. So I can hold this perpetually. Crude can go anywhere to the downside, and it's not going to be the end of the world for this portfolio. Obviously, we want it higher, but that's how I've been trading this thing, is kind of just waiting for price extremes and then taking the other side.
Yeah, no, the nice thing is that you could trade around it. Even if it does go lower, you can decide other ways to trade around it if you want. I hope you win on it, of course. For me, for now, I'm just going to wait to 55 because I have a whole bunch of things on, and it's got to be lower for me to really kind of get in. It's got to be a better value add for me personally.
Love it.
Hope you win.
So I had my wires crossed. So I actually did start with an iron condor here in LE. And then in Natty Gas, this is the one where I had the short call spread on. So I bought the micro Natty Gas contract and then sold a call spread above where I would basically offset all the risk at 4748. And into the sell-off, I sold a put spread. So now I have kind of a somewhat covered iron condor type scenario here.
Yeah.
And I added the put spread. I think Katie had a trade idea and I followed into that. So I have an iron condor Natty Gas paired with a long contract in the micro that offsets all the risk on the upside. So interesting trade there.
Word.
Got to see a little more pop here, but these 6-7 days have not been fun. But again, it's a micro contract, another one I can just hold until we're right. IBIT down to 60, kind of crazy.
Yeah,
it was actually lower earlier. Significantly lower earlier, below 60. But what a slide down. You would think that this might be paired with an upside moving gold and silver, given it's kind of the anti-fiat narrative. But what do you make of this? Are you in IBIT at all?
I literally just got in today, and I'm, because of the fashion of this move more recently, I'm playing for a bounce more than anything. So yeah, I did a zebra today. Did a little further. I went to Dece because again, I think the vol is high. And this is one of those situations where hopefully you could probably win on both, but the vol is definitely high, and so I went out a little bit further. and a little bit more in the money, right? Instead of just going like with the 58.60, I went 56.58 and just kind of playing it for a bounce because we've kind of seen some of this before. Now, to be fair, this is not that huge of a down move for Bitcoin. I mean, it's only down 18%. By historical standards, but I would say that this is probably a decent down move for the new Bitcoin. And what I mean by that, we've talked about this, like the amount of adoption has led to some calming down of this product in general. I mean, big, a regular move used to be like 50% in a short amount of time. And so I think this is definitely more of the type of move for something that's matured. So I'm playing it for a bounce.
Cool. Love it. Yeah, I'm naturally leaning long with this strangle. I've got the 65.75 out in November. I actually looked at potentially bringing this call down closer to like a straddle, or even just going to like the at the money or at the expected move, new expected move for the cycle. But like 80 cents doesn't really move the needle. And that's because, and I haven't done this because there's still so much call skew here, and the call skew just keeps the far out of the money options bid, more bid than you would think. And you can see it to the downside. Like if you look at the 75, which is 15 points higher than the market price of 60, trading for 60 cents. If you look at the downside equivalent at 45, it's trading for 50 cents. So you can see that the call skew is there, and it just prevents you from getting a higher credit roll going closer to the price. So like I don't need 80 cents here. What I do need is upside space, and I don't want to give up that space. This would be basically moving my risk 7 points down for 80 cents. Don't really like that risk reward. I would do that if I was getting well over $1. So like if I was moving 7 points down, I want to see closer to $2 in risk, because that would be 1/3 of the risk that I'm adding to the position. So not seeing that, and I want to lean long anyways.
Yeah, I couldn't agree more. I mean, that's just not enough. And you're right. I mean, if it does bounce back and you start to win on that short put, I mean, you're definitely going to be out on that. You're not going to win as much on that 68 strike. So I totally agree.
Yeah. But yeah, I think if we get a bounce here, it will set up a prime situation to roll from November to December, especially if we get back to 65, where I can capture all that extrinsic value and then still capitalize on higher premium call skew going to December. But we're looking good regardless. Even with this in the money move, we're still totally solid on this position for the entire year.
Nice.
SPX getting real close to the 0 day or 1 day into a 0 day iron condor. So this has been kind of like a cookie cutter setup that I've done almost every day this week, where at around 2 o'clock, 1:30, 2:30, just like an hour before the close, I'll go to the expected move, sell an iron condor for $200, 5 points wide. So I'm collecting 200, risking 300, and I'm carrying the overnight risk, but I'm basically setting up a chicken iron condor where I'm picking up 40% of the width of the spreads. And it's been good. It's been nice. But in the morning, just setting a GTC order to close it for $100, and we're getting closer today. We've got about 30 points of wiggle room to the upside and 100 points to the downside. So we should be good as long as we just chop around here for another like 30, 40 minutes. I would assume that this would get closer to that $100.
Nice, man. I mean, have you won on every one of those this week?
I think so.
Yeah, I think so.
Yeah.
Because it's been that kind of week where we've chopped at times.
Yeah, here we go. Here's the order chains. Yeah. $100, $100, $100, $120, $100, $100, 65. So yeah, it's been good. It's been a great trade. The 0 day strikes again, maybe. But yeah, it's nice. You just got to keep the risk super small. I'm risking $300 each time, but I'm doing it every day. So that's the big difference. Is like I'm not doing it once for a 45-day cycle. I'm doing it every single day. So I think you got to size way down when you're doing that, because you can run into a scenario where you have 5-6 losers in a row. I think we've been fortunate with the two-sided action trading range where I set the range, and even if it's in the money, like I've had multiple situations this week where it's in the money in the morning, but then you get the reversal intraday, and that just destroys the value of those spreads. So have a GTC order in there just in case you miss like a 5-minute window where the market sell off or rally in your favor. But yeah, using GTCs to take profits, and I'm letting the losers go because I would hate to close a loser and then watch it reverse and have that loser turn into a winner, which has happened multiple times this week. So yeah, we'll keep doing these as long as they are working.
Yeah, it's kind of nice as I'm sitting here looking at the ranges like for the week. Like Monday's range was 50 point. And again, I'm just looking at SPX, not looking at ES here, but from open to close, essentially the range was 48 points on Monday. It was 125 points on Tuesday, 112 points on Wednesday, 115 points yesterday, and as of right now, 54 points. So Monday and today have been the lowest ranges intraday versus the rest of the week, and you're able to still kind of win on those is pretty nice.
Yep.
And I think your point is well said. Like, size down on these. I think the idea of having big ones of these, big ones meaning like, some people love to do 3, 4, 5. It's a scary environment for that because, I mean, again, you've seen most of the ranges are well over 100 except for Monday and Friday is not over yet. Just be a little careful about having a whole bunch of these right now because this is an environment where we're moving pretty big at times. And if you have multiples of these and you have wider strikes, you can get caught the wrong way at some point.
Yeah, definitely. And can't emphasize enough, like you're doing these every day. So for me, a 5-point wide collecting $200 with $300 in risk, that's $1,500 in risk per week. So that is still pretty big, especially if I have 5 losers in a row. So yeah, size way down on these things, and it just gives you the longevity to do them consistently. And consistently, we've had good results with these. Anything else catching your eye?
Yeah, the gold move. Of course, we'll see how long it stays here. But as of now, gold is down. I did do a GDX straddle today. I thought the vol was fairly elevated, and I'm still short this MGC contract, not GC. Good Lord, MGC contract from 4,000. So I've just been waiting for this type of reversal, honestly. And I don't necessarily recommend it. I mean, I really don't. I'm not saying it's a recommendable idea, but I am banking on this to pull back a little bit more. I don't know how much. I mean, this has been such a strong move. And so I might, one of the things I did with the move, whenever that was, that must have been last week, Thursday, I did sell a GLD put spread at some point. That's probably going to be the plan, possibly here today, either a GLD put spread at this point, since I already sold the Strangle and GDX. And I'll probably just roll like that until I actually really get paid on this short future here.
Love it. Yeah. Sometimes that's a nice thing when you have a static micro contract, like similar to what I've got in Natty Gas. Like I have the static long, but then you can still reduce basis with a spread against it. So if you're static short the micro GC, you could sell a put spread in GC or GLD, take a little of that hedgeability there. But yeah, totally looking for a reversal with you. I actually put on a new calendar spread yesterday. So into the rally, we put on a super small 370 long December, short November put calendar spread. This is $200 in risk. It's not going to move really that much unless we see a bigger sell-off here. But I still have this 345, 335 put diagonal spread, which is hilariously like 50 points out of the money now. Just an insane move, but still plenty of time. And with the magnitude of the upside move, you could easily see gold slip aggressively just because this move has been like a squeezy type move, and you could very well see this thing move in the opposite direction just as quickly. So I think the question for me is, do you see a big sell-off in gold paired with a big rally in the equities markets. I think it would make sense for that to happen, especially if liquidation is coming out of GLD and markets are kind of back down here where they are. But we'll have to see where that capital goes if it does happen.
I mean, I could see either, honestly, just because of the way that gold has moved. We've seen gold move up on big days up in the market, and we've seen gold move up on big down days in the market. It's just really had this narrative flexibility, which again, I thought is a really great term coined by none other than Chris Vecchio. I mean, it's true though. I mean, that's been a lot of the gold move. It didn't matter what was going on in equities. Gold was just kind of like a honey badger. It really didn't care. So I wouldn't be surprised either way. I can make a case for either one of them to happen, but we need gold to be down. That's really what we need more than anything.
Yep. If you want to join us on the YouTube channel, we are streaming live there. Just pop over to Tasty Live. You can throw in your trade ideas and questions along the right-hand side chat. I see a lot of the regulars in here. Yeah. Welcome. Happy Friday. I've got the tastytrade.com/money match link pinned to the top of the YouTube chat. If you are new to Tasty, it's a great incentive to check out the platform. You can be as active or as dormant as you'd like, but 30-day commission-free trading, 1% cash match on any and all deposits up to a $2,000 match in that 30-day window. So if you want to check it out with a couple $1,000s and then add more if you want to, you totally can. You get matched on both of those or any of those deposits. So check it out. All right. Let's see. Top of the YouTube chat, the SPX Iron Condor looking good for us. I think I'll close the put side and let the call side sit tight for a bit. Yeah, you could totally do that. I mean, if you isolate this put spread, it's trading for 20 cents, but it's 100 points out of the money. I don't see it becoming a problem at all. And if we get closer, like if we sell off closer to that level, it's only going to help the total spread lose value. So I'm just going to leave it on. But yeah, if you want to take it off for 20 cents and then leg out of the call spread into like a 5-point sell-off, you could probably get out quicker than I would be able to. What percentage of dry powder do you have right now with the frothy market? So Jamal, you said you're pretty invested with different positions. What's your biggest position that you have?
Gosh, I should know that off my head, top of my head. My biggest position currently is it's probably, I guess, my strangle that I got in TSM. I just put that on yesterday, so it's cool. It's either that or this Accenture strangle, which I think I don't know. I'm leaning towards probably closing by the end of the day. I'm probably going to close this Accenture strangle probably. So it's one of those two, but short strangles, and they're like $3,000 in buying power.
There you go. Yeah, I think my biggest position is definitely my IBIT strangle, just because IBIT uses like $2,500 in buying power, I believe. We could look and we could check it out right now, but this has been a core position. So, and I know that I'm holding this, $2,400. So I know I'm holding this all year, so I'm okay with having a bigger percentage of my capital at play there. It's also, yes, IBIT and Bitcoin can be volatile, but it is still a product that is manageable. So what I mean by that is it's not a year-long trade in an equity, which can be a lot harder to manage when you have those 20%, 30% gap ups or downs in the overnight session. But yeah, totally comfortable with this. And it's been such a great trade so far that I have such a big credit that it's not like IBIT basically has to crash or just go straight to the moon with no stopping for me to run into trouble. But even at that point, I can still manipulate this position. Like I've done it before where if we do get a huge rally to the upside, I'll just shift the whole thing up. So if we go from 60 all the way to 75 in the matter of like 2 weeks, I'll just bring the 65-75 strangle up to a 75-85 strangle and just make sure I don't have any upside risk. So, or near-term upside risk. So totally fine there. But yeah, I'm not really using that much of this portfolio. It looks like I have a lot of positions on, But if you look at the cost of all these positions, and almost all of these are defined risk, except for micro crude, micro natty gas. Those are larger notional value positions, but they don't use that much buying power. And then everything else is pretty much defined risk. Iron condors, diagonal spreads, calendar spreads, what have you. And almost all these positions, if we look at the cost here, like the only one that is over $1,000 is my IBIT premium that I've collected. But all the rest of these, $300, $400, $800, 6, 5, 6, 3, 3, like all these are very small positions. So I'm only using like maybe 20% of the portfolio right now. But I would love to throw on some new positions since this market is going crazy.
It is doing that, that's for sure. What earnings do we have next week, BT Dubs?
Netflix, Tesla, and some others. Let's see.
Yeah, it starts to get real a little bit.
Yeah. Netflix is the first of the big ones next week on the 21st after the close. So that is Tuesday after the close.
Yep.
And then we've got Tesla on Wednesday after the close. And there's a ton of other fringe products next week. But the following week is when you will get the rest of the Mag 7, basically. Apple, Amazon, Microsoft, Google. I believe all four of those will be the following week, the end of October. So lots of tradable opportunities to be sure.
I don't know how much or how I will trade earnings yet. And by how, what I mean by that, and I think I've said this before, like I usually play earnings for moves. I usually use calendar calls. And specifically calendar calls. It's usually in names where I think that could actually move and go up. And I don't know how I feel about this environment yet. So I think that Netflix one will be really interesting. How they move, I think, will give an idea of how the rest of the Mag 7 will move, or if they have big movements.
Yeah, Netflix is crazy. 100-point expected move on a $1,100, $1,200 stock. So still pretty big of a notional value shift there is projected. So let's say 7-8%. Normally we see between 5 and 10% for earnings announcements. We had the bank stocks and like American Express. That one was before the market today, up 20 points. That was absolutely outside of the expected range. I think this expected range was like 3%. I think it was only like 10 points.
Wow.
So I like to I don't really trade the ones that have under 5%, especially for short premium. Long premium directional shots, it makes it much cheaper to do if you get a blowout move like this. But for selling premium, I'd rather see this, like 100-point range. For a call calendar spread, you could do you do the 7-14 day, like the weekly and then the next week? Generally?
Yeah, I mean, preferably I would love a situation where earnings are coming up in a couple of days and you're able to sort of, preferably I would like to do one where you could sell ahead of earnings and buy the one that actually captures earnings. But yeah, I did just flip it literally yesterday, and now I have the 7-day versus 14-day.
Nice. Yeah, these are super small. You can get super small in a product like this. And you can have a nice return for sure, especially if you get the upside move. I think the tough thing is when you're dealing with earnings announcements, you want to be able to gauge what the drop in implied volatility is. So like, let's say I bought November and I sold the weekly. I know the weekly is going to be worthless by Friday. The November on the analysis tab, I'd probably bake in a 10% volatility collapse because you can see that these are like 38, 37. This is 43, so it's elevated. But all of these are going to flatline and go, I would say, to like 35, 34, 33. So you got to bake that in. With the short-term ones, so like long the 14-day, short the 7-day, you can do the same analysis, but just look at this one. So like the 14-day, 56%. After earnings on the 21st, coming into the 22nd, I would imagine that this 56% drops closer to these ones. So maybe you bake in like a 15, 20% collapse, and we can look at what that would look like for these shorter term ones. So if we push this to the 24th, which would be expiration Friday, assuming you hold this all the way to that point, Or we could even do the 22nd if you just assume you're going to close it the next day. And then we drop this down like 15%. That'll bring this down to 41. This one we can bring down 2 because that's obviously going to be the case. Let's bring this down like 20% since we'll see a little divergence there. And yeah, you can have a super nice return on capital on a trade like this, especially if you get the upside move and you get a lot of premium out, because this premium is crazy. Like you're buying this option for $1,700 14 days out, and you're selling this option for $1,400 7 days out. So you're basically reducing cost basis on the long option by 90%, 80%, and you've got plenty of time for this to hold value. So I love this as a risk reward play, especially in these super high price products where you can do this for $300. And even if you get a downside move, as long as it's not too crazy of a downside move, this can still be profitable, especially if you hold this to Friday. And you can see this here. So yeah, love it.
That's sweet, dude. I actually didn't know that you could model that. And again, that's something that I'm aware of because that's something that I'm used to doing and I've done in the past when I traded at a firm. But I didn't realize you could. I didn't even know that this. I mean, I knew that this was here, but I never really paid attention down there. Glad you showed me that because that's sweet. Like you can model like what your volatility will look like and what a vol crush does to a position.
Yeah, we do that. We usually do that for earnings just to like ballpark, a vol crush. Which is pretty predictable when you look at these markets. If we look at like AXP right now, you can see that in real time. Like AXP yesterday had much higher implied volatility, but now you can see all of these are flatlined at 33%, 32%. So we can just model what we think it's going to look like, and it's going to be pretty close. Like we're never really too far off. I think you can be more far off when you're modeling the 7-day and 14-day because these ones can stay elevated a little bit, like you're seeing here. But still, these two have flatlined to each other. So these two were probably closer to like 60, 70% yesterday, and now they flatlined to 40. So yeah, I think in practice, and if the more you do it, like if you do this trade consistently in Netflix and others where you're buying the next week out, selling the earnings weekly, you'll get a better feel for how these collapse after the fact. But we can keep an eye on this, and I like this trade a lot. I think I'm going to do this trade. Yeah, I'm just going to throw this on. I like this.
Yeah, I mean, it's a cheap play, right? And just immediate fill.
Don't love the immediate fills. Hate them.
Yeah.
The immediate fill just makes me feel like, oh, yeah, you want this? Sure. Here
Exactly.
You go.
Exactly.
But yeah, I like that. I like that trade for the super high price product like Netflix. And it's, $300. And again, even if you get a sell off here, the 14-day, yes, it's going to lose a lot of value, but as long as you still have like $300 or $200 in value, it's not going to be that big of a hit to this trade. So love it. Natty gas to the moon. Check out Boyle, Sill. Yeah, big move there.
Yeah.
Yeah. Natty gas has been just in the dumps. This could even be like a short covering. This feels like a short covering rally here because this has just been shorted to death, and now here we are with a little micro rally on low volume. Could be a little short covering for the weekend.
It's this, yeah, it is possibly is. There's at first I was just looking to see if maybe the contract was expiring soon, but there's 11 days left on the November contract, so it's not expiring soon. So yeah, I think it's just a little short covering.
Yep. Is the Iron Condor Natty Gas on Tasty? Yes, it is, but it's old because I did it like last week. Yeah, I did the Iron Condor 8 days ago, 10 days ago. But if you wanted to do a new one, you could do something similar. But yeah, it's basically just a covered Iron Condor, you'd say, to the upside. So when you buy a micro product, so like when I bought this micro Natty Gas product, and if you bought it right now at 375, you know that if you sold a call spread in the big product against it at like 4041, your gains on the micro contract that you're static long can offset all of your risk in that short call spread. So you just got to do some math and figure it out. But yeah, it's a nice trade to pair together. Trump wants gas lower. Crude goes lower. It's going lower.
Yeah, it's going lower.
Fill up your car now.
Yeah. In fact, I got to fill up my car today. But yeah.
I might do it just for fun. Just get those low prices, you know?
Right.
Let's see. What's a chicken iron condor? Is it just a Johnny iron condor? Kind of, yeah. So chicken iron condor, or I should say a regular iron condor, if we were to do one for like Monday, a regular iron condor is where you are collecting 1/3 the width. So if you do like a 6570, 6560 on the downside, and then a 6330, 6730, 6740 to the upside,
bingo.
You're collecting 3 and risking 7. So this is your 1/3 the width setup. A chicken iron condor is where you bring both sides in to collect closer to half the width of the risk. So this is more like a chicken iron condor where you're collecting $400, risking 6. So anywhere between 40 and 50% of the width is what we're looking for with a chicken iron condor. So if you're risking $10, or if the value of the spread is $10 maximum, you want to collect closer to 5 or between 4 and 5 for a chicken setup. So it ultimately gives you more profit potential if you're right and there's a chop, but it protects you if there's a huge blowout where both of the trades would have been losers. So if we come back to the market Monday and it's down 200 points, both of these iron condors would be losers because you'd be in the money, but the chicken would be less of a loser because you're collecting more up front. So that's how I've been setting them up. I kind of like if I'm holding overnight risk, I would rather have a chicken iron condor than a out of the money one that's collecting less, because overnight risk to me means gap risk, and I want to be protected against the gap risk a little bit.
Mm-hmm. Did you change your settings at the bottom? Like, I've just noticed how your CVAR, your delta, your pop are in different spots than mine.
I don't.
You've never done that. Okay. Yeah.
I don't. Yeah, I don't remember. But
I don't remember neither.
Yeah, it's a good call out. Maybe I changed it like in some other place and it reflected
Probably did. Yeah.
I know some people use the strike flipper. So if you click the strike arrow at the top, it'll invert the strikes. So I still have no idea why the puts are on the right side going up as the price goes down and the calls on the opposite side. So if you want more of like a normal setup where the calls going out of the money to the upside are on the left and the puts going out of the money to the downside are on the right, you can just flip that because this makes a lot more sense visually.
It does to you? See, it totally doesn't to me. I mean, I just from the way I learned and just from everything I think of, I don't know, when I think of stocks going down, I think of them heading in that direction and puts, like I just think of that way.
Yeah. I mean, it's definitely like a legacy setup for sure.
Are you calling me legacy, Mikey?
I'm legacy too. And that's if I was teaching someone from scratch, I would definitely flip it and be 100%. Because a price going up should be going up on the screen in my mind to someone new. Like this is already complex enough. Like I don't need to tell them, no. If a price is going up, it's going down on the screen. But I'm also a guy, like I have you know how people have their scroll pads reversed?
Yeah.
Like I think Apple does it by default, where like when you scroll up or you move your hand up, it actually goes down.
Yeah, right.
That breaks my brain. I have to immediately flip it.
Oh, you're one of those. See, okay, that makes sense. That makes sense.
Yep. But yeah, either way you want to see it, you can see it. You can just click this strike button. There we go. Let's see. Oracle down 20. Oh, there's the SPX fill. $100.
Oracle's down 20 now, huh?
Wow. So let's get on. I actually do want to do one for Monday. Let's throw this on.
I was hoping you'd say that. I was thinking the same thing, actually.
Yeah, 65.80. So yeah, I mean, just going right to the orange bar expected move just gives you $200 like almost every time. So 67.15, 67.20, 65.80, 65.75. So this covers a nice wide range here. And yeah, I think we will go with that. Let's route it.
Yeah, 2 bones.
Beautiful. All right, Oracle. Yeah, wow. Big move. Did they have earnings or no?
Well, they had that conference this week, and I think they kind of, it's just the end of the week conference. You know what I mean? Like probably people were expecting more, and it just wasn't, and so sell off, whatever. I did have a Pringle in here early in the week. I closed it out because this thing was just moves around too much, and this is exactly what I'm talking about. It moves around too much, and I'm just not being able to harvest the ball, so I closed it. Glad I did.
Yeah, it can be tough sometimes. I think if you're doing anything now, like if you're doing a Strangler Iron Condor, you can do the November cycle. The December cycle, you can see the boost in implied volatility from the low 50s to the high 50s in the December cycle tells you that there's an earnings cycle priced in there. But 35 days, plenty of time if you wanted to throw something on new. But I'm in the same boat as you. I think this one is just chopping around too much. And you've got this liquidity gap risk here too. If it breaks down, you can see this thing slide all the way back down here. So
I know it looks good too. I mean, the 250, 330 looks good, but it just been moving around way too much. AMD was kind of the same thing for me. And again, those were both things that had really big moves on basically deal announcements with OpenAI. And you just saw some vol get pumped in on top of the regular vol. Even in AMD's case that has November earnings, vol was pumped in on top of that. But they're just still moving around so much, and it makes it hard to harvest the vol. So, yeah.
At the money short put on Rocket Lab. Let's see. This thing has mooned, coming off the highs, 64, flatlining around 64. Yeah, this is just like SMR, where we sold that put and collected like $500 for this $40 stock. Rocket Lab, similar scenario. If you're selling a put, it looks like they're pricing in earnings, or earnings are projected for mid-November. But since you're only selling a put, I'm totally fine with being in that cycle because you can get paid on delta as opposed to the IV crush. So yeah, I kind of like this. What strike are you thinking though? At the money, so yeah, 60 or 55. I'd probably just go with the 60 and just pick up more premium. The break evens are basically the same here. But yeah, I think we could do something like this. Throw on some premium. Why not? Oh, great. Another immediate fill. Is there a way to show when previous earnings happened, similar to how dividends are shown on the charts? So we used to have that capability. We're actually working on some new stuff that will have that information. Don't have a timetable on that yet, but it's going to be nice. But yeah, as of right now, you can go back and look at the actual earnings dates and just see the gaps up and down. But yeah, unfortunately right now it's just the dividends.
Yeah, just kind of, you can get an idea based off of where the current earnings are. Just look back 3 months from there and usually have an idea. But yeah, at some point we'll get those on there.
Doing the wheel strategy on IBIT, wrote the 62 puts. If I put the shares, I then write covered calls no lower than 62. It would be great writing 70 above again. Yeah, it's a nice strategy. And yeah, if you're selling the put at 62 and then you are going no lower than 62, you ensure that you have no upside risk in that strategy. But yeah, would love to get the shares and then watch it moon closer to 70. It's a nice trade. Jamal, you bought 2 calendars on TSM 2 days ago with the short leg expiring today. What's your plan with that now?
So, I mean, the third leg is just going to expire worthless. I actually, and then I sold the strangle because ball is still elevated in there, and hopefully it doesn't turn out to be like an Oracle, like an AMD type situation. So I sold the strangle yesterday, and Nove, and with those, yeah, with those calendar calls. I mean, look, it's totally up to you. I personally like keeping because of the way that these stocks have been moving, because of the way some of the things that we've been seeing with several of these semi names right now, I don't mind being long those two upside contracts that I have TSM, which essentially that's all I'm going to have after those short ones expire, or you can just buy those back. They're like a penny now, but I'm still long the 320 call and the 325 call. I like doing stuff like that. I'm a weirdo, right? I mean, I don't mind, being long like a dollar call, especially when that whole space has been moving around. So I'm just gonna hold on to those. But my obviously real position now is being short that strangle.
Yeah. And yeah, I think when you have the nice thing about this is when you have that position and then the short expires, if you leave the long on for 7 days, you are offsetting your risk in the 330 call to the upside. Like the extrinsic value can of course appreciate in the 330 call, but if there's a huge rip higher next week, your long call offsets your intrinsic value risk in the short. And this basically turns into like a kind of like a jade lizard feel. But yeah, especially since you have the strangle on, I see no reason to close this long call that protects your risk for the next week.
Yeah, especially in case, next week it comes out and it's like TSM and OpenAI have a deal for, 50 billion gigawatt chips or whatever the hell it might be about. Who knows?
You never know. Netflix, I think, will split. It's been 10 years. Yeah, I think Netflix is on the split board. I think Costco is eventually on the split board. Basically, any stock that gets over $1,000, it makes sense for the company to do it because you're preventing people from investing in your stock if it gets too expensive, unless a broker has fractional shares. So, yeah, I think it makes all the sense in the world to split it.
I'm going to tell you right now, if they mention a Netflix split, I am looking for upside calls and definitely maybe even just calendars because we've seen that movie before. We saw it in NVIDIA. If you guys remember when they was talking split, all that stock did was go up until the split. So that's something, that's a trade to, got filled. We got filled.
Yeah, SPX. That is for Monday. But yeah, I think, and the splits are great for options too, because if all of a sudden you have a $100 Costco price and you have a $120 Netflix price or whatever it may be, now all of a sudden you can sell undefined risk premium in these stocks where you can't do it right now.
Yep.
Next week, IBM, Intel, NEM, more earnings to check out. Yeah, so
with the Intel earnings, I don't mind having those upside calls in TSM. Perfect.
Mm-hmm. Yeah, IBM is an interesting one. $20 expected move, $300 price point almost. It's just pretty elevated for IBM.
Just doesn't feel like your father's IBM anymore. I mean, this
No.
IBM is different these days.
It is. It used to be the stock that just was $150 regardless of what was happening in the rest of the market.
Yeah.
Intel, this one's a big one. $4 expected move on a $37 price point. That's well over 10% of the stock price. So lots of implied volatility here. And you can even see this permeating through not only the weekly, not only November, that's at 80% relative to these low 50s, but even December, 74% relative to the 50s here, 70% in January. So you're going to see all three of these crush. You're going to see a bigger crush in November than December, and a bigger crush in December than January. But definitely some interesting dynamic shifts in these earnings. Normally we would see something like this, 113% in the 7-day, and then like 55%, 55%, so like a more flat implied volatility curve here. But we are not seeing that in Intel.
Well, it's the most interesting the stock has been in probably 10 years. I mean, with all these flurry of deals recently, SoftBank, and then obviously the U.S. government as well.
Mm-hmm. Yeah. This is what we're more accustomed to, like a slight elevation in November, and then just baseline implied volatility across the board in December, January.
Gold.
Earnings are pretty much straight up gambling, kind of like blackjack instead of roulette, but still. Yeah, you have no control over what can be said and how the market reacts. You can have, we see this all the time. You have like Netflix and Apple just destroy their earnings reports and the stock goes down. So yeah, it is a lot more uncertainty, which is why I almost exclusively trade defined risk for earnings and super small.
Yep.
But it is a nice trade if you're directionally right. It's a great return on capital if you have a calendar spread or diagonal spread. You can do like a risk one to make one pretty easily there.
Just sold the GLD put spread against the short MGC contract I got.
Which spread you sell?
I sold the 365, 375 in Nove.
Nice.
Yep.
So yeah, that picks up $3 in premium.
Yep.
And yeah, if you get a move down there from your micro gold, you will be just fine.
That'll be totally fine.
Yep.
As a matter of fact, it probably won't work out that way. It's probably going to go back up.
Wide iron flies are my vol scalp play when I trade earnings. I don't do it that much though. Yeah, that can work for an inside move for sure. Let's see. What else we got?
I like this. Yeah, gold's going on. Gold's going for it right about now. This is really not much considering how much it's moved in the last week, but it's on lows.
Gold?
Yeah. It's about goddamn time. Jesus Christ.
It's just a breather.
It is. Yeah, for sure.
Just a breather. Let's see. Monday SPX 6500 put is selling for 680. However, the 6800 call is only 20 cents. Let's check it out.
Yeah.
6500 put. Yeah. And the 6800 call. Okay. So yeah, we've got 6650. So 150 points. Yeah. So this is basically equidistant. Yeah. So this is completely reflective of the inverted implied volatility curve that we have. So we are in backwardation right now, with the V being higher than the X and the X higher than the Z. And when we're in backwardation, that is when you should take these moves seriously and expect to see more volatility, more realized volatility. So with a backwardated vol curve, the market is telling you that there's a higher probability that we could see a big crash out to the downside than a rip higher to the upside. But if we did get this rip higher to the upside, this vol curve would quickly go back into contango and probably drop below 20, I would say. So yeah, right now, it is interesting to see that these options are super different in price, but it is reflective of the crash risk that the vol futures are telling us.
Yep.
What else we got? Don't most brokers offer fractional shares? Yes. Most do. But yeah, it's just one of those things. Like if you're trying to buy full shares, you got to split the stock price if you can't afford $1,000 or $2,000 or $3,000. Got to bring it down to a more digestible level.
Market's fading here.
Fading. Yeah, we've got some interesting moves. It does feel like kind of a sell the rip environment. We're getting some dip buys here, but yeah, certainly seeing lower highs as we move on through this week.
I'm fully thinking we've end the day towards lows, but we'll see. At least that's how I'm playing this day.
Yeah. I'm hoping for just a little chop, and then we open Monday like up or down 10 points. That would be great for this little iron condor here.
Yeah.
Russell 2000 selling fast. It's the only one that's red right now. E-minis are close. Only one that's red of the big four, I should say. But yeah, Russell, the Dow still up. NASDAQ kind of flatlining. E-minis look very similar to the NASDAQ, as you might imagine. But yeah, Bitcoin continuing to plunge here. The Russell, we're in turbulent times.
Yes, we are. It's pretty clear.
And yeah, I think there's way less people and funds that are willing to take big risks in terms of being exposed in a market like this through the weekend. So it makes sense that we're kind of just fading from these rallies.
Mm-hmm. Yeah, you can see it. There's a little nervousness out there.
All right, a couple minutes left here. Let's recap what we got here. So I've got the Rocket Lab short put for 590. Sold the 60 strike in November. Instant 10% cost basis reduction. Love to see it. And then I got into the Iron Condor for Monday. The 6580, 6715 short puts. 6580 short put, 6715 short call. Defined risk 5 points wide. Collected $200 even on that one. And yeah, seeing some movements in these products today, but I likely won't make any more adjustments unless some of these have bigger moves that make sense. But right now, just holding on to some of these products I've got, and we'll see what Monday brings.
Yeah, should be an interesting one. I'm in that same Iron Condor with you, and just sold the GLD put spread on the show here as we were sitting, offsetting some of the risk that I have from the short MGC contract. And probably the rest of the day, if I do anything, it's going to be reducing some stuff.
Love it. Beautiful. Well, that is all the time we've got for you. Thanks for tuning in. Click on that link at the top of the YouTube chat. Go check out the Money Match promo from Tasty Trade. But stay tuned. We got plenty more content coming your way on the Tasty Live YouTube channel as well as tastylive.com. If you want to reach out to us on Twitter, I'm at Trader Mikey B. Jamal is at Jamal Chandler. And yeah, go Bears. Cupcake matchup against the Saints. We will not lose to the Saints.
We better not.
It's just a physical impossibility. And if we don't, that's going to be great. We'll be 4-2. And I'll be just smiling from ear to ear.
More importantly, 4 in a row.
Yeah. I think that might have been the best thing that could have ever happened to us, starting off 0-2 and just being like, you guys need to wake up.
Yeah, for sure.
But yeah, shoot us a note on Twitter if you want to. We'll post these trades to the follow page shortly. And I'll be on last call with Nick at 2:30 to round out the trading week. But yeah, stay tuned and we'll see you same time, same place, 11 a.m. Central on Monday. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
This is Breadwinner Trivia here at Tasty Live. I'm here with Nick Batista. We're going to present him 4 questions. If he gets all 4 correct, I have to make him a peanut butter and jelly sandwich. Let's dive right into it.
And I'm hungry. I want 2 of those.
Which commodity is often considered to be a safe haven asset?
Gold.
Gold is the correct answer.
The shiny rocks. Boomer shiny rocks.
What does the Sharpe ratio measure?
Return relative to risk.
That is correct. What is a credit default swap?
It's a credit that originates somewhere else, and it's traded for different amounts across many different parties.
That is correct. It's not gonna exactly match what they have on screen here.
No, come on. I'm not the smartest guy here.
For all the marbles, for the PB&J, what is the national animal of Scotland?
It's the Highland cow.
It is a unicorn.
What? That's a trick question. I hope nobody heard that because I want to see a peanut butter and jelly sandwich get made.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
I got 'em all shook up for me. 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 Look at me, I'm walking my legs, do all the talking, but to watch yourself, keep your head straight. Find me on the runway, sleeping on a Sunday. I'm on the track, but yeah, I'm running late. Got my head in the clouds, my feet on the ground, the pavement's hitting back, yeah, I'm under attack, but I got round. Wrong way on the
What is going on, everybody, and welcome back to another segment. Today's Friday. We got a volatile market. We got gold to talk about, some quantum computing stocks to talk about, gold and silver specifically. Oracle's down on the day too, so we got a lot to cover today. But it's the end of the week. Gus, my brother, how we doing today?
Doing good, man. How about those Cincinnati Bengals? We are back. We got 41-year-old Joe Flacco out there just slinging the rock. I'm very pleased after that game last night. Vibes are high. My Capital One position that I thought was dead in the water has somehow rebounded. It really is going to come down to the cents. It's a Friday. It's a good day. I'm a happy camper.
No, I love that. I know you brought up the Bengals right away, and instantly I knew when I scrolled a little bit today, I seen something about the Bengals. Give us a quick update what went on over there.
Yeah, we had an electric game last night against the Steelers. I mean, more macro. We thought the season was over. Joe Burrow got hurt. Our backup, Jake Browning, who's been serviceable in the past, looked terrible in his 3 starts. We made a trade for Joe Flacco, who is now 40, Ravens legend, but 40 years old now, to just fill the spot and hopefully bring us a little bit of energy. And he's come through in a big way. He's been on the team 10 days now, and that was one of the best, most well quarterbacked games in the last 5 seasons that I've seen for the Bengals, and that's all the Burrow games included. So. And it was quite the showdown. Him and Aaron Rodgers last night, combined age of 81. First time 2 40-year-old quarterbacks have squared off since Drew Brees and Tom Brady in 2020. And it was just electric. It was they did not look it. So yeah, it was. I'm very pleased as a Bengals fan. I no longer feel like the entire season is cooked.
No, I love that. I think about organizations that take in older quarterbacks like that, and I just think, obviously they have. They're extremely skillful, right? They have the most experience. I mean, the IQ cannot be understated for that type of a position, especially if you're 40 years old still in the league playing football. You're there for a reason. So I just think, Joe Flacco came in. You think the insight was to have him mentor some of the younger guys like Burrow with his experience and IQ, and then obviously it gave him an opportunity to really ball out yesterday. But what's the gist about getting those older quarterbacks on your team?
I think we just needed somebody who was going to be really cheap to acquire and could spot start the middle of the season, but then wouldn't really need to be paid a bunch of money next season or anything like that. And Flacco was a really good fit. Burrow's going to be back week 16 or 17, like sometime in December. So we're just giving Flacco the rock until then. We figured that he was still serviceable, and with our receiving weapons, that he would be enough to win us some football games, and that's what's happened. So
that's fire. I'm a fan of Joe Flacco. I've always liked the guy, even on the Ravens when we'd play him. So I feel like him, Drew Brees, they're just very likable guys. So that's dope to hear that they're still balling out at the ripe age of 65. But you know what's not balling out? Gold. Gold is not balling out. But at the same time, if we look at gold over the last few months, same story. We get a pretty significant drop. We get bought straight back up. I know somebody had made a comment yesterday talking about how during the Asia session, a lot of buyers typically buy the asset back up once it drops overnight. So I thought that was, very interesting, thinking about other market participants that are entering the market at other time zones during the day, although they typically lack liquidity. Nonetheless, we'll see how gold plays out. You had any thoughts on some of those metals? They've been moving.
I mean, yeah, I think it's high time, and I mean, yeah, it's you feel like it's getting whacked a little bit, and I like the ballin' analogy, and I would take that and say, if you gave me $1 million right now, and then tomorrow you were like, oh wait, actually I need 100,000 back, I'm still balling. I still got $900,000. So right. I think that's sort of the situation that we're in with gold here. It's easy to feel like this is gold getting crushed or whatever, but the reality is that we are still just so far above where we were. I mean, just 30, 60 days ago. This run with gold has been incredible, and I don't even know that I believe that this is the end necessarily. I mean, we've seen. I think that this is very reminiscent of what we've seen with the broader market over the course of this week, where we get these big intraday dips, and we think that things might finally be turning over, and then suddenly the next day we're just trying to make higher highs again. So yeah, I don't know. It's an interesting situation with these metals. My SLV is printing a little bit today. Finally got a little bit of a dip there as well, obviously moving alongside gold. So I mean, I'm pleased with the move, but I don't know that I think this is the end for gold.
I hope so. And to your point, like whenever you zoom out, we haven't really gone anywhere. So even with today in the positions that we have on in gold, I was like, I'm gonna pump the brakes. I'm not gonna take profits too soon because we're still trading at the highs. I mean, we're still technically in an uptrend. So I'm not gonna try and call the top. Hold it a little bit longer.
Yeah, and I mean, you see, what is that? 4 or 5 days ago, there's a similar red candle in there, and then we just immediately rebounded to shoot 4 gaps higher. So, yeah, I don't know that there's any reason to believe that this is necessarily the end versus just a brief breathing period. Although, yes, I also would not be displeased in any sense if this were the end.
100%. And yesterday I had added to the position a little bit. It was one of those things where the conviction was a little bit higher in the metals. Well, more so that there was an opportunity available in the metals and like the quantum computing space. And I find it really funny. Whenever in some of these names, I find myself pretty quote unquote undercapitalized in the names that I have more conviction in, and a little bit overcapitalized sometimes in names I don't have as much conviction in, right? So I'm referencing something like gold. It's a smaller position that I'm taking, but that's also being weary about how aggressive gold has been, right? Like not trying to get burned and trying to pick the top off. So I guess that's a little bit of the reasoning for it. I know quantum names have been giving us more volatility. That's been exciting. It's starting to seem like some air's coming out of those. So I don't know if your RGTI position should be doing pretty well too.
Yes, we are. Yes, that is my second highest earner of the day, as those RGTI shorts that I threw on yesterday. Rancher in chat, short call spread. I assume that you're talking about gold in that capacity. That is what I have done with silver. So if you're looking for an angle to attack the metals, I think short call spread is a good way to attack it. Silver precedes gold this time. That's sort of just my mental thesis, is that I think that silver is going to fall harder and faster than gold. The analogy that I've been rolling with all week is that I feel like gold is like the large cap and silver is like the small cap in this situation. And so whenever the sector momentum starts to stagger out a little bit, that people would be quicker to rotate out of silver than gold. But that is purely Gus thesis. That's not substantiated by anything empirical.
But yeah, no, what's going on, Rancher? What's going on, guys? Hope everybody's had a great week. I know it's been volatile. It's really been keeping you on your toes. It's been keeping you engaged, at least, no doubt.
For sure.
Pull up volume here, just so we can see, not that I even care too much about this volume by time on the bottom, but I'm curious to see if there's more volume being traded today on the pullback on gold relative to the other pullbacks we've experienced in gold over the last couple months.
Yeah, I mean, worth noting, VIX is still over 23. I mean, we are, despite the slight green break that we're seeing in the broader market today, the volatility has not gone anywhere, as I am all too well aware, being short VIX right now.
Right.
But it's still, we're still at those levels.
100%. And we'll check out VIX here in a moment. But I know like VIX even chilling around 2023 used to feel a little bit more normal a few years ago. Now it's like, oh yeah, we got heightened volatility. Let's be a little bit more mindful about these positions. But it is funny how we have such a short memory. Like 20 used to be nothing. And now 20 is the highs for us in the market.
I mean, yeah, I think if you're a trader, you kind of got to have a short memory in a lot of cases. There's no priors with trading. There's no preseason convictions that you have to take in for a while and you might stick to. You always got to be living in the now in the last 3-6 months, whatever time frames you prefer to trade on. So I still feel fine about the VIX short. I would add, I don't feel like I'm hurting on that at all. Even with 11 DTE, it's like if we've really found the bottom, if the green days are going to continue, even just 1% green day over the course of the next 11 days would probably rocket VIX back down into the money for me. So not particularly concerned about that at this time.
No, I hear you.
And
I know
18 is my critical price on VIX. Need it under 18.
Oh, that could happen today. That could happen on Monday. So
yeah, exactly. Wolf, short gold. Wish I had more leverage, but happy. Hey,
right?
Nobody ever went broke making profits.
I feel like
you
we're all
always
in the
wish you had more leverage when it's going well.
It feels like we're all in the same boat there. It's like I wish I would have had a little bit more in the boat, but beforehand, getting short gold ahead of time. I mean, we've seen what gold did, right? We've seen what gold did to other traders, right? Because I mean, other traders are definitely probably trying to get short some gold around 357, 350, 355, 360, 370. I mean, I literally wouldn't have guessed gold would have popped to this level at this magnitude in such a short amount of time. So I know it caught a lot of people off guard. I was trying to sit on the sidelines as best as possible, and the only way I could get involved was just using smaller size. So I feel you 100%.
Well, yeah, you spoke briefly a moment ago about how sometimes your conviction doesn't actually match your size, but I think that that's a very logical way to go about things, because when you unpack that, like take this gold situation, for example, the higher and higher gold goes, the more and more convicted you are going to be that it's going to come down. But at the same time, the more and more scared that you're going to be about trying to time that down move. And so then in turn, you're going to be a little bit lighter with your position.
100%. And it did feel like gold was getting to that level, but you still don't know. But it did feel like gold was getting to that level where it was like, yo, this is euphoric. I mean, it still feels like that now. We could get bought straight back up because maybe others feel that same way. But I mean, kind of felt that way around the 350s, 355s, 360s. And then it began to get to a point where I was like, this is unbelievable. Like I would have gotten involved sooner than this. Little did I know it'd squeeze this high. And then it's like, well, I'm on the sidelines. Now let me get involved. So it's like those trades usually you feel a little bit more comfortable with once you see that the majority is getting squeezed out and you weren't even going to touch it, and then now you're like, you know what, this is a pretty reasonable short. Like this is a type of risk that I would put on and I'd be comfortable risking X amount, whatever on this type of trade. But it feels like gold really squeezed into those levels, but it's nice we get a pullback finally. 44 million shares traded on the day. This pullback today, you can see we have a little bit more volume traded today. So more activity going on, whether that's people loading up long, getting short. All we know is there's more activity today than the rest of the days over the year, really.
Well, yeah, and this entire time, I just can't help but laugh at what a funny asset class this is for this to happen to. I mean, it's like, you expect this type of thing.
Tesla.
Yeah, yeah, exactly. Yeah, you expect this type of thing with quantum, with tech stocks, with the things of the future. You don't expect it so much with things of the past, dare I say, as gold is. Although I guess it's affirmatively reasserted itself as a thing of the present with its recent action. But it's just I don't know. I'm not surprised to see these types of moves in nuclear, in rare earths when it looks like we can't get them from China anymore, in quantum, in Tesla, in rocket stocks. Things that go to space. It's like these things all make sense to have these sort of parabolic run-ups, even though I don't usually indulge in as they move to the upside. But it's just gold seems like such a funny asset for this to happen to in the big 2025. Pullbacks are healthy, they say, no matter the asset. Agree.
100%. I did see some comments today about crypto and gold, and I had seen, especially people that are very pro gold. They had made some comments about how is that for your, what was the comment? Something along the lines of making the reference at, Bitcoin is not the new hedge, is not the new hedge, right? There was a lot of conversations about Bitcoin being the new hedge in replace of gold, and gold has been more resilient through these times than something like crypto has been. So it almost feels like gold is really trying to assert its dominance back in the market in terms of how participants view the product.
Oh yeah, and I'll be the first to say that I was in that camp. I mean, I was leading some of those discussions. As recently as like 3 months ago, before gold began on this run.
3 days ago for me, brother.
Yeah, exactly. I'll be the first to say that I was wrong in that regard. At least in the immediate, the rotation still absolutely happens into gold when it's time to hedge. Crypto is not there yet. I remember when gold was boring. As do I, Jared. It was way back in July, I think, is when gold was boring. Yeah. Back in the day, July 2025.
Yeah. No, here in a moment, we can get into some of the positions that we have on, just to give a quick update, and then we will get into some other names. But we got Baidu, some of the Chinese names coming back down finally. I keep mentioning this, but this was one of those trades that we had put on. Got some really amazing news, and then afterwards, it ended up selling off. So this one was defined risk. We're happy about it right now. The spike on a lot of these Chinese names is crazy. I know there's a lot of talks with the trade war right now. So I think just that in general is creating a lot of volatility wherever that direction might be in some of these Chinese names. But that's coming in pretty nice so far. I'm not complaining about that. I know we got Baidu, Baba. You're not in one of these names right now, are you?
No China exposure for me.
Okay.
Yeah, especially amid all of this turbulence. I just think it's really hard to judge and pick out.
I mean, there's so many.
What's going on?
Yeah. At this point, it feels like you got to pick your poison, right?
Yeah, precisely. Grumpy Mike with the breaking news. That was before gold version 2.0. It's more goldier than that old gold. I didn't realize that gold 2.0 dropped. That makes so much more sense why we're seeing this recent rally in gold. I need to download the update.
I mean,
did they patch the thing where you can bite it and put teeth marks in it? If that's patched, it would be way better. Minor pullback to gold under 1K, silver under $20. Just a little retracement. Just a little pullback.
Just a wee bit.
This is, I believe, just yesterday, Theta Trader presented the dream that Ethereum went to $7.50. So we got stuff going on. I'll throw out a dream. I had a dream last night that our slot got moved to 11, and I missed it. And then I kind of woke up in a panic.
So to that point, being remote today, I was like 11. I was so used to being in Florida at that time. So I was like, wait, I think my brain was just calculating wait, what time is it at again today? So I was in the same boat.
Yeah, I woke up and there was like, woke up and it's 7:30 and I was like, I missed the show. For like 5
Bro,
seconds.
that's got to be the worst. That's got to be the worst. I think I remember that one time when I was running back. I think I was on the train and I had slipped. Something slipped my mind, but it was that same emotion, same feeling. But it's always funny to talk about. But quickly, I'm going to finish off some of these positions and we'll get into the trading view platform here in a second. IONQ finally coming through, quantum computing. We had to be really patient for these ones. Hopefully they continue to play out. This one's up maybe 60 to 70%. So we can debate on taking it off today or maybe early next week. We got Oracle. Oracle is getting absolutely slammed today. I think earlier today, Oracle was down 22, 23 points right now. We have 35 days left till expiration. So we're sitting break even. This is a volatile one, right? Like a $150, $170 swing within just the 5-6 hours the market has been open so far. Something to keep an eye on. QQQ, this one's going to be cooked. This one's going to be expiring as well. Not much we can do there. Then we have Unity Software, not working out too hot right now. $5 wide, 35 days left till expiration. Going to be patient there. Not going to do any adjusting just yet. Kind of on the dance floor. And then UNH, another one we're going to be patient for. I don't have as much long delta in here as I would like, but I think I've came to terms with it already, Gus. I think I'm like, I'll be happy with whatever it gives me. That's where I'm at.
Sometimes that's the resolution that you got to reach. But yeah, I don't know. Things looking okay here. Your Qs, I guess we're dead in the water on the Qs. That
brother, we were talking about this yesterday. I was like, you know what? If this stays, of course we gap up and rip. And I'm like, yep, it's cooked.
Is that you've had that position open for like months, right? That's the same short Qs position we've been waiting on.
It might be a couple years now. It feels like we talk about it every day.
Yeah, I was gonna say I've been hearing about that position, and I'm sorry to say it, but it's like never been close.
Don't say it.
Since I remember you starting to bring that up, it's never been close once. It's quite funny.
It was kind of close yesterday, I feel like.
Yeah, well, yeah. Yesterday we were like
it was on the brink.
Yeah, yesterday we were getting the vibes. Yesterday it was like almost close. Like it was like if we got the day that you needed today, we could have gotten close. But
when we're referencing almost close, I think we're talking about like being able to like almost break even. Really, like that's what.
Yeah, just being able to get out is sort of what I'm thinking here.
Yeah, but yeah, that's been the story in QQQ, and then Oracle just going down to the downside. That one's defined risk. So bullish on Oracle, so we'll give it a little bit more time. IV's pretty pumped in there too. So. Other than that, we can switch over to the trading view platform here in a moment, and we could swap back over here and get on some more premium positions if we have anything top of mind.
Yeah, I'm just sweating Capital One, man. I didn't think that this was even going to get this close, to be quite honest. And I don't know. I mean, it's really. I said yesterday that it's going to come down to pennies, and I mean, it's going to come down to actual pennies on this Capital One position.
Right, banks. Let's double check those real quick. That was in a lot of the headlines today. I've seen people talking about banks all day.
Yeah, yesterday and into today. There was bearish sector-wide news yesterday, and then bullish sector-wide news today, which is working favorably for me.
No, I see that. It's been volatile. IB rank's pretty decent in Bank of America. Check out the options chain real quick. That's not looking too hot over there. What was Capital One again?
COF is Capital One. Right. It's weird when a short put is not in the money, is still above strike, out of the money, but nevertheless red as heck. What gives? I don't know, premium squeeze of some sort, volatility in the direction of your put. Well, I guess that means volatility to the downside, something like that. Volatility expansion. Correct, Martian Walker. Agree with you. But if it's out of the money, it's out of the money. You just gotta wait. Just gotta let that theta come through.
You're not.
I hear Streets are saying we have a theta trading professional in the chat right now, but that's just
okay.
It's just Street. That's what I'm hearing.
What was it saying? You're not wrong. You're just early or late. It's one of those two. So.
Yes, it's unrealized losses right now, which are not real. It's fake. It's numbers on a screen. It's numbers on a screen until you exit. And then it becomes different numbers on a screen that are more important.
Then it becomes reality. Yeah.
It's still numbers on a screen, but it becomes real numbers on a screen.
100%. Today's been a really volatile day. Let's look at NASDAQ quickly, bring it down to the 5 minute, then we'll go to the 1 minute. Just look at some of this price action for today. We had taken a couple trades, needed to manage. There was a couple other opportunities, but after that, I just was not looking to take more positions. So let me go to the 5 minute.
You guys having some bacon discourse in here? I'm an Applewood guy myself.
Applewood bacon?
Hickory's a respectable take, but I lean Applewood myself.
I think I had Applewood not too long ago. I actually just got some.
I like some sweetness in my bacon. That's sort of a thing. Little bit of whether that's just like some syrup on the plate, or if there's like maybe a little brown sugar action going on there. I like a little bit of sweetness with the savory and bacon.
No, I'm in the same camp there. The only thing about the bacon, okay, so I've never been a big fan of like, I'm not bringing it up on purpose, but like chicken and waffles. Don't laugh. I've never been a fan of like sweet stuff, right? So whenever my syrup would mix with like the sausage or eggs or whatever, like I hated it. I never really liked that. But you know what's so ironic about that? You know those pancake sausage corn dogs?
Sure, yeah.
I can go to town on those.
Do you like McGriddles? That's like
I love McGriddles.
Yeah, same.
Like growing
same
up as a
deal.
kid, holy moly! Oh my gosh.
Yeah, that's funny. I've always been in the sweet savory camp. I love chicken and waffles. I'll put down on some chicken and waffles, and syrup can kind of just go on the whole plate. Eggs are a little iffy. Like if the syrup touches the eggs, that's okay. I'd never put syrup on my eggs though.
Wait, I got a question, and then we'll get into some of this analysis. You put ketchup on your eggs?
No. Sometimes hot sauce, but usually just cheese, salt, pepper.
Look, anybody that
if
puts
it's no
ketchup-
cheese, that's fine too. But I like cheese on my eggs.
No, it's fire. Anybody that does, I'm not judging in front of you. But some of the price
I'm not
actions.
judging out loud.
I'm not judging out loud. We got some pretty volatile price actions today. I was looking to take some shorts at around the 24,861 area ish. We had some opportunities to scale out. But we chose to hold a little bit longer to get a little bit more points. So we stopped out of this initial one over here. I think if I put this on, I think this will make it a little bit easier to see. I don't know. These arrows can be I feel like they're not like extremely accurate sometimes just because it puts it on the top of the candle or the bottom of the candle. But
Yeah, it just has to go on the top or the bottom.
Yeah. But I feel like if I bring this down a little smaller, it'll give you a better idea of what was actually happening before I started repositioning and doing those things. All right, we're on a 30 second. If you're trading on a 30 second, you might as well trade on a 1 second. Hold on, what is that like?
We got 1 second.
It's got to just be like a straight line. Like that's insane. What kind of high frequency trading?
I was going to say. I mean, this is
what in the high frequency trading.
Yeah, you got to have an alg if you're even entertaining 1 second charts. Are you kidding me?
That's insane.
I can't
even believe that's
no human being on Earth needs 1 second candles.
Brother, I don't know what they said. We offer everything, guys.
I guess they're just like, we can do it. Why not offer it?
With that being said, we were looking to get short around 24,861. We ended up managing that position. We ended up getting reshort. That's why we cut that one reshort. We got this pull in right here. And then once we started trading around this 24,861 area again, that's when we decided to manage our position over here on this candle because we didn't want to absorb any of this extended move to the upside. After that, we could have made more decisions to get short here again, because this is actually really similar to how it was playing out the other day. We'll save that for another example. But now here, like the mindset is thinking, okay, are we shifting out of balance to imbalance? And it's like, if that fails, then we could potentially retarget the mean reversion type moves if we fall back below that 1 standard deviation move. So we ended up doing that. We ended up retesting that 1 standard deviation move a couple times. And it's like, we're seeing a lot of rejection there. Some areas you could have maybe put your stops at the highs, but I wasn't really interested anymore. And it's kind of funny. Of course, that's the one that plays out and goes down to your original profit targets like we had down here that we were targeting over here. And sometimes it just comes down to that. It really matters it just matters when you want to get involved, right? Like there are trades where you're going to be forced to manage your risk, and you can get involved on the 3rd opportunity if you want to, on the 4th opportunity if you want to. And if we're being completely honest, like you don't know what is the word that I'm looking for? You don't know the order in which green and red trades will fall. All you can do is trade the law of large numbers, understand the probabilities, because it can be green, red, green, and that doesn't mean you have a 90% probability strategy. It just means that that's how it fell within the order of which it fell. So sometimes it kind of works out that way.
Heads 9 out of 10 times, and it doesn't
exactly. That's the point I'm making, right?
Yes.
So I think risk to reward, and then the the number of times that you're trading is just going to matter, because at the end of the day, it is a probabilistic thing that you're doing. And yeah, you don't know the order in which these will fall, but you do have probabilities, and that can help us focus on the bigger picture. Only if we manage that risk, though. If we're not managing the risk, it's going to skew all the numbers later on. Just take the loss, manage it, and look for your next opportunity.
Yeah, and I think that's a really important thing to point out. And I would also, use that as a reference for like capital usage and deployment and preservation, is that you can't let emotions get involved over the course of a streak of trades as well. Just because you have 9 trades in a row, you can't go gambler's fallacy. I'm on fire and fire off something that's 3x your normal size because you think you can't lose today. All of the trades have the probability that they have, and that's something that you always need to keep in mind.
Something that I used to struggle with, I remember, so I would journal a lot of my trades. And I noticed, and bro, journaling is so game changer. Sometimes we think we're self-aware. We think we know our tendencies and behaviors. But I mean, when you journal certain things, I mean, you're looking at yourself in the mirror. So I remember I was journaling all of my trades. I remember I plugged everything in. Typically, if you know of a trading journal, you can download your CSV file. You can do it on the Tasty platform as well. You can download your CSV file under your trading logs, and then you can plug that into whether that's Excel, Google Sheets if you want to, and you understand the calculations there, or a trading journal that was built for that. You can plug that in, and then it'll analyze all your trades. It'll analyze, if you have a tendency to get long, tendency to get short. It'll show you your average. It'll show you your win rate, your average risk to reward. It'll show you your profit factor, which shows you if you keep doing what you're doing, if you're going to be profitable in the long run. All these details, which day you might trade a little bit better, which days you tend to size up more on. But one thing that I noticed within my trading back in the day was after about 7 or 8 green trades, I tend to start oversizing after about 7, 8, 9, 10 green trades in a row. So I even know obviously we got 2 red trades in a row, so I'm not on a green streak. But it is funny that we found that tendency just by journaling that, wow, after 7, 8 trades, I don't know what's going on psychologically, but I can now break that down. But after a string of trades, it's like, why am I starting to size up here now? Or whatever the case might be. But I always think that the journaling aspect is a fun self-awareness process.
Interesting. Yeah, I absolutely agree. I think that it can be very enlightening. And I think Theta Trader brings up a great point here, too, that too much self-reflection can be paralyzing, but that's also a self-knowledge decision. I think that's an important balance to strike as well, is that everything needs to be objective all the time and non-emotional. If you get into journaling or whatever type of self-reflection you prefer, if you like to go sit on the roof of your building and meditate and think about your trades that day, whatever way you choose to indulge in that, it's important to just take everything trade by trade, always be objective, and don't let analysis paralysis creep in either, because
100%.
Because I mean the reality is that you can lose any trade. Always, no matter what, no matter how convicted you are, you can have all the information in the world. I mean, say for inside information, I don't think you're going to lose many of those. Right. But you could have all the information in the world, be as convicted as you want, and things could still just go against you. And that doesn't mean that it was even necessarily a bad trade. I've 100%. I've had max losers where I think that I still think that it was a good trade. It just it didn't pan out. Maybe my time frame was a little off. Whatever. There's adjustments to be made, but not all losing trades are bad trades, and not all winning trades are good ones either. Go to Wall Street Bets and scroll for a minute. You'll see a bunch of bad winning trades. Yeah,
you make a really good point there too, because I know one thing that I learned in the book it was literally called One Good Trade by Mike Bellafiore. Fire book if anybody wants to check it out. But in there it's called One Good Trade, and they have a whole motto, right? It's about one good trade, then one good trade, then one good trade. So we're not grading ourselves by our P&L. We're grading ourselves on our ability to be able to follow our system, our plans, and our rules. And it's like, even if you have a great trade or whatever the case might be, it's like the market is going to come back around and really expose a lot of those weaknesses in your process, your system, or your psychology, whatever it is. But I think a great way to grade yourself is, did I abide by my risk management? Did I abide by my trade process? And then from there, I think it's easier to keep emotions at equilibrium.
Yeah, no, I absolutely agree. I'm chuckling at chat here. Dear Journal, I shorted RGTI. Stupid. Really, really stupid. Stop doing that.
Yo, wait.
It's true. As somebody who is short RGTI right now, after losing my first short RGTI, absolutely agree.
Okay. So if let's say you shorted RGTI like 12 times, and you said after 3 times you weren't going to short it anymore, it's like, all right, the losses are acceptable. But the 8 other times we're shorting RJTI, we might have to we might have to come reflect a little bit. But
yeah,
also,
that's the thing is things get redundant. I would say, I mean, if you find yourself in that situation where you're going in on the same underlying over and over and losing over and over, like I would say I loosely operate on a 3 strikes you're out type of policy. Like if you lose 3 in a row, you should probably just stop trying to beat that horse. There's too many other assets in the market to, attack. Or I mean, you could just go longer dated as well. Like if you're bearish RGTI right now, so even if you're bearish gold right now and you just have no idea when it's going to come back, you could always pull back. I should say you could always do something longer dated. That's an option as well. But yeah, you shouldn't beat the dead horse too long. There's too many stocks with too much volatility for you to mess around with the same one over and over and keep losing.
100%. And
I mean, I would say it's like chess. I think that's a rule in chess is that you should never move the same piece twice in your opener. There's too many other good moves.
That's a great point, actually. And I know when I had, especially when I would see other guys in the industry that been in the game forever, insane track records, all of that. When I would see them slip up sometimes with not managing risk or this, when I would see them, right, insane track records, third party audited, 10-year, whatever experience, and I still see them making those mistakes. I'm like, bro, I don't care how much of a green streak I am. If they're vulnerable to that still, I know I must be extremely vulnerable to a lot of these weaknesses. So it's like, let me keep this risk in check every single time, because I think, again, that's just the most important thing. It's the only thing we can control. We can't even control our profits necessarily. We can't control how much we can make. Can't even control if we lose. The only thing we have any control over in the market, literally the only thing, is how much we allow the market to take from us. That's the only grasp of control we have.
Absolutely,
which is
yeah.
Interesting to think about.
Yeah, and that humility is very important too. I mean, I always just circle back to the fact that the greats at everything make mistakes. Jamar Chase dropped a pass last night. You think Gordon Ramsay never burns food? He burns a dish every now and then. I guarantee it. It's you pick the highest level person in any occupation, and they will still make silly little beginner mistakes.
But it opens your eyes.
It's what we do.
Yeah, I mean, it really opens your eyes. Though it's like, bro, you've been in the game way longer than me, and you still make that stupid. You know what I'm saying? And I know I speak very passionate sometimes when I say like stupid and terrible trade. It's just because I'm passionate when I talk about trading. I'm not actually like, mad or upset or whatever it might be. But when I do see, quote unquote pros, professionals make similar mistakes, I'm like, wow, we're always going to be susceptible to it. And maybe because we're human. So got to always take those into account.
Yeah, absolutely. And you can always just, I mean, I think that you really know that you have a good handle on your emotions when you exit a trade and you genuinely feel nothing. You just say, damn. And then you exit the trade and you keep it pushing. Like, that means that you're in a good emotional state and that things should continue. But as soon as you notice yourself becoming genuinely frustrated as you exit positions, maybe best to step away from the keyboard for a little while.
Until you get such into that state of like, well, damn.
It's numbness. And also, it should feel that way.
You get numb to other things outside of trading. Everything else that happens outside of trading, you're like, damn.
That's true. That's true. That's true. It does definitely extend just beyond trading.
It does.
People throwing out the two dumbest chess openings I've ever heard of. Well, no, not really. The cow opening is just a funny name, but Anna is very talented, and I know that's hers. That's a legit opening. But what the hell is a bong cloud opening? I have to Google that. I'm a fan of the ICBM opening myself.
100%. I was an expert at Ching Chong.
Cheech and Chong, man.
Cheech and Chong. I said it, bro. I swear I said that in my head.
Nobody clipped that.
I said that in my head. I said and in my head. All right. This is a good conversation that supports my belief that paper trading is a trap. I agree, actually, because paper trading gives the most false sense of the markets. It's unbelievable. Like, even from getting your orders filled and knowing what that feels like when you hit the hotkey or you hit the button, like even feeling that slight delay, I think paper trading gives you a false sense of that because you get like fake executions. You just get entered when you click the button. You don't get the emotions out of it. I think a better way to go about that is just using one share, one contract, one whatever it is. So at least you get a feel for some of the emotions. Because again, I remember my first stock that I ever purchased. My dad So my dad goes, yo, there's this, it was called E something. I'm not even going to plug them right now. But he was like, they have this thing. You can paper trade for free for 3 months, right? I'm 18 years old. I'm like, let me check that out. I'm like, yeah, Dad, I signed up for the paper trade and whatever. Little does he know, I opened up my real account already and I dropped like 50 to 100 bucks in there. I'm like, I'm not trying to paper trade. What are you talking about paper trading? I'm talking about practice. So anyways, buy my first stock. It's going down like 10, 15, 20 cents. My heart's pounding. I'm sitting on the side of my bed, crisscross applesauce, looking at my phone, just looking at it go down 20 cents, 25 cents. My heart's pounding. Got a bead of sweat dripping down my forehead. And then I exit the position. And then I would just like put my phone down and I was like, we're done here.
Yeah, and I think Margin Walker kind of took the words right out of my mouth here. Honestly, I think paper trading has its place, like educationally, and at the very beginning when you don't even really know what you're getting into as far as markets.
Like,
and
where's the buy?
Yeah, exactly, and you need to just kind of learn some mechanics and get a loose feel. But I do think that it is overhyped to a certain extent as well, and I think that analysis paralysis thing we were talking about before can definitely come into play. Where, say someone's wants to learn trading and they've been paper trading for 3 months and they're negative, I don't know, a few $1,000s on a $100,000 portfolio. And then that person starts saying to themselves, okay, well, I can't start with real money until I'm profitable. And so then they start trying to wait and
start.
Yeah, exactly. And you want to make all those tweaks and try to be so perfect in your paper trading portfolio. And really at that point, you've learned all that paper trading can teach you, and it would probably be wiser to just take a few $100s and start trying your hand at doing real things with real fills and actually getting a more direct feel. But it's really easy to get caught up in that analysis paralysis type trap with too much paper trading.
100%. And I mean, I think most of chat is in agreement there. Never been a fan of paper trading. This, that, and the other. No way to learn options compares to putting on the first trade and taking a loss. 100%. I think being able to take a loss builds another level of confidence. I mean, way outside green trades ever will. I think green trades provides a false sense of confidence, which I think having a false sense of confidence in the market is one of the most dangerous places to be.
Yeah, Stephen, that's a great example too. Anybody, if you think back to your first options trade, no matter how small it was, you are involved in that first trade that you ever make. And with paper trading, it's just not that way at all. The feelings are just not the same. I remember my first options trade, clear as day. It was just a naked Apple 3DTE call, and it 2x'd in like an hour. It was amazing. Which 100%. Was like, I don't know. It's that single trade is like butterfly effect to me sitting here right now because I was addicted immediately. I was like, that was so easy. why would I not? Why would I not just do this all the time?
Yeah, no, I hear you 100%.
Not that easy. That was textbook beginner's luck.
Well, I remember. So my older brother, I remember his very first trade. He actually made 13 racks, and it was up at like 30 grand at one point. Literally, bro. Like literally, this was like 7 years ago. And in my opinion, I do think though, for any new trader, making that kind of money is probably the worst thing that can happen.
Oh yeah,
like it seems awesome, but I genuinely believe that.
I mean, it's nice to have the nest egg, certainly, and I mean, no one's ever gonna turn down that amount of money. But yes, I agree. You will be chasing that high forever. That will become your barometer for success. It is not. I mean, it's like going to the golf course for the first time in your entire life and making a hole in one on your first swing. Like you're never going to be able to recreate that high.
Well, the difference there is the hole in one. That's the goal. Right? Making 30 bands on your first, that's not the goal. Like that's not achieving what we're trying to achieve. You don't even have an understanding for the market. Now you have a false sense of what the market actually is. Now your expectations are completely skewed. So in a sense, I hear what you're saying, and in a sense, it almost feels like you know the point I'm getting at.
Yeah, no, I absolutely agree. It's dangerous. And then not to mention that you have 30K you probably shouldn't even have, that you're going to trade now and you're going to feel terrible when you blow it. And it's a whole different set of emotions to try to work through.
100%. It says, I remember you placing your first trade on the 2 Utes a few years ago. Yeah. That's one thing I will say. So that's one thing that I love that Tom did do. Whenever we were on the 2 Utes, he had us trade every single product. And it was very intimidating at the time because I was coming from building a platform off of TikTok, right? So I was growing a community, doing all those kind of things. So people are always coming asking me questions. I'm like, yeah, download this, download that. This is what a stock is, very basic. So doing that to then having to go on the 2 Utes, not having to, was an amazing opportunity. Still couldn't even believe it was real life. But doing that and then going live in front of people, learning a completely brand new concept as intimidating as options was extremely intimidating. So I give him so much credit though, because I think without that, I wouldn't have traded interest rates before. I wouldn't have taken advantage of the futures products. I know we didn't get deep into trading a few years ago when Tom had us trading on the futures platform, but I would have never explored the futures niche even further if I didn't have the comfortability of even entering and exiting a position. So I do give him, hats off for throwing us in the deep end around that time. But time flies, no doubt.
Yeah, no, absolutely. I think, just sometimes trial by fire is the best way to do it. Jared with a great point as well. I feel like every trader has to blow up their account at least once in their trading career to really have the focused discipline. I agree, and I would venture to argue that it might even be more than once, because I think that, and it depends on your initial account size, and I suppose when you're starting, there's a lot of nuance to that. But thinking back on my personal experience, I believe I blew 9 accounts before I finally figured things out and started actually being able to trade profitably. I think it took 9 accounts ranging from like small accounts, like $300 to $1,000 in size. But
I have something to say on that though.
What's up? Go ahead.
Because yes, that might be the case, but also if you throw me to do surgery right now, I'm gonna murder 9 people.
That's what I'm saying. That's what I'm saying. Yeah, I think
you don't know what you don't know.
Yeah,
you don't even know how to protect yourself.
Exactly.
So it's almost inevitable, right?
Exactly. I would kill way more than 9 people. Also,
100%. I think some, bro, 100% success rate, but not on the right end of success. And another thing on that point too is why did I say that at the end? It was making me lose my train of thought. I forget the point that I was gonna make, but also just someone needs to put you on game. Like that's really what they mean when putting you on game, because also I think there's many years in a lot of our journeys where it's like, yo, it still would have taken me so much time to get the grasp of this, but if somebody would have just, led me to water, at least my hard work wouldn't have been in the wrong direction. That's one of the most frustrating parts. It's like, it doesn't matter how hard you're working. If you're not put on game, you're not going anywhere. You're gonna be working hard, going absolutely nowhere. So I will say that too. I think the early years, you might be doing great stuff, but at the end of the day, if you're actually not even approaching the market, right at all. I mean, I was in the small cap space. I was doing this. I was getting long. I was trading DGAS. I was doing I didn't know what I didn't know. So just reflecting on some of those past moments,
Yeah, absolutely. And I think seeking out educational resources is a big part of that as well. I mean, for me, like when I first discovered tastylive, which was Tasty Trade at the time, and when and then it was, I read Julia's wonderful Unlucky Investor's Guide to Options Trading. And then I also read How to Day Trade for a Living by Andrew Aziz. That's another book that I would throw out. He talks in the context of stocks the entire book, but every single thing can be applied to options. But it was like, once I actually started going out of my way and seeking out those educational materials, I mean, literally 3-4 times a chapter, somebody would be like, never do the XYZ. And I would be like, I do that every single day. Like this is, and so it's like, exactly like you said, I think you drilled it. You don't know what you don't know until you go looking for what you don't know.
Because look, I'm going to make an argument here now too, or just make a point here too. I'm curious to see the trading industry in the next 5 to 10 years, because I also do believe that statistic is slightly skewed. Hot take, I know, but I think the statistic is slightly skewed because I think it's old data, number one. We didn't have the technology that we do now. Not only that, the type of information that can go around now is second to none. Access to capital, access to so many things that I think it wouldn't be super high, but I think the statistic would be skewed slightly considering some of those factors. I think it would still work off of a distribution curve, but I think that tail end will still get a little bit fatter than what it was at previously.
Yeah, no, I'm just inclined to agree with you. I mean, that's kind of the same thing that Jared is alluding to here in chat. There's a lot of resources now to keep people from blowing up their ports compared to even 5 years ago, which I absolutely agree with.
Wow.
Yes.
My bad, Jared. Literally said that word for word.
No, yeah. I mean, it's you guys were. It was a jinx moment, but yes, that's exactly right. Yes, there are so many more resources.
It's still a hot take right now. I feel like to say that in the trading community, but I think in 5 to 10 years, the trading community I think is going to be seen more as. I think the industry is just going to grow a lot. I don't know. I think that, again, 5 to 10 years ago, it felt like trading was a secret society, right? Just to see certain personalities or whatever, even if they're legit trading or not, like to see certain personalities collaborating with other mainstream personalities and they're known as a trader, I don't think you would have seen that 10 years ago. So
Oh yeah, for sure. Dan, to answer your question, the two books I just cited were An Unlucky Investor's Guide to Options Trading by our very own Julia Spina. We will get you a free copy. I think we're still doing that. If you email support@tastytrade and you are a Tasty Trade account holder, we will send you a free copy of that. And then How to Day Trade for a Living by Andrew Aziz was the other one that I mentioned. That one's I honestly don't know if I would recommend it if you would consider yourself to be an intermediate trader. It's very like ground up fundamental knowledge, but it's really great for beginners for risk management and timing of entry and exits is sort of the way I would describe it. What were the books that you named?
I totally forget what books I named, but One Good Trade. I'm telling you, One Good Trade. Okay, the reason why One Good Trade is good, this isn't even a plug, but the reason why it's good is because it takes very personal stories. And when you read it, you're going to be like, oh, snap, I'm normal. So once you read that, it just gives you so much more insight of the process of a developing trader, and you will start to recognize there's just no shortcuts. So I know, especially when it comes down to the market, people think like, oh, get rich quick. Oh, it's a get rich quick thing. The get rich quick mindset in the market will just make you go broke quicker. You know what I mean? So I think One Good Trade is a great book just to put the trading lifestyle kind of into perspective, the reality of it, right? It's not all sunshine and rainbows in that book, so I encourage you to check it out. And then The Daily Trading Coach by Dr. Steinbarger. Dr. Steinbarger is a psychologist that works alongside professional prop firms. So he's almost like a consultant for them. And he will just, help their traders out. But to see that they have PhD professionals working alongside other traders goes to tell you how much of a psychological element there is in your decision making. You know what I'm saying?
Oh yeah, absolutely. And that's a very large and widespread thing now, is that these prop firms all have lots of mental health people on hand because it is so important. Yeah. It is such an important factor.
100%. No, go ahead.
No, I mean that's the end of my
No, I'm just going to switch over here to ES. We don't look at ES too much. I'm curious about your take, though, Gus. I know amongst our, I don't even want to say older crowd. I want to say maybe 25 plus. So very young still, older Gen Z, younger millennials. I feel like S&P 500 at that age and up was more of the go-to product to trade or to even just view the market through. Something that I've realized even within myself and amongst my peers and especially younger is a lot of us prefer NASDAQ. I don't know if it's because it's a little bit more volatile. The volatility might be a little bit more attractive. I remember the Dow used to be the go-to back in the day. Then it went to the S&P 500. I wonder if we'll see a switch and the NASDAQ kind of being that default indice that we keep tabs on.
Yeah, that's an interesting take. I personally am still totally a SPX SPY ES person. Yeah. I don't ever get directly involved with the NASDAQ too much. I mean, I'll do Qs, stuff like that. Yeah. But it's more indirect. Like I'm never trading MNQ the way that you are. But I do think that rotation is probable. I mean, the NASDAQ is sort of the, it's like, it's the new age index, so to speak. It's tech stocks, and especially in the dot-com bubble 2001, like all those companies are NASDAQ, one after the other. The volatility certainly does seem to be a little bit more present. So I think that we could see that shift, but I think exclusively as a trading vehicle is where we would see that shift. I think in terms of long-term investing, people are still going to greatly prefer to hold the S&P 500 probably in perpetuity.
No, I like that. I'm inclined to agree on that as well, especially with just the mindset of the time duration in which you're holding. I'd rather chill in something like ES. It's a thicker market. It's slower. NASDAQ whips a little bit more than the Dow does or something like the S&P 500. So definitely inclined to agree there.
NASDAQ marketed itself like Pepsi did, the choice of a new generation. That's very interesting, actually. It's working, if that's the case.
I mean, I literally see NASDAQ edits, brother. Like, I'm not even joking. Like, I cannot believe the younger generation is actually hopping on and I just can't believe it. I never thought I'd seen the day. People allocating their resources to the industry in that way, whether it's their ideas, their talent, their editing skills, just to see the attention on NASDAQ, I'm like, no way. I love it.
NQ feels like the unicorn incubator, also the bubble pumpers. Honestly, I can't really disagree with you on either of those fronts. Unicorn incubator is a bit of a nuanced thing to unpack, but I see your point, and I agree. Paper trading, the way the most influencers tell you to, teaches bad entry and overconfidence. In my opinion, it took me months to unlearn the bad habits of paper trading. Yes, and that's sort of what I'm getting at, is that I think paper trading is a great way to learn in the very beginning, but if you're doing paper trading long enough to form habits, that's sort of where it starts to become a problem. I think paper trading is like a 2 weeks situation, and then you should just jump into the market.
I think anything that you do outside of your process, you need to be really mindful of, because I think us as humans, we adopt habits so easily. In trading, outside of trading, it's like, don't let yourself get away with that, because when you're trading, you have yourself to stay accountable to. So don't let yourself get away with certain things, because it will come back around. That's just how we work as humans. So that's all I got to say on that point. Anything else before we start to wrap for the day, brother?
No, yeah, I think that's pretty much all I got. Hoping my fighting Texas Aggies can get a win tomorrow. Okay. And yeah, just everybody have a great weekend. That's chat for jumping today. We love you guys. I appreciate you all being here. The bacon discourse earlier was really good. Oh, I'll float this actually before I go. How about Cholula versus Tabasco? I will be reading the chat. I don't know that I will see these things live. I'm a Cholula camp for sure. But I'll float that on the way out the door here.
I'm a Tabasco. I'm gonna have to go to Tabasco, unless it's like the Green Verde Cholula.
Oh, the green Cholula. That is kind of a different level. But I'm talking just standard red sauce versus red sauce.
Tabasco. I'm going Tabasco. Easy.
Tabasco. Okay. All right.
Yeah, Cholula's a big fan favorite though. So,
yeah, Cholula,
especially amongst people very close to me. No, but with that being said, I know Theta Trader, you had mentioned Ecclesiastes earlier. Literally one of my favorite books in the Bible. So fire, gonna have to check that out again. But with that being said, thanks for taking the time to hang out with us. Theta Trader, Dan, Grumpy. We didn't see no big deal today. Stefan, Kim, everybody else. Hope you guys had an amazing day. Great week. We'll catch you guys next time. Peace.
When you've got a futures contract that's in Contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in Contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of Contango. So where Contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
Stephen and Atlanta, thank you so much for holding.
My pleasure, guys. And let me go on record as saying I think you've got Tasty Trade is the best brokerage, and you guys have the best content. And I'm not here just schmoozing. Y'all are the best on the planet, period, for what you do. Go on record as saying that. Tom,
Thanks.
You were the great disruptor when it came to forming Thinkorswim and then Tasty Trade. You're an innovator.
I appreciate you calling in. Good stuff as always. Thanks, man.
If you missed the live show, here's our cherry on top weekly recap.
You know what my first concert was when I was very young. It's quite embarrassing.
Anson.
How'd you know that?
I mean, I feel like everybody.
How did you know that?
Because who else was popular then in like the late 90s?
Oh my God, that's amazing. That was cringe. There it is, the song. Yes.
Yes. All right. Good luck. Good trading. Let's go eat some roost.
Peace.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye, bye to Benber, Nanky. Cry your eyes out, past the hanky. Gone from the Fed, but still looks swanky. Bye-bye, Chairman Benber, Nanky. Benber, Nanky, hardly knew ya. Benber, Nanky, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Benber, Nanky. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
This
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
When you've got a futures contract that's in Contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in Contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of Contango. So where Contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
Stephen and Lan, thank you so much for holding.
My pleasure, guys. And let me go on record as saying I think you've got Tasty Trade is the best brokerage, and you guys have the best content. And I'm not here just schmoozing. Y'all are the best on the planet, period, for what you do. Go on record as saying that. Tom,
Thanks.
You were the great disruptor when it came to forming Thinkorswim and then Tasty Trade. You're an innovator.
I appreciate you calling in. Good stuff as always. Thanks, man.
If you missed the live show, here's our cherry on top weekly recap.
That was cringe. There it is, the song, yes.
Yes. All right. Good luck. Good trading. Let's go eat some roost.
Peace.
Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the Friday edition of What It Is That We're Trying to Do. Welcome to the live from the Chicago studio edition of What It Is That We're Trying to Do. It's so funny. It's so funny that I am here live in the studio, and I think I am the only one who is here live in the studio. That is absolutely hilarious. And so thank you guys so much for being here and being a part of the show. If you are watching over on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion and communicate with our brethren who are also watching the program. Man, today, man, you can do whatever you want to do. You can celebrate if you're a bull. You can celebrate if you're a bear. You can commiserate if you're a bull. You can commiserate if you are indeed a bear. Because I think today and yesterday and a couple of the days before that, everybody's a winner and everybody's a loser at the exact same time. And of course, if you have a question for me, I would drop it in the chat box. The earlier you get the question in, the higher the delta that I will get to that question. So I'll try to get to as many as I can here in just the next little bit. But let's go into the market there. Ryan and Paul, who are running the show today, thank you guys so much. Let's take a quick little gander at what might be going on. So I've got, let me see here. I got my blue. It's not exactly Glacier Freeze, but it's a little something. I got EME S&Ps up 24, right? You've got the risk-free instrument, also known as the NASDAQ Futures, extremely high risk product, up 114. You've got the Boomers up 214. And of course, you've got the Russell 2000 Futures Index down 22. So a little bit of a mixed bag when it comes to market activity, but man, it has been a whipperoonie if I've ever seen one. You've got the shifties even getting smacked around a little bit, down 61 on the day. Where's silver at? Where's my silver bros at? Where my hot brothers at? Hold on. Let's go to SI. Silver down $2.80. Man, look at that. They really took it out behind the woodshed today. It was under 50 a little bit ago, I think. And so, man, that's some crazy, crazy stuff. Let's take a look at some of this market movement here. Let's go to a trade page or a chart, I should say. Let's go to S&Ps first. So, I mean, look at this day, guys. I mean, this is some really, really crazy stuff. So if we go all the way back to like the beginning of the day, right? So like here's your market open right around here. Look at the back and forth. Look at the up and down. I mean, there was just so much craziness going on. And I mean, if you look at like the high, like the range on the day, we could pull up a daily chart, but that's not very fun. Like if you look at the range on the day, I mean, the high was 66.97, right? Which we're right back to the highest now, 66.97, almost to the tick actually. But we were as low as 66.40. You know, relative to the last couple of days, this feels a little bit muted actually. Relative to the last couple of days, I'm like, y'all got me out to Chicago for this? Like, y'all got me out for a 60-point range? It's like, come on, man. I need at least 95 before we can kind of even start serious negotiations. But ES on the highs of the day. NASDAQ, very similar type of pattern from a standpoint of there being lots of back and forth, lots of up and down. And, man, it's almost like nobody knows. It's almost like, man, look at that. Lots of unpredictability, lots of randomness in the market. I mean, I know ICT knows, but he's pretty much the only one out there. And so, yeah, so NASDAQ doing what the NASDAQ does. You got the boomers that have been looking good. But let's look at metals, too. I do want to take a look at the metals. If we look at gold, so let's go to we could do a 1-minute chart, I guess, but I kind of want to do, actually, no, I want to do a 1-minute chart. Because some of these moves within a minute have been wild. I mean, we looked at this, I think, just yesterday. Some of these moves in the metals, like within the minute, have been absolutely crazy. In fact, let me go to let me do a daily chart just for a second here, because I want to look at like the last couple of. We can look at today. So look at that. Looks a little too pronounced for my liking. Let's do like a 6-month daily chart. Man, look at that candle. That is the final boss candle. That is the Bowser candle, as we like to say here on the show. And so, man, look at that. We had them all the way up to 43.92 last night. And, I mean, it looked like a foregone conclusion. It's going to hit 4,400, and then it's 4,500, and then it's 5,000. And it's just, it's all she wrote. But, no, they turned it around real quick. And they have since squashed the metals. And silver is even crazier than this. I mean, gold is only down. This is only a little over a 1% move for gold in terms of the daily movement. I mean, the range is crazy. I mean, look at that range. Look at that range. Guys, look at that. A 196-point range for gold today. I mean, okay, you got me down to Chicago for this. All right, that makes a little bit of sense. But, man, all the way down to 42.13 on the lows today, and now we're 42.50, and it's kind of settling in. But if I look at silver was almost up to 54 last night, I think. 53.76, and now it's essentially $3 lower. And so this thing is trading like a crypto deal. This thing is trading like a Solana type of deal. And so it's wild times out there, man. It is wild times. You've got volatilities up today, of course. You've got the VIX futures are up they're down 92 cents today. We're up earlier, though. I guess I misspoke. When the markets were lower, they were up. But now you've got VIX futures down $1 to 21, which it's been a while since we've been able to say that. So that's kind of nice. You've got, VIX down $2, but down to 23. And my mouse just kind of went crazy there. You've got the VIX down $2, but down to 23. That's some crazy stuff. It's been a minute since we've been able to say VIX down $2 and down to 23. And so there you go. So all right, there's a little bit of market commentary. Is it gonna help you become a better trader? I don't think so. Is it on par with anything you would find anywhere else? It absolutely is. 100%. So, all right, so what I want to do, though, let's take a look at, man, I see you guys in the chat. Man, look at you guys. I see you guys. Oh, man, look at you guys are trolling me. I got this. This is my new shirt. You guys see you guys trolling the new shirt. I got this shirt for I got 2 shirts, actually. So I got this one for today. I have a brand new one for Sunday night, too. Which, don't forget, Sunday night we're going to be in Detroit. And so I'm so excited. So Ryan or Paul, do you guys have the art card for Detroit? I know I'm kind of springing that on you guys, but we can put that up for just a couple of seconds. Sunday night, I'll be at the Magic Stick. I'll be in Detroit. I'm so excited. I cannot wait. It's going to be amazing. I mean, I grew up in Detroit. Like, I spent the first 25 years of my life in Michigan before I went down to Tennessee to the University of Memphis for my doctoral program. And that's where I left Tennessee 4 years later with two things, a PhD in finance and the most wonderful woman in the world as my wife. And so, but the first 25 years of my life, I was just kind of, just floating through, man, just trying to figure it out. And Detroit is obviously home for me. It's very nostalgic for me, and so I'm very, very excited for the event on Sunday night. But what's funny about the event on Sunday night is, I got two new shirts. I got one for today and I got one for Sunday, just to try to snazz it up a little bit, just to try to dress it up, just a wee little bit. And so, we'll see. There's only so much you can do to the lettuce, though. I see the lettuce is kind of wilting today, but that's okay. Once again, I'm really good in 2-dimensional space, but you put me in 3-dimensional space, I'm not so sure. So, all right, so let's get to, wait, hold on. Let me see. Let's do, wait, is that Errol Coleman in the chat? Wait a minute. Homeboy's at home, right? He's playing Xbox right now, but he's also in the chat? Man, look at this guy. He says I'm at the HQ now. He must have just walked in then, because he hasn't been here for the last 2.5 hours. And so what's going on there, E? Like, we'll catch up, I guess, after the show. But yeah, I appreciate you, man. Appreciate you very much. And so I appreciate the rest of you guys too, of course. But let's do, so a couple of things in the portfolio. So number one, we have our GLD spread. You can see that the fine folks over at Tasty Trade are alerting us to the fact that this guy is in the money. We have not done a good job on this trade, and it is set to expire here in about 2 hours. And so we should probably do something, right? It's marking at $5. You can see right now it's actually marking at $5.10, but we know that the maximum value on the spread is theoretically $5. Sometimes if you hold the spread all the way to the end like this, you have to pay an extra penny or two. That's not that uncommon. From time to time, they may let you out for exactly $5. We're probably not getting off the hook for like $4.98 or $4.99. And so it has reached the end. We have indeed gotten to the end of the road. Boys to Men tried to warn us 37 years ago, and yet it has now happened to us right here. So let's go ahead and let's close out of this GLD short call spread that didn't work, of course. Market's on the highs today. Man, how about that? That's crazy stuff. And so, all right, so they're trying to tell us we're going to have to pay $5.30 to get out of this spread. I don't believe it. We're going to go in at $5. I don't think we're going to get filled, actually. I think we're going to need to go $5.01, but that's okay. I know I don't need to pay $5.30. This is where knowing, like understanding your spreads, understanding what you've signed up for, something I've said and continue to say so many times on the show. You need to understand that, when you have a defined risk vertical spread, the width of the spread, that denotes the maximum value of that spread. And so if it comes time to close that spread on expiration day, it's fully in the money, the exact situation that we're in right now with GLD, it's helpful to understand that you shouldn't have to pay more than the theoretical max of the spread. Now, there is a bit of a journey. There's a bit of an adventure when you go from theory to practice. But here, the adventure of the journey should only be about 1 or 2 cents extra. Like, we shouldn't have to get out of this for $5.30 or $5.25 or $5.20. $5.01, $5.02. That's gonna make some sense. So let's try $5. I don't think I'll get filled, but I'll give it a shot. Look at that, we got filled. How about that? Well, look at that. Well, I wonder who was on the other side of that trade. I don't know. I kind of feel like we got the best of it. I know we lost on the trade, but in the end, I kind of feel like we just got a little W, a little something that we can put in the old log books there. All right, so that is GLD. It's over and done with. Okay, but that was a good exercise. Even if we would have had to get out for $5.01 or $5.02, you saw it was marking at $5.30, whatever. We did not have to get out for $5.30. Like, we were good to go at $5. And so hopefully that was a teachable moment for you guys out there. The other trade that I wanted to do today, you know what? Well, so a couple of things. So number one, man, finally got some green on the screen, which is kind of nice for the portfolio. I mean, you can see that right here. You can see, man, look at this. Wow. We got some green on the screen. And let me even grab a different color here just to mix it up a little bit. Look at the P&L Open Bros. Man, they've got slim pickings now. They have got some slim pickings. I mean, yeah, they still got a little rigatoni action right there. But we're getting helped out a little bit today. You've got rigatoni down 42 cents. It was actually down like $4 or $5 earlier, which was super nice. But even still, I will absolutely take it. I will 100% take it. Obviously, getting some help on the GDX strangle, so that's good. You've got, Chipotle's down, but that's what Chipotle does. And then, IWM, we're just kind of hanging in there. Palo Alto, we're just kind of hanging in there. Obviously, Rigatoni, we just talked about. Starbucks, again, the flight to quality for Starbucks continues. We're going to wait to sell any calls against our shares. I'm really kind of, eyeballing this 92. Hold on a second. This 92 level to maybe sell some calls, because that was my original entry price on the position. Now, I've sold so much premium along the way. We've had this trade on for almost a year now. Like, my basis on the trade is well below 90. It's probably below 88. I'm not sure. We'd have to actually add up the numbers. Maybe we should do that sometime soon. I don't want to do that now because I want to do some other things, but maybe that will be something that we should do. Soon. Oh, I meant to mention this earlier. So I'm going to Detroit this weekend, right? I'm going tomorrow. Got the event on Sunday. Well, my parents still live. They still live in the house that I grew up in. Like, I still live in the same house. So I'm going to go by and I'm going to see my parents. I just called my mom like an hour ago. And I don't get to see my parents that often anymore because I'm down in Florida most of the time and they're up in Detroit. Well, it's going to be amazing that I'm going to get to see my mom and my dad on Monday morning. And I'll get to see them before I fly back to Florida. And I think I'm going to put in a request. And I don't know if the kitchen will have time to prepare this for me or not. But I may get to have my mom's award-winning, like, gourmet, like, second to none apple cake. My mom makes this apple cake that is unbelievable. It's unbelievable. It's got all the gluten. It's got all the dairy. It's got all the deliciousness. So Autumn would never, ever, ever let these things fly in our home in Florida. So the fact that I'm up in Detroit, it's like, man, now's the time. Like, now's the time to have some of Mama Schultz's apple cake. So I'm super excited about that. I guess I'm having it for breakfast on Monday, but I don't even care. And so, all right, so looking at the positions, that's pretty much all I wanted to talk about in the positions. I do want to do a couple of new trades, though. And so we've got volatility. I mean, it's down now because the market has rallied so much, but I mean, it could easily sink back, Volatility could indeed elevate and expand again later into the day here. But what I want to do that I was looking at earlier, I'm thinking let's do MES. We haven't traded the futures options. It's been a while. You can see the IV rank on here is still 33. Right, so you still have an IV rank of 33, 31. That's pretty good, right? For, selling premium, this is a great level to, consider new short premium positions. I'm like, man, we haven't used the futures options in a while. And I know we've got earnings season coming up. Like, we've got all the heavy hitters starting, I think, just next week. And then the following week is going to be even crazier. And so I definitely want to, keep plenty of capital ready to go for those. But I also want to be, mindful of the fact that, man, the indexes have some decent volatility now. So with the decent volatility in the indexes, let's go ahead and let's put something on an MES. Maybe we'll put a little something on an MNQ, and then we'll kind of see where you guys are at. So let's go to MES here. Let me see if I go to let's go to the trade page. Let's go to let's do like November 28th. We'll do a little end of month. We got 42 days to go. I'm thinking for MES. What if we just do like a 20 delta strangle? Again, this is the Tasty Trade Classic, right? This is your plain vanilla. This is your Betty Crocker strategy. I mean, this is it, man. Selling a 20 delta strangle, selling a 16 delta strangle, whatever. You're getting premium working for you. You've got volatility is elevated. Like, this is definitely, one of our go-to strategies when it comes to opportunities when the market volatility is indeed on the rise. And so I'm kind of thinking, let's not really overthink this. What if we sell the 6,300? That's a 21 delta put. And then we sell like a 69.50 call. We're going to pick up about 100 points on that. You can see that right here. So I pick up 100 points on the credit. Each point is $5 in the MES multipliers. And so that means that my maximum profit is $510, right? The 102 points I'm going to sell it for times $5 per point, I should say. The buying power effect is very, very, very modest. Only $1,200, for a $30,000 account. That's pretty good. That's only about 4% of the account. And then, of course, you do see the elephant in the room. For all the new people that might be watching, you're like, whoa, is Homeboy going to gloss over this max loss of infinity? I think that I am, actually, because I'm going to say it's very unlikely that I reach a state to where I am never not losing money. It might get bad. It might get really, really nasty. But I don't think we're going to get to that point. So I'm going to roll the dice that we don't necessarily lose an infinite amount of money in the S&P 500 index. Although theoretically, it is possible, and you need to know that. And so, all right, let's go ahead and let's put this guy on. My setup here is it's a little different than what I'm used to at home, of course. But thank you to Ryan and Paul for helping to get me set up, which is really, really, really helpful. Let's try maybe 101. I should get filled. All right, so we got filled for 101. So there you go. We're in an MES strangle. What I want to do now, let's go to MNQ. MNQ. I'm thinking we'd do something similar. We go to the 42-day cycle, and man, look at these options. I was looking at these earlier. I mean, look at this. This is MNQ. This is the NASDAQ Micro Futures. Look at these options. Man, are these the Batista markets again? Man, who's running these spreads? Is this Vinny's market? Look at that. That's a 60-point spread between the bid and the ask on an MNQ 30 delta put in the 42-day cycle. That's insane. Like, that's insane. We're not talking about, this isn't like open or like some stock that just IPO'd a couple days ago and nobody knows what to do with it. This isn't Rigetti. Right? This isn't rigatoni. This is the NASDAQ Micro Future Index. I know the liquidity for MNQ is typically not nearly as strong as MES, but this is going a little bit too far. I think I'm still going to go for a fill in here because I kind of want to, just test it out and see what happens. But man, look at those markets. I mean, normally for MNQ, you might see it 2 to 4 points wide, I would say, would be pretty normal. And I mean, when I see the MNQ markets and they're 4 points wide, I even look at that and I balk a little bit. I even look at that and I hesitate and I'm thinking, man, that's kind of wide. And now I'm looking at this thing and it's 80 points wide. It's 90 points wide. I'm like, man, that's really, really, really wild. And so let's see if we can get a decent fill. I'm curious. I'm just curious to see. Like, if I go in to sell a 30 delta put, like I'm going to sell the 24,000 strike, right? I go in and, I mean, look at this. Just so you guys can see this before I go to get it filled, I'm 386 on the bid, 392. It's obviously moving as the market moves, and I'm 458, 460 on the offer. That's a very, very, very wide market. Now, am I going to go in on the bid price like a Johnny? No, I'm not going to do that. I'm going to go in around the theoretical mid price, which is what you see right here. I actually don't think I'm going to have a hard time getting filled because these markets are still very, very, very active. And so I'm going in just under the theoretical mid price. The theoretical mid price is 428.50. I'm going to go in at 428 even. I think I'll probably get filled. And so let's go ahead and see what happens. No, I didn't get filled. Wow, look at that, man. They're driving a hard bargain. Maybe these are Vinny's markets. Isn't Vinny in school right now? And he's running these markets during class? Yeah, that's a power move. But if I go in here, 428, let's try 427. I don't think it's going to require too much discovery. Wow. Couldn't get 427. Okay. Let me try, I'll try 425.50. Again, I don't mind giving up a couple points, but I don't know how far I want to chase this thing. Wow. I can't believe. I really can't believe. Now, I know that the market is rallying, right? As we speak. And so this price is going to naturally be dropping because the market is so strong. And I mean, S&P 500 just rallied, 5 handles in the last couple of minutes. I mean, NASDAQ just rallied 30 handles in the next couple of minutes. So I would expect this number to go down because we're moving further away from the puts. But I just want to see where we get filled. 424. Wow, no takers at 424. Man, they're really sticking it to us. 423. No takers at 423. All right, guys, I don't know, man. I'm going to leave it at 420. Oh, we got filled at 423. Okay, so there you go. We finally found it. So we had to give up a few points, of course, off of the theoretical mid price, but there you go. That's just the way it is. But man, I see you guys. Let me see here. Let me find somebody. Can I surprise and delight somebody? I see people talking about cheesecake. No cheesecake. It's apple cake. It's apple cake. Somebody's talking about a graham cracker butter crust. No. Forget about all that stuff. It's apple cake. I don't know what the crust is, but it's amazing. It might be like pumpernickel. I'm not sure because it's brown. Like it's like a brown. Yeah, it's brown. I mean, it's not. That's the best way I can put it. So I don't know what she's doing with it, but it's amazing. And so where are we at here though? Let's see. You guys are making me laugh. Ashman is saying I'm using the magenta on the screen now. Yeah, I've got different drawing tools here, but I appreciate Matt helping me out to get it set for me for the show. So let's go ahead. I'm going to go to the beginning here. Let me go to all the way to the beginning. Oh, look at Wanderer Slim. She says, oh my goodness, look at the magnificent floof. Truly the Fabio of the options world. Man, I appreciate you. I got to get it. The problem is that there's so much lettuce that it falls, right? It wilts. And I want it to go back. I don't want it to come down. I want it to be kind of like a back and a down. Not like, just a back or just a down. I kind of want like an angle deal. But anyway, man, look at you guys. You guys are making me laugh. Let's see here. If I do, let me go to the beginning. All right, man, you guys are blowing this thing up today. I appreciate you guys so much because, man, YouTube is going to think. They're going to think this is good stuff, and boy, are they in for a surprise. Let's see. Where am I at? Man, you guys really, really crushed it today. All right, here we go. Ashfin's in the house. What's up, Ashfin? I appreciate you, my friend. Orgdenu's in the house. Greetings from Italy, Dr. Jim. Good luck in your event. I'm sure you'll have a false. I can't wait. The registration's been amazing. There's still time to register, so go to tastylive.com/events. You can still register. I'll be right there in Detroit. It's going to be awesome. I heard the venue is a really, really cool spot, and so it's going to be great. It's going to be really, really, really fun. Let's see. Orgdenu in the house. Greetings from Italy. I already did that one. Let's see. Brian Dowdy's in the house. Yeah, I thought so. Dan Ducarn in the house. What's up, B-minus humor time? Let's go. Sam L, happy Friday, Doc. Time to wrap up the week with some B-minus wisdom. Well, the wisdom's C+, the humor is B-minus. And enough caffeine to make us believe today's trades are strategic adjustments, not emotional decisions. They're all emotional decisions. Don't let anybody tell you differently. And so it used to be so funny when I used to bring... Like when I used to do the skinny on options, abstract applications, with Tom and Tony for so many years. I mean, now it's with Nick and Tony, which is a huge uptick, of course. But for so many years, it was with Tom and Tony. And for 5 years, it was here in the studio. And coming in to do it with them was so fun. But I used to always enjoy when I would bring segments like prospect theory, for example. Like talking about the emotional side of trading, talking about the emotional elements of trading. And Tom, he would just poo-poo that completely. He would hate those segments. And I'm like, why do you hate these segments so much, man? He's like, because I want to talk about like objective things. I want to talk about this. I want to talk about that. I want to talk about optimization, whatever. I'm like, this is the stuff people need to really focus on, in my opinion, because this is such a huge part of what we do on a daily basis is controlling your emotions, mastering your emotions, having a sense of, where you might fall, into certain traps when it comes to, hope, greed, overconfidence, right? Underconfidence. There's so many different things that are happening. We're not robots, man. And it was always so funny to do that with him just because he really, really did not enjoy it. But I enjoyed it. And I enjoyed it more because he did not enjoy it. And so David Gallimore, Dr. Jim, when talking to stock friends, why do they believe long stock always goes up, but a cash secured put always gets tested and closed for a loss? I don't know why they believe that second part. But yeah, most people, right? Most people that are just somewhat aware of the stock market have a belief that over time the stock market will indeed go up. Is that belief misplaced? I don't think so. I really don't. Like if you look back historically, right? As long as you give yourself a long enough time horizon, I think there's never been a 15-year period in the market where you put money in and 15 years later you did not have more money. Like I think every 15-year window, starting at any day, you pick the day. You could start like the day of the Great Depression in 1929. You could start like the day of, the Great Financial Crisis of 2008. You could pick whatever day you want. I think every single one of them, 15 years later, you had more money. And oftentimes, you had significantly more money. And so longer term, playing the market to the upside just makes a lot of sense. Now, the cash secured put thing is always funny to me because not even with like a cash secured put, but with any option strategy for that matter, with, a margin put or whatever, people just inherently think that options are risky and, long stock is not risky. And that's just kind of the assumption that most people make just kind of going into, some type of conversation or dialogue about investments. That's always interesting to me because long stock or a short put are equivalent positions if you match them notionally. In fact, if you match them notionally, you could actually make the case that the short put is far less risky than the long stock. Because of course, when you buy stock, you have 100 delta. When I sell a 30 delta put, I only have 30 delta. So if that's matched notionally in terms of the potential notional exposure of the position, the short put is a less risky position every single time. Now, to be fair, most of the time option traders are not matching that notionally. So that could be viewed as being a little bit misleading. And it kind of is in that context. But still, to begin the conversation, I think it's helpful to understand that if options are going to be quote unquote risky, that's not a product problem. That's a sizing problem. And so I really think that, it's very helpful to make sure that we identify what the actual gimmies and gotchas are when it comes to whatever we're doing. And so, I don't think that's totally misplaced there, David Gallimore, but it is kind of funny. Let's see, Brian Dowdy in the house. What's going on there, Brian Dowdy? They're trying to tell me that you're half as E17, but I know you're not. You're not half as E17, or even 18 for that matter. Hello, Dr. J. How's our realized year-to-date Pinot looking, man? You don't want to know, bro. It's not good. I mean, we're getting helped out today, obviously. And so this is not the worst day ever to look at this. But, we're doing okay. We're hanging in there. We were on the razor's edge of even there about a week ago or 2 weeks ago. And so we have since recovered a little bit. So this is pretty solid. And I'll take it, obviously, having a really, really nice day today. But again, I would not use this as representative of what you can do yourself. I mean, obviously it means something, but at the end of the day, I've made so many concessions for the show because I want there to be most, if not all of my trading, kind of contained to within the, Dr. Jim power 3/4 of an hour. Like that's what I really want it to be. So I'm not trading in the mornings. I'm not trading around, economic numbers in the, at 8:30 or whatever, when there's lots of opportunities as premium sellers. There's lots of opportunities as, future scalpers or whatever, or just whatever you're trying to do. Because it's so important to me that you guys have kind of a continuous stream. Because I know so many of you guys watch the show on like a daily basis. And I can't even tell you like how amazing that is and how great that makes me feel and how much responsibility I have because of that. And so one of the concessions I've made is only trading on the show. So that means, I don't take a ton of victory laps when I'm, making, decent returns. And this isn't even, we're not even up to the market return yet, I don't think. Maybe we are now because of the down move. I don't know, but it's already rallying back. Anyway, it doesn't matter. But I'll always show you guys. If you guys want to know, I'll always tell you guys where I'm at. And so again, when I'm down 2,000 to end the year, just remember that we had this conversation. And so, but thank you there, Brian Dowdy. Sam L says, Dr. Vic's hitting 29. Oh my gosh, the internet would implode. Something's definitely cooking. Could be this year's hottest Halloween costume, guaranteed to terrify both children and the Open P&L bros. Did the VIX hit 29 today? No, it didn't. You're just talking about hypotheticals at this point, right? It didn't hit 29 today. Whoa. It did? Well, how about that? It did. The VIX was at 29 today? Wow. And look at that. I mean, this is it, right? So I didn't even know that this happened because obviously, I was here in Chicago. I was getting all my ducks in a row. I was, saying hi to a lot of people I don't get to see on a regular basis and doing other fun little shoots and stuff, fun little Tampa shoot that we got for you guys coming on down the shoots. Vanetta quizzed me on some things that are unique to Tampa because we have the Tampa event coming up in December. And it was fun. It was really, really fun. So I'm sure that you guys will start seeing that promo in the next couple of weeks. But the VIX was 29. Wow. And the internet didn't implode? I don't know, man. I'm assuming some websites are down. Some websites are definitely not going to be functioning on a VIX 29. Even if it was temporary. Even if it was very, very, short-lived. And again, this is why we do what we do, right? When volatility spikes and you sell the volatility, it's just a really, really good way to approach the markets. And again, you didn't really have much time to kind of capture that 29 VIX. I mean, in fact, hold on. Let me look at a 1-minute chart. Let's get my man Errol Coleman some royalties today. Now let's do the 2-minute chart, actually. Hold on. When did the VIX hit 29? Was it overnight? Oh, it was in the morning. I got it. It was overnight. Yeah. Yeah, because the NASDAQ was down 400 at one point. And then, obviously, you had Taco Friday, and, that was all done and dusted. That's what it was. That's why I didn't see it, because it happened overnight. I saw that the market was down a lot overnight and then I rallied back and recovered. But when I saw the VIX 29 point, I assumed it happened during the day, but it did not. And so Theta Trader TT, 1,300 hours. Where did my day go? I must be as jet lag as Dr. Jim. No, I'm doing good, man. I'm doing really, really good. You know what I watched last night on the plane ride in? I've seen this movie before. This movie is so good. So good. Lincoln Lawyer with Matthew McConaughey and then Ryan Felipe, I think. And then there's a few other people in there that are also pretty famous. But man, that movie is so good. Like there's so many little twists and so many little turns. And I hadn't seen that movie it's been over 10 years, I think, at least. And that was good. It was a lot of fun. I enjoyed that a lot. And so let's see. Wolf's in the house. What a week. But is it even a Friday with Dr. Jim if you're not slinging some stocks, slamming a 44-ounce Pepsi, Diet Pepsi, and grinding through a bowl of tuna and applesauce? Oh, man, yes. Now, that is a grind. Let me tell you something. It is never not a grind. I've probably had... Man, you're taking me back now. I mean, I'm getting taken back for the nostalgia of going home to Detroit. Now I'm getting taken back for the nostalgia of, like, undergrad and stuff. I used to cart around my yellow and black cooler on campus because I was like, I just started competing as a bodybuilder. I was competing once or twice, like every year, all the time. I was always in training. It was so much fun. Like I loved it. One of the things I used to do was I would carry around my cooler with me on campus, like in class. And I used to have tuna fish and applesauce multiple times a day, every single day, because it was so easy and it was portable and it was quick. And boy, was it nasty. Oh, so nasty. I mean, you just had to grind through it. So Wolf, enjoy your lunch today. We actually had some small Cheval double cheeseburgers, so I went in a slightly different direction here today. But Doc said yesterday gold is a safe haven, and today both the Shifties and the Hump brothers, no, it's the Hunt brothers, Hunt, are getting smacked. Where's iPod Touch when we need them to guide us? Yes, where is iPod Touch with the event horizon? Because you got gold down 48, but again, it was down another 40 points a little while ago, and so they're getting their act back together. And so I think we're gonna be okay. Sergio is in the house. What's up there, Sergio? Theta Trader says shares are basically infinite duration far in the money short puts. That's exactly what they are, actually. That's exactly what they are, with basically no extrinsic value with the far in the moneyness. And so I really like that a lot. That's exactly what they are. It's really, really no different. And so Dan Ducana says, that is crazy, tuna and applesauce. The man is sick. Yes, it was, am I proud of it? I mean, kind of, in a really, really odd kind of way, but I don't think I'm going to go back to those days anytime soon. Grumpy Mike says, Dr. Jim, what's for lunch? Yeah, we had double cheeseburgers from Small Cheval, which is pretty good. Joe YQ in the house. What's up, my friend? The Preston. Dr. Jim, you rock. JPM, do you like it here? I'm feeling a little less trigger happy these days. JP Morgan, are they? Well, it's a Friday, so JP Morgan at 298. Did they just have earnings? Maybe they did because all the financials are reporting, I think. I'm not seeing it on my screen here. I see no earnings date coming up. So for JP Morgan, I'm kind of thinking, I don't know. I mean, the IV rank is 23. It's not too bad. I'm going to pass on this for a second there, the Preston, just because we have so many earnings coming up. I want to make sure I leave plenty of capital ready to go and be deployed for the earnings that are coming up. I mean, right now, I don't have too many positions on. Well, I have like 9, I guess. That's kind of a lot for me. Maybe middle of the road for me. I'm like 12, 14 is kind of a lot. And so I don't want to necessarily go out of my way to put on any more individual stocks. Indexes are a little bit different because it's just naturally going to be a smoother ride from start to finish. And so that, of course, is going to be one thing to take into consideration. But let's see. Kyle Hamill's in the house. What's going on? Kyle Hamill says, Dr. Jim, if you were on a plane at 30,000 feet and someone yelled, is there a doctor on board? Would you stand up? I would not. I would absolutely not stand up. I would sink down in my seat and try to not make any eye contact. That's what I would do. Because the only thing I'd be able to help with is, here, take some zinc. Like if you take zinc, that's going to fix 97% of your ailments. So I would probably be correct just by the basic probabilistic nature of what's happening. But if it's something that's somehow immune to zinc, I would be in trouble. I'd be in a lot of trouble. And so let's see. Steve Aguilar is in the house. What's up, my friend? Ranch is in the house. Wolf in the house. I like all the content on Tasty, but always save my thumbs up for Dr. J. Man, look at you. Wolf, I'm going to send you that cash that we talked about for you putting this comment in the stream and performing this very action at this very time. So thank you, my friend. You're saving the thumbs up for me. The rest of you guys, if you haven't given a thumbs up to the show today, please do. If you haven't subscribed to the channel yet, please subscribe. I think you have to be a subscriber to chat in the chat, which is good. It kind of helps us kind of filter through the riffraff. And so these would be ways that you could help us out and support. Obviously, I need that watch time. Like, I need the eyeballs. Like, I need the stats. I need the numbers. And so I appreciate you there, Wolf. Man, appreciate you a lot. Theta Trader says he looks like a lion. I'll take that as a compliment. I'll take that as definitely a compliment. I'm probably more like a Rodney Pete than like a Calvin Johnson, but I'll still take it as a compliment. But let's see. Margin Walker, what's up, Jim? Appreciate you, my man. Crash canceled. You know it. I don't know why. This has now happened 12, 15 times since April. Again, Liberation Day 1.0, you got us. Like, you pulled the wool over our eyes. You fooled us. Okay, nicely done. But he's done the same thing. Trump, the administration, whatever, all the talk, all the jawboning, all the 1,000,000% tariffs, and then whatever else, cooking oil is getting banned and whatever else. It's like, man, he just walks it back. He walks it back within 48 hours at the most. So it's amazing to me that the market reaction is still so visceral, like on the original tweet or Truth Social or whatever it might be. Man, it's really funny to me that the market is still so keen on overreacting in that moment, knowing that it's going to get walked back 1,000,000%. And so, Emmett Morrison says, holy moly. Dr. Jim has a collared shirt on. Man, I did a little something. It's a brand new one, too. And I got a second new one for Sunday night. And so I'm excited about that. Let's see. Steve Aguilar says the zoom in was epic. Yeah, I'm sure it did some things to the floof. For sure. In fact, I even felt the wind come from like the zoom in, and it kind of, I got one of these kind of jobs. They're in the wind, and so there you go. Where are we at? Ashray says nobody showed up to see Dr. Jim. Hey man, it's a Friday. I get it. I 100% get it. I'm going to see everybody tonight. Today's a weird thing because we've got Tom's party tonight, and so I'm going to see everybody tonight. So everybody's going to be there, and so it's going to be super fun. And so, Rand says, Sergio says crash canceled, crash course not canceled. That's correct. And I see E is in the house. No, crash course, brand new crash course drops tomorrow. Or maybe Sunday. Wait a minute. I think it's Sunday. Sunday morning, brand new crash course drops. How to find a trade. I walk through the checklist. It's a fun little thing where we start with a basket of like 6 stocks. And it's all the stocks that you know and love. It's Apple. It's Tesla. It's NVIDIA, of course. I had to find another way to say NVIDIA and try to teach you guys how to say it right. And so that is in the crash course. And then we go through different market metrics. And then based on which ones have the better market metrics, we start eliminating stocks. So I kind of show you a bit of a step-by-step for, all right, like how do I want to make a trade. I see there's opportunity. Volatility is higher. How do I actually walk through the steps to find a trade? That's exactly what we do. And this crash course is much shorter than some of the ones we've had before in the past. Most of the ones previously are like 35 to 45 minutes. I think this one's like 20 minutes. Like, we are super, super efficient. And so check that guy out on Sunday morning and give it some watch time because I need it. Rant says, I'm bullish. Whatever hair products Dr. Jim uses. It's not much. It's a little bit of a bunch of things, actually. It's a little bit of a hodgepodge. But we got to keep the mat tamed somehow. And in some way. Sam L says, Docs, in Chicago, time to go full cheat meal mode. Deep dish pizza, Italian beef, Garrett's popcorn for dessert. Jim Gaines can wait. This is Chicago finest indulgence. That's correct. And since I'm also in kind of dad bod mode, every day is cheat day. Like, that's the beautiful thing about being in dad bod mode. There'll be plenty of time to compete, in the future, maybe even the near future, but not necessarily right now. And so let's see. Donna Ski's in the house. What's going on there, Donna Ski? DTM says, favorite almost hour of the day. Yes, the Dr. Jim power 3/4 of an hour. So thank you there, DTM, for being here. Let's see. Steve Aguilar says, is there a Friday Trump tweet incoming? There very well could be. There absolutely could be. Let's see. Dr. Jim didn't get the email that's a work from home Friday. Yeah, I guess not. Let's see. Where are we at? Mikos. Here we go. Mikos thought he wasn't going to get mentioned, but he made it. Miko says 4 minutes late, and my comment here is already buried and lost forever. It is not. Much like the P&L Open Bros. Oh, they're not gone either. Like you think you've got them? No, you don't have anything. The market's starting to show a little bit of weakness now, and so we'll have to see what happens going into the end of the day. But guys, we made it. Somehow we made it to the end of the show. I can't believe it. I appreciate you guys, man. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I am jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf30. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys on Monday.
So, Tom, what is your definition of underwater?
The futures close 15 minutes after the cash markets close. So underwater means when the futures close under fair value, under the cash price.
If you're selling in the hole, what are you doing?
Oh man, if you're selling in the hole, you're puking. That means you're selling it at a price you don't like, but you have to do it because it's hurting too bad.
Tom, in the pit, when somebody would say it was an out trade, what would that mean?
An out trade's a mistake. That means one person thought they were doing one thing and the other person thought they were doing something else. And so an out trade is just another word for mistake. You can use an out trade in anything in life. When you just have a misunderstanding, that's an out trade.
When Tom says double whammy, what does he mean by that?
Ooh, double whammies when you roll down calls because the stock's going lower, and then all of a sudden the stock goes higher and you start rolling up puts, you're getting double whammied.
Let's make this quick. I got to get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You got to be aware of these things. Everything has value.
Well, not everything is value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents?
Yeah,
I wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look. Can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Watch me go, go, go.
What's going on, everybody, and welcome to the most dangerous show on the tastylive network. It's Engineering the Trade. I'm your host, Jamal Chandler, but enough about me. I got Errol Coleman in the house today. What's going on, man?
What's going on, brother? It's been a week. Gold ripping, everything ripping. So on that note, it's been a week, but good to be here as always.
As always good to have you here. I mean, what do you think has been like the wildest thing for you this week, or whether even you had it on, a thing that you saw? Because like you said, it's been a week. Whether it was the rare earth metal names, I don't know how much you were into those. Whether it was the regional banking names, those were a little wild this week. Whether it was semis, obviously there was always something going on with tech and the Nasdaq more recently, or is it gold or silver? Like what's the wildest thing you either were part of or you just noticed?
No, yeah, it's a good question because I was telling Gus earlier today. It feels like a market where it's like pick your poison. We got volatility, we got things moving in different sectors, like you kind of just mentioned. So, to answer your question, I would say gold and quantum computing. I think gold. I got a little bit of short gold delta on. Just been patient, define risk, taking it easy. And then I wanted to get involved in IO and Q. So I know we got RGTI, and the rest of those names, but some of the metals and quantum computing. How about yourself?
Good point. I kind of forgot. See, look at that. I forgot about the quantum computing.
Yeah, I know, right? Pick your poison.
For me, it's been gold for sure. So I've been short this MGC. When did I sell it? Was it this week? I don't even remember, but it was 4,000. I think it was this week. I don't know. It's moved so much to kind of forget. Right. But I sold it at 4,000, and then of course it's been a huge move this week. I want to say I did the beginning of the week, or I feel. But yeah, huge move this week. And so again, being patient on that one too. And look, I don't necessarily advise it, like being short something like that into this move. But the reason why I chose to is because it definitely seemed pretty exhausted. And again, the one thing I was always talking about was how far was above the 1 week moving average, that 5-day moving average. It was pretty extended. And I just felt like at some point it would at least pull back, and maybe I can be a little patient. Now, where it goes from here, who knows? Now you had a big pullback. We've had a big pullback on Friday too, and then we had a huge move up this week. So I don't know. It's going to be, you got to give yourself a little duration on that one. I mean, this gold right now, because it is being powered by some serious forces.
No, yeah, I could have swore earlier this week or last week you had made a comment on Twitter about gold, talking about the consecutive weeks gold has had, and I think the maximum.
Days ago.
Was it a couple of days? Yeah, I could have sworn. I seen you put that out there, and I think it was 10 weeks, and you were like, you said some reaction to it, and it really. That's what really brought the product to my attention again, and actually why I kind of added to the short position. I think that did influence me a little bit when I saw that data point.
I mean, it was a good one. So basically, it was talking about gold is up 9 weeks straight, including this week. This was the 9th week.
Okay.
Assuming that holds, we've still not been up 9 weeks straight. It has never been up 10 straight weeks, and I was like, never. Like, that is, tell me more. You know what I'm saying? Like,
I think I commented on that. I think I put the eyes emoji. Maybe that's
yeah, you did, and that was good.
All good.
Yeah, my bad. I think I dropped for a little bit.
No, we good.
Yeah, that was the thing, man. I saw that and I was like, never. Okay, all right, good to know. That made me feel a little bit better, and the pain that I was taking on that short for some of the week, I was like, okay, all right, cool. Now I'm sitting on this. And
I mean, gold was one of those products, actually, Jamal, where I wanted to get involved. I just didn't know how or when, other than the long side. I didn't want the long side. I was like, I don't really favor the risk reward now here. I know we can go to 1 million if we want to, but I didn't feel comfortable. But after it started putting in those impressive moves where I was like, no way, and then no way, and then on the 5th no way, I'm like, okay, now I feel a little bit comfortable getting short because I didn't plan on it, but it got so overextended to a point where I felt more comfortable putting risk on. I'll happily, let the market mess with the risk given the opportunity.
Yeah, I mean, I don't necessarily like to always try and call tops, but sometimes certain things where you get to the point everybody's talking about it.
Yeah.
And that's where it gets, and it's super extended to some degree, right? Like I said, it's pretty extended over that near-term moving average. I was like, all right, we got to do a little something here. Let's just see how this goes. Now, I have been trying to do things like, because I think actually, now that I think about it, I did the trade. I think I did it early last week, around 4,000, like middle of last week, sold at 4,000 on the MGC contract. And when we got the dip on Friday, I actually sold a GLD put spread against that. Now, it wasn't a lot of money, but still, it was a nice one. And I sold that. And so that actually worked early in the week.
Nice.
I took that off, and then it just kept going up. And so I
That's
actually
nice,
did
though.
another one of those today into this move. I sold a GLD put spread, and I also sold some GDX strangles. So just one strangle. So, just trying to sell some of that vol that's in there right now.
So when we had a little bit of a pullback, you sold some puts, was able to take advantage of that kind of dip buy while still maintaining that short bias that you were looking for.
Yeah, because I still feel like this has, a nice maybe 2-day down move in it. I feel like it could, I just, I don't know how, in what fashion that's going to happen, but I just feel like at some point we'll see a market where we sort of get this, realistically, I mean, honestly, one of my dream scenarios is a situation where not only we get a pullback in the market like 1% and 2% on a one day, and then also gold falls, right? So then a situation where everybody's just kind of de-risking. They don't want to be in these things for the time being because whatever, U.S.-China trade war makes them nervous, and whatever's going on with gold makes them nervous. And again, we've seen gold like go up when the market has been up and go up when the market's been down. So I don't think it's unreasonable to think that it can actually go down when the market's going down and everybody's de-risking.
Yeah. Quick question for you.
Yeah.
Silver. What are your thoughts on silver? I know it's kind of been in the same basket as gold, these metals. Did you have any thoughts on that product at all?
Yeah, I mean, I think
why you chose gold over silver or anything along those lines?
That's good. I chose gold just because I just felt like it was strongly outperforming like more recent, just in the past week and change. Like it just seemed like it was really kind of moving really high. And I don't know. I was a little more nervous at the idea of getting short silver. So I just felt like getting short gold was the better play.
Yeah.
It just seemed I liked it better, and I felt like I could do more things with it too. Like I said, some of those other plays. I know there is also, there's SLV obviously, but I just felt like I could also do some things in GDX. I could do some things in GLD if I wanted, and I had those two products to lean on. So I think that was the main reason why. And but I guess another big reason is I felt like, with silver, if I wanted to get short, I could use SIL. It probably could have a $2 move, but it still could be making a big move higher, and that's definitely a little more expensive. With gold, I felt like I could get a $10 to $12 move, and that's not like a huge percentage, right, move to the downside because it's such a bigger product. Whether you're using GLD or whatever, like say in GLD, obviously you could get like a $10 move, and that's like 5 to 6% or something like that versus a huge move to the downside. I just felt like I could get a larger number move using MGC, getting like maybe $100 move to the downside, and that would be like almost $1,000. That was the main reason why I chose it.
Yeah, I mean, with the way some of those futures products move, especially the gold futures, I mean, I think that was the correct assumption because it gets volatile. When you get the pullback, you get the pullback. You see it. Yeah. Yeah,
that was the thing. That was one of the main reasons why. And again, to be able to use like GLD or GDX or something like that to hedge against it as well. So
I got you.
We'll see where it goes, man. I don't know. I don't necessarily still feel great, even though I put on these trades today.
Yeah.
I don't know. We'll see.
I mean,
I just think it's kind of crazy right now, man.
Well, I mean, it is funny. We got a little bit of a pullback in gold, and I mean, just zooming out. I mean, you still got to ask the question: is this a pullback, or are we going to pause a little bit, or the pullback feels good in the moment, momentarily. But yeah, to your point, we'll see how we digest over like the next week or so.
Yeah, we'll see. What else are you looking at these days in general? I mean, is it all these things that we mentioned, or is there something else on the horizon, or what's up?
For the most part, again, there's a lot of things moving. I know what's been catching
the platform.
Yeah, I know what's been catching my eye is the IONQ. I know you're taking part a little bit of that, but I know I've been looking at that. Oracle. I'm still holding UNH.
I actually sold a put in there yesterday because they basically had 2 down days of moves and a couple of down days of moves. I was like, oh, okay.
Yeah.
Let's get it.
IONQ is one of those very kind of similar. I was debating on RGTI. I haven't taken part of that. Just been sticking with IONQ for now, but that was top of my list as well. And then Oracle's been getting hammered today.
Yeah.
I was up maybe 60-70% credit collected on that position, and now I'm up maybe 5%. So that's just in the swing of the last, today and last night, 24 hours.
Well, what you got on in here?
I sold let me see the exact strikes that I have, but I got long in Oracle. And honestly, I'm not one to really get long after something has an extended run, to be honest. But this was one of those. When I had to do with TikTok, I was leaning a little bit more bullish. I don't know if it was my youth coming out and hearing that news, but the position that I have over there in Oracle is I sold the 280s and I bought the 270s and collected about $3 for that.
And
370.
Wait, in Nove?
In the November 21st cycle, yeah.
Oh, okay. You sold what? You sold the 270?
I sold the 280s and then I bought the 270s.
Oh, okay. Okay. All right.
Yeah. At $3 wide. Collected $3 of credit, $10 wide. I'm used to doing $5 wide. So for me, it was a little bit of a more aggressive position, selling the premium at least.
Okay.
Yeah.
Oh, puts. You did puts.
Puts, yeah, I got long. Sorry. I was looking at my platform. I need to switch back over. Yeah.
Sold 280s. And
sold the 280. Gotcha. You're like, yo, Errol, you good? You sure?
I was like, what? Yeah, I was looking at this thing today too. So I had a strangle on in here for like, I don't know, maybe 2 weeks because the vol had been high after these moves, and I was trying to, collect some premium and didn't have earnings, which was nice. But it just moves around so much, man. Like, it just wasn't really working. And I think you're smart to pick a direction here. At least that's easier. I mean, I just felt like it just wasn't working in either way. Like, I just wasn't making what I wanted to make. I don't even remember the strangles I had now, because I had one strangle, then I adjusted. But I closed it earlier this week because I'm like, this thing is just moving too darn much. But yeah, I think you're smart to do kind of direction. Just pick a side.
Yeah, and then that defined risk. I was a little bit more comfortable doing that just because, I guess we're talking about Oracle, just because these products have been so volatile. I want to take advantage of some more undefined. But the volatility in the overall market's picking up. A lot of the names are surprising me. So I'm not going to push the envelope too far.
Yeah, I mean, to your point, I mean, look at, front month VIX, which expires actually this week on Wednesday, this coming Wednesday. But yeah, I mean, we're in backwardation, 21.95 bid versus November, 21.10 bid versus December. It is basically the same, November, December. So yeah, man, I mean, it's an interesting time.
Yeah, no, it is. We got a lot of names to talk about. I got a lot of positions expiring next week, and then I believe the week after that. So I'm going to clean some of that up, and then I'll most likely be on the sidelines for some of the earnings that we got coming around the corner.
I know, me too. Let me look at my list here, because I make lists every now and again for like things I should probably close. Yeah. There's a couple of things I kind of want to close heading to the weekend. I mean, it's crazy because, like, as you can see, I got a lot of positions on too. I got this Accenture. This thing is starting to work. It's been working recently. I've debated, like, it's just annoying because it's actually working. It's actually doing really well. It's 220, 265 strangle. We're at 238. I mean, we gooch, like, you know what I mean? Like, but 35 days to go. It's right in that sweet spot of the selling cycle. You know what? I think I just talked myself into. I'm leaving it on. I don't care.
I mean,
never mind.
It's sitting pretty right now. You're at the expected moves. I mean, you were selling yourself even more on it right there, and myself is included.
I know. It's just actually taking up a decent amount of buying power. It's like 2,500 worth of buying power. It's like, could I do more right now or just wait? Because I think one of the keys to this environment, honestly, is like finding trades that you can make more. In my case, can I make more money with the amount of money that I'm using on this trade right now? Is there a better trade? And maybe that trade hasn't shown itself yet. Maybe there's more volatility to come. Maybe there's more moves to come. And so that's why I look every now and again and be like, okay, what do I want to get out of? Like, for example, I really should be getting out of this. And I was really kind of hoping I'm really kind of hoping for a sell-off towards the end of the day here, so I can close out this diagonal, the SMH. I've had this on for maybe about a week. I'm long the 340 there, and then I am short the 320 here. And I probably should have taken this off last Friday, but I didn't. I was thinking we were going to fall more to begin this week. So this is one that's on my list, but I'm just not going to do it. I just can't bring myself to do it when the market's doing what it's doing right now. We're up, and we're pushing higher, it feels like, here.
Into Friday, yeah.
Friday, yeah, I got the same thing in spies. What's that?
I was just saying it's looking like we might take the day's high any moment now, actually.
Yeah, it does seem that way. So I got those two diagonals. That's what SMH and SPY. I don't think I'm going to close. I'm just going to leave it now. Whatever. What else do I got? Oh, this one I hope starts to move up. It's a strangle. Well, where to go? It's a strangle fig. This thing has pulled back some. I'm gonna let it roll a little bit. At this point, I'm just kind of, short the put more than anything. So I'm gonna leave that on. I guess I could adjust if I wanted. Do I want to though? It makes you a little nervous. These stocks kind of move. Whatever. I guess I'll adjust.
You got 55 minutes.
Yeah, if it does that, it does something. But yeah, I've just been looking for like a different couple of things to close, but I really haven't seen as many arrow. Like I think I got some pretty decent positions on. So
yeah,
I'm gonna chill.
It seems like they just need some time to cook, and then
exactly.
Yeah, circle back around.
They just need some time to cook. But you're right. I mean, when you talk about like the quantum computing names, some of those took hits this week. Are Ion, some more than others. There's the Ion Q move. There's the RGTI. What's the other one? QBTS. Yeah, they all kind of took some hits this week.
Oh, if I'm not mistaken, I believe RJ. I keep saying the RGTI. If I'm not mistaken, I believe the CEO sold his shares maybe yesterday or the day before, sometime this week, if I'm not mistaken. But when will these turn around? I don't know. But I think it's new information to take in when you see the CEO, selling their shares at a price level where these underlyings aren't typically trading at. So maybe he believes it might be overvalued. I don't know.
I mean, if you have shares and you're CEO and stock was here and you might have got them for $5 and it's trading $55 and you got 1 million of them things. I mean,
and you might not be sure if your stock will be at this price again in the next 5 years. If you're this, are you going to take your shares here? Because your stock price is clearly overinflated. So I don't know.
I mean, I don't know about you, Arrow, but I'm about to sell like about 100 grand of shares. Maybe buy a little, a lake house cottage.
Oh, I don't mind. Go ahead and sell them. I'm short right now. I'll be able to get out that position.
No. I mean, I'm saying if I'm him, if I'm the CEO, I'm about to sell like 100,000 shares. Get a little lake house cottage. Get a little, Ferrari to drive on weekends. I mean, I'm the CEO of a quantum computing company that wasn't supposed to really have results for like another 50 years.
Yeah. I mean, this brother has scored his retirement early, it seems. So it doesn't really matter what the investors think at that point if this man is, selling his shares already at those prices. But no, it is funny to see the valuations and then just to see a lot of these names spike. Like we speculate on if assets are in a bubble or not. And I just feel quantum computing, it's always speculation, but it's almost just the question on if it's a bubble. I don't know. Is it sustainable? I don't think so. So I think I answered the question, but in a different way. Because it is all speculation, but like the valuation should not be at that price. Like, let's keep it a buck. But, the market's going to do whatever the market wants to do. The market doesn't care about my opinion. It could throw it up to 100 if it wants to. So
it's just dope because I feel like this is when this happened, the beginning of the year when, because late last year, those stocks were running. And then the beginning of the year, I think the NVIDIA CEO comes out and is like, well, quantum computing, they're not going to have any advances for like 50 years. And then these stocks all tanked here. And then they were kind of quiet for a while and, kind of steadily moving. And then, just in the last couple months, like, wow. I mean, it's been a sizable move. It's been awesome.
Yeah, it's no joke. I remember, I think it was maybe a year ago now. I think Julia was really bringing quantum computing to our attention. And it was really cool to see a lot of, the capabilities of quantum computing, who it's going to be for. Quantum computing wouldn't be for, our everyday people using our computers are way too powerful. But for something for like a business-to-business transaction, maybe there are companies that could find quantum computing useful and maybe there's some other use cases for it. But it is crazy to see over the last 12 months how much attention and fuel these names picked up.
Yeah. Since we're in this space too, things that pulled back, I think, a little bit this week, some of those energy names, the Oklos of the world, the SMRs, what is it, NEE. I'm surprised I remember actually all the names. There's been a lot of talk about this area too, and whether or not it's a bubble. So there's a lot of, I don't remember a time where I've heard the term bubble thrown around in so many different industries, whether it's computing, whether it's energy,
metals,
whether it's AI, whether it's metals. I actually don't, I'm dead serious. Actually, I don't really remember that many different industries being considered a bubble or talked about as a possible bubble.
Well, let me ask you this. Well, how do you perceive it, right? You have a little bit more experience. You've traded through 2008. We don't know what's going to happen, but how do you perceive something like this when there seems to be, and depending on how you see it, a lot of opportunity everywhere, a lot of areas that you could be getting in and out of or being engaged in. How do you view that when someone as experienced as yourself recognizes all these sectors popping off?
The trader in me absolutely fucking loves it, bro. Like, I mean, there's no other way to say it. I'm sorry.
Right. I mean, volatility is a trader's best friend. 100%.
It's incredible. It's incredible.
Yeah.
There's so many different things to trade. And so that's awesome. But there is this part in the back of your head, and again, I'm just trading in and out of these. I'm not married to any of them, right? But in the back of my head, I'm like, why is it like that? And you can see volatility kind of ratcheting up. I mean, gold, the last time I remember gold and silver making moves like this was 2010, 2011, and it was wild then. It's and not to mention, rare earth metals. Actually, also in 2011, there were other times, there were stocks that moved crazily like those rare earth metal stocks were. One, for those who've been trading a long time, if they remember it, Molycorp, MCP, used to do a lot of the same thing you've seen MP Materials do. I mean, a lot. Like, I remember it. And again, history doesn't repeat, but it definitely rhymes at times. I remember seeing that during that time period. And, that 2010, 2011 time period was somewhat of a turbulent time period. That's where that May 2010 flash crash happened. So when I see that and I see all this, it makes me feel like, I don't know, something's bubbling under the surface at some point. Again, you have gold and silver going up no matter what the situation is. If it's good for them, if it's bad for them, if interest rates are going up, if interest rates going down, doesn't really matter. And so I just feel like it's an interesting, turbulent time a little bit. So just be careful on getting too caught up in any one position, sort of manage your risk accordingly and be prepared because, I mean, who knows where this may go.
All right. Well, I'm going to take your 2 cents because I can't wait till I have the time where I'm like, yo, when I was trading in 2022, when I was trading in 2020, 2024, whatever, it's going to be cool to pull those from my back pocket like you kind of can in 2008, 2010, and just kind of recall, the market environment you're in and use that experience to your advantage. So I think that's pretty dope.
Yeah, man, I'd say you're pretty battle tested, bro. Like, you went through 2020, which is crazy. You because you started kind of trading then, right? 2020 or so.
Yeah, that's when I got into options. Yes. 100%.
Yeah, exactly.
And even started looking at the VIX, the volatility index, and even know how those things operated at the time. So.
Yeah, I mean, you're pretty battle tested. You went through 2020. 2021 was kind of some mania to the upside. 2022, obviously, pretty bear market.
I've never seen gold do something like it's doing now, though. Like, I've seen oil kind of go crazy, but some of these assets, never seen it before. But I hear you 100%.
I know. It's you've seen a lot of regimes is my point. So I'd say at this point, you're pretty battle tested. But the funny part about that too is when that happens and you've seen some things, the market shows you something again that you hadn't seen before. So that's what we love. All
right. That's words of wisdom right there.
That's why we love it, man. Well, dude, good. Thanks for coming on the show. Good to see you as always.
Always. Thanks for having me, brother. We'll see you soon.
Sir. Folks, thanks for watching the show. And as always, be smart, be patient, trade them small, trade them often. See ya.
If you say way to go out on a ledge, what are you doing?
Way to go out on a ledge is just another expression when you make fun of another trader who's not willing to take any risk, who's very risk averse. So when somebody's very risk averse and doesn't want to do anything risky, you say, "Hey, way to go out on the ledge."
When you say you're going to whack the bid, what are you doing?
When you whack the bid, that means you're selling at the best available price.
A scoopy.
Scoopy! That's one of my favorite. That's when you're just like scooping something at the bottom. Like, you bought something and it never goes lower. Scoopy.
Back in the pits, you guys call them teenies. What are teenies?
A teeny is a 16th. So before we went to decimalization, we used fractions. And we used 16ths under a certain dollar amount.
Do you want the penny or the position?
Well, that's always something. The penny or the position is, do you want the trade? Then just pay up to get the trade. But do you want to squeeze it for a penny? That means you're just going to wait until you get filled.
When you say Omaha, what happened?
When I hear Omaha, I know I've gone too far.
Hello, happy Friday, everybody. Well, finally, precious metals have stopped the insanity. As much of a precious metals fan as I am, it kind of made my day to see that because it's gotten ridiculous. Plus, as longtime viewers know, I would really like to get back into palladium and was just a runaway train. And it's interesting because I tracked the sort of would have been profits if I'd held on to it, and it got worse and worse and worse. Today, just in a few hours, just in like an hour, half those would have been profits vanished. So I feel half as bad, and I'm just waiting for it to get a lot lower. So we'll look at that in a bit of detail because it's been quite the shift. You could kind of tell gold was getting out of hand because it became just all over the mass media, the kinds of places nobody talks about investing or commodities or anything were suddenly all fixated on gold and silver. So it got out of control. I remember as a kid, National Geographic did a special called Gold. And obviously at the time I wasn't really aware of the kind of propensity of the media to mark tops. But, when National Geographic does a special about gold, that probably was like to the millisecond when the top was. But way back in 1980. So anyway, it's a good shift. Let's jump into the charts and kind of explore what's wrapping up this week. A bit annoying because all through the night the market was getting weaker and weaker and weaker, and as usual, some bromides were thrown out about things would be fine with China. So everything bottomed like at midnight. It's been climbing ever since. So we've gone from solid red to, ES up 44 points, NQ up hundreds of points, YM up hundreds of points. So the V-shaped bottom, whatever the time span, any drop gets bought. And the only one with any red left at all is the small caps RTY. But here on the spider on this chart, we can see that it has spent the entire week just banging around inside the confines of the range on Friday. This one day is a superset of every single tick that's happened this week. We're just trapped, banging inside of this little jail cell. Cannot make up its mind. I mean, as time goes on, you sort of miss the data really badly, like we have no CPI, we have no PPI, we have no unemployment data. We got nothing. Next week, that'll change only in as much as corporations will do their quarterly data, which the government's also trying to get rid of because CEOs don't want to bother. And that'll probably happen too, which will make things a little less exciting because, quarterly earnings kind of things get exciting again and interesting. What if they cut that to like half a year or annual? I'll just be sitting around just making stuff up, waiting for the truth to come out. So for the moment, we still have quarterly data. And it'll kick in with household names next week because, like I said, I don't care what JP Morgan's numbers are or Goldman Sachs or anything. It's boring. But Tesla, Amazon, Apple, yeah. And of course, NVIDIA way into November. They like to wait. The cubes have also continued to bang within that Friday range, going nowhere fast. Lots of smoke, zero fire. And the semiconductors themselves, by way of SMH, continues to linger roughly at this 345 level, just hanging out. There seems to be like there's a magnetic draw to that level. As far as IWM goes, as I mentioned, this still is showing a little weakness. We're down 0.56%, which constitutes a crash in this market. And we are below the trend line again. So we've been at lifetime highs on Wednesday, and we're in the vicinity of the week's lows. Not sure why the small caps are particularly weak as opposed to its bigger compatriots, but it is. Emerging markets have been playing jump rope with the trend line. Oh, look, it moved. I try to move them back to the right place before the show. It takes a long time. It's very tedious, and they still like to move. So we'll just adjust that accordingly, and that'll hold on for a few moments, I guess. So yeah, we're above that trend line now. That is properly placed. And so this is the big plunge, and we've been trying to undo the damage since then on the emerging. So let's turn our attention to the one real action today, which is precious metals. Here's gold. And this is the biggest, baddest red bar we've seen in many, many months. I mean, our record on this may date back to April. So even at this distance, you can see this is a huge standout. No, buddy. So interestingly, a lifetime high today. It's kind of like equities last Friday. A lifetime high and a huge plunge. So the front month is down $68. And that's big enough, but like I said, it's in sharp contrast to the strength it was showing not many hours ago. And this has, I mean, if this, we've dropped before and it hasn't meant a thing. Like here, for example, there was this drop back on the 9th. It didn't mean a thing. 2 days later, it was flying higher than that. This could be the exact same deal, or we could start breaking it down. And the more it breaks down, the more freaked out people are going to get, because there are some parties that were paying $4,300 for this, and as it cuts through potentially all this up motion, you're going to get a lot of fear morphing into panic by those who bought at those levels. So bearish engulfing pattern, yes, it does not necessarily mean that that's it. That's the end. It's really a question of, is this just a one-day pause, or could this be a multi-week diminishment in prices? I'm hoping for the latter. Here's silver, kind of the same idea. Lifetime high today, huge drop today, 5.33%, which is really massive for this. Here again, this is just eyeballing it real quick. This looks like the biggest plunge since April 4th. So it's been a good half year plus since we've seen a movement of this size. And in turn, SLV, silver, because its trading hours are more limited than the futures, you don't have the same experience. You don't have the lifetime high that the futures are illustrating. That high remains as of yesterday, but we've undone the gains from Thursday, the gains from Wednesday, and most of the gains from Tuesday. So yeah, SLV itself down over 5%. So with all this happening, naturally, the miners are taking it on the chin. They've been very strong, but GDX is down over 7%, and its lifetime high was just yesterday. And it's been less consistent in its rise versus just plain old gold, but it's the exact same story. If gold and silver illustrate that this is not some one-day anomaly, that they actually are going to backtrack for some weeks, the miners are going to just get diminished. I was really tempted, but I didn't yesterday, although it would have worked out nicely, to buy dust. Dust is I think triple, at least double, I think it's maybe 2x bearish against miners. And it got down to like 8.40. But there was nothing about the chart that said buy me. It was just like down hard, down hard, down hard, day after day. So I didn't do anything. But with all this happening, we had a big bounce on dust like. So it's up 14.5% today alone. But, over the long haul, these leverage instruments are just like a vicious ski slope. I mean, they do nothing but go lower. So you get these little pops now and then, and this is definitely one of them because the precious metal sell-off is a bit of a surprise. Of course, we can't go through precious without mentioning palladium. PALL is down almost 10% just today. Plus, it's got a very nice island reversal gap right here. This poor little bar from yesterday, all by his lonesome. His low is higher than the flanking days Wednesday and Friday's high. Thus, an island reversal gap. And so if I may offer my wishes, what I would love to see this do is get down to, under 120, somewhere in the range of that setup. Just get the stuffing knocked out of it so it becomes an appealing buy again. As far as shorts go, so yeah, as I said, we're, up hundreds of points on the YM and the NQ and up, 44 points in the ES. But in spite of that, it's a funny thing. I have two big portfolios I deal with almost purely shorts, and they have different personalities. Although it's not like, all the semiconductors go here and nothing like that. It's just a random mishmash. But for whatever curious reason, one of them tends to do much better than the other on a given day. And it flips who does better. So like, as I'm glancing over at this, one portfolio of the 14 positions, it's like 6 are down and 8 are up. Not that great, but not too terrible considering. The other one, like almost everything's down. Probably just dumb luck. But by and large, more shorts are down than up. So that's not lousy considering what a green day it is. Some of those are Carvana, which is down about 3.75%. I mentioned this one recently. Lumen, this one I brought your attention to because it had this enormous plunge, bounce, and attempt at a bullish breakout, but it seems to be failing. So that one's down 2.35%. W, which is Wayfair, down just a little, 0.2%, but a pretty clean setup. We've got Delta DAL, which is also down about 0.2%. Then Corning, GLW, is down about 2.5%. I must say, I got out of Oracle yesterday, which is a shame because I think it's down like 7% today. Oracle's been very spastic lately, so it's become very tricky. But that was a nice tumble that I did not partake in. Kohl's, KSS, is down almost 2%. The chart looks very boring, but it's a really interesting long-term setup, as you can see there. There's also Micron, which is down just a little. But if semiconductors weaken at all, I think this would be one of the first to tumble hard. It's hanging out at lifetime highs right now. Another semiconductor is ON, which is actually down today 1.11%. And one last one, even though I didn't buy Dust and I didn't short GDX, I put my toe halfway in the water by shorting yesterday XME, which is metals and mining in general, but a lot of precious as a component. So it's not as lusty a drop as GDX, but it's not bad, 4.18%. And I'm going to hold on to this one and might cover if it tags this trend line. But as it is now, sticking with XME. So just a few moments left. Let's just look real quickly at the big equity futures. So the ES, similar to the spider, no surprise, wedge is cleanly broken, and we have just been messing around here all week long trying to figure out what to do with itself. So it's pretty much dead in the middle of that bar from Friday. The NQ is up rather strongly, but the same deal. Within Friday's activity, no real clear direction. Red, green, red, green, red, green. I mean, there's no Christmas tree that's reliable. It's kind of comic if you look at it, just how amazing that is to just flop every day toggle like that. So I guess it means a red Monday. And then finally, RTY, which is actually managing to be down a little bit, 0.2%. And in this instance, this giant cup with handle pattern is still intact, strikes fear in the bearish heart, but it's looking a little wobbly over here. So we'll see if that actually breaks down or not. So thanks for being with me. You have a good weekend. And I'll see you on Monday when we can welcome the real earnings season. See you then. Bye-bye.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode. Smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Mikey, my friend, it is the last call, and as you foretold yesterday, E-mini S&P 500 futures rallying up 42 points here near the high end of the session here. Including the overnight session, we've had about a 150-ish point intraday range. Certainly some volatility underneath the surface, especially in the overnight session. A little bit of a rally here since about 2 or 3 hours ago. Had some two-sided action throughout, though. NASDAQ up 180. It, too, has had quite a substantial intraday range, about 600 points here on the NASDAQ. You got the Dow up about 300 and the Russell down 15. The Russell has been the weakest of the group today. Oil catching a tiny bit of a bid, but at lows, up 21 cents, 57.20. You have volatility futures coming in $1.41 /VX at 21.01. You have the VIX itself at 21.53.
Bonds down 12 ticks, rates going a little bit higher here on the session, but near the lows, as you can see in the bond chart here, just been a bond rally for the last 2 weeks or so. Gold finally having a down day /GC 42.39 here. That's $4,239, down $64 and change here. You got silver down $2.83. It was a little bit lower about 30 minutes ago or so. And then Bitcoin has bounced a little bit. Down 1,800 on the futures, spot down 2,100, and Ethereum down 950. The crypto space has not looked great, but has kind of found a bottom, at least for today, it seems like. For the market move today, were you surprised?
I was surprised to see it lower first.
Oh.
Then they canceled that, and now we're higher. But they are selling off from the highs. I think it's
10
just
points. Yeah.
Yeah. I think it's an interesting kind of chop day, but they are destroying volatility.
Yeah.
Vol futures down 2.5 points in the V contract, 1.5 in the X. So they're killing that backwardation that we saw. It's a lot more flat now. So we'll see what happens through the weekend, but yeah, it's been good two-sided action for bulls and bears out there, but I've been pretty active. These SPX iron condors have been great.
Yes, they have. If you manage them quick.
Yeah. I threw on another one for Monday, the 65.80, 67.15 short option. So basically right at the 3-day expected move there. And yeah, we'll see if it works out. But if we open up basically flat or up 10, down 10, it'll be a nice range that we can hopefully cover.
Yeah, for sure. These SPX trades, I mean, with volatility where it is now, they've been, they move very quickly. So I've been trying to take advantage of that by taking smaller wins. I'm going to see if I can get the team to put some data together for us on managing quick, managing based on dollar amount targets versus like percentage targets. I think that's kind of an interesting look. But yeah, we did a ton of trades today. We had fast market, a couple of trades from the peeps in our Reddit sphere, which we are growing ever so slightly in the recent times here. Got AMD position, Oracle position, a lot of the stocks that have been like high-flying stocks, INQ, got a nice move lower, nice vol crush there, as well as even Aklo, which is now up $1, but it was down about $4 or $5 at the lows today. A lot of relief in some of those positions, which I think has helped a lot of people. I've definitely seen it in my P&L, just having some of those, it's not only the move, but the volatility contract there has really, really helped. Some other positions that I dealt with today were some just like butterflies that are expiring today. You have option expiration today. So if you got any positions, leftover positions, you got to deal with them in the next couple minutes here. But yeah, overall, I was not expecting to be up 41. I thought we would have a little bit wider of a range intraday than we did, considering the overnight action. And I thought that volatility would probably stay bid, and it really hasn't. So I got a little bit fooled today. But our study today, market measure, was a good one on VVIX and VIX. And like this is kind of the time where you want to put some risk on the table. And when you look at VVIX down 13 right now, and the VIX itself, coming in pretty significantly today. If you didn't find some new opportunities today, I feel like I hope you don't miss out. A
little FOMO.
Yeah.
Yeah. I mean, the VIX one day has been crazy the last couple of days, naturally, with the slight backwardation that we've seen. But yeah, feels a little ominous that through Monday we only have a 50-point range, given the new environment that we're in. But 120-point range through next week, still plenty of implied volatility, even into this move here. But yeah, I've done a bunch of other stuff today. So
what you got?
I bought back. So the SPX Iron Condor from yesterday, that was a $100 winner. I've been basically just collecting $200 right at the expected move and setting a GTC at $100 to buy it back for 50%. I got into a Netflix short-term calendar spread.
Ooh.
So
you're playing for the split.
Yeah, please. That'd be great. But these options are, so Netflix has a really high implied volatility for the 7-day cycle. And we basically just went in, Jamal and I, we bought the 1300 strike in the 14-day.
Okay, so short term.
Yeah, and we sold the 1300 strike in the 7-day. So you have a week difference there, but you're ultimately reducing cost basis by 80%. So you're paying $1,700 for the long option, but you're collecting $1,450 in the short. So ultimately, that long option just needs to have $300 by the end of next week in value, which could happen even on a down move, as long as it's not a crazy down move. Like if it's like a 10 or 20 point sell off, it's very possible. You just need to avoid the 100-point sell off to the downside. But anywhere near 1,300, and it's going to be a great trade.
Yeah, I like that. I mean, I think that what are their earnings Tuesday?
Tuesday after the close.
Tuesday after the close. It's one of the first ones. I know Tesla is in that basket as well, which is Wednesday after the close. So you got a couple of those names. Then the following week, you have all the bigger ones, the bigger names: Apple's, Amazon, Microsoft, Google, all that good stuff. So be interesting to see. I mean, I'm surprised at the vol crush. I would like to see. I think what happens into the close is going to be our indicator for next week. Obviously today, option expiration, it's kind of you've had a volatile week. We've had a lot of volume coming through the system today from the E-minis. Almost 2 million E-minis have traded today. So it's certainly been a high liquidity day. We talked about it this morning with a lot of our positions that we were trying to get on and even take off. You're getting great prices all day today, not only because you had two-sided action, but you had that pop in volatility in the morning part of the session. Volatility staying high, so you were getting filled, for your sell orders, you were getting price improved. For your buy orders, you were getting price improved. It was great the entire time. So I think it'll be interesting here into the close. If they smash vol into the close, I think you got a buy the dip here. As it turns out.
Yeah.
Just like every other time.
Yeah, I think this vol crush. So I mean, we are kind of having an inside day. Inside up is going to create more vol crush than inside down, but
yeah.
It does feel like this vol crush is a little bit more than what we're seeing in the rally today. Like this rally is not that much of a rally, and we still had a pretty big intraday range today. But yeah, the vol crush, especially in the front contracts, is interesting.
Yeah. E-minis up 37 and change here. NASDAQ up 168. Are you back to these round numbers? You got 6,700 on the E-minis, 25,000 on the NASDAQ. We're going into the 10-minute ramp, as we used to call it. You think we get a little bit of a bid into the close? What's your feel here?
I think we just stay like right here. I think up 40.
Oh, you think so? Up 40?
Yeah.
That's 6,700 right there. 10 points away. Spook the children a little bit. You can't say scare because 10 points, that's nothing.
Yeah.
You spook them a little bit.
Yeah, I think we stay around here. I would be surprised if we saw any big reversal or continuation in the next 15 minutes, but
what are you thinking on gold? Did you guys probably took some? I know Jamal has been leaning short gold and got bailed out on that. What do you think about that?
Yeah, so we put on the downside put calendar yesterday.
Okay, you do that in GLD or?
In GLD, yeah. So the 370, I've got the 370 put calendar, long December, short November. Okay. And I also have the diagonal spread that's significantly out of the money, the 345, 335. So This move to the downside is helping both of those positions, but I need a lot more.
Yeah.
I need to move to 370 for that calendar to really come to fruition, and that would also help the diagonal spread. But yeah, I'm leaning short gold via debit spreads. I think this realized move is way outside of implied volatility, even with an IV rank of 100. So when you look at any product and you see 25% IV, I don't care what IV rank says. It's just too low for this realized move. So sticking with defined risk debit trades there.
Yeah, it's hard to lay into the calls here. Use a significant amount of buying power as well. And I mean, this thing, obviously, it's moving now, so you got to be careful there. Some of the stocks just making big moves today. When you look at like the high option volume list, we've been talking about a lot of these. You know, you got HIMS, $8 to the upside, $8 to the downside. It's basically flat after the last 2 days. You got a lot of these like kind of meme realm stocks, a lot of the nuclear energy, a lot of the materials, the earths, that sort of thing, the quantum stocks, all on that list. When you look at the S&P 100, it's relatively a broad-based rally here. So if you go to the market indices, you look at the S&P 100, you could sort it here. You got, a good fraction of them, or only a fraction of them, I should say, are in the red, a good portion of them in the green today. So it definitely seems like a buy the dip moment here.
Yeah, especially
in hindsight, of course.
Well, you're definitely seeing a lot of strength in just a handful of names that are pulling it down, like Oracle down 7%, Cat and Eli Lilly down 2%. But all the other red numbers are under 2%, and a lot of them are within 1%. But then when you look at the upside, you've got all of these household names up over 2%. So like IBM, GM, Intuit, PayPal, Tesla, Apple, Booking, like all of these stocks are up. There's 30 or 40 stocks up over 1%, and only 4 stocks down over 1%. So it's not just a couple of names. It's a broad-based rally here, which I think is why you're seeing a bigger vol contraction than we might think.
Yeah, we're at the lows of the session here at 2090. They just ticked down to 2085 here. No dip too small. I mean, it's so funny because you look at the E-minis and we are 50 points from the highs, despite the carnage, despite the news cycle, despite the tweets and all the pain that has been going on. How's your IBIT position doing? You've been rolling down calls, or you leaning long here?
I'm just leaning long. I looked at rolling down calls today, and there's just no reason to. I mean, like the 65, so I have the 65.75 strangle in November. And the reason why I'm not rolling down calls is because even into this sell-off, the call skew is still so apparent that you just don't get a lot of credit for the additional risk that you add. So like if I moved down my 75 call to 65, I would pick up $1.50, but I would be introducing 10 more points of risk lower. And even if I moved it to like the 67 or 68, it's still the same story. I'm collecting 70 cents, but I'm adding 7 points of risk to the upside just by bringing it closer. So I don't feel the need to do anything here. And I think that's especially true because I've collected so much premium through the year already that I can lean aggressively long just by like not doing anything if I want to, because this thing needs to go, IBIT needs to go sub 40 for me to take any like real heat on this position. So
yeah, I feel you there. I sold the 60 strike puts in the middle of the day today. They haven't really moved, the November puts, adding to my long delta there. I agree with you. I think it feels like it kind of bottomed out today. I mean, the whole market feels like it kind of bottomed out, but we didn't have much of a downside move. So I feel stupid saying that.
It's all right.
It feels too easy for it to be another buy the dip.
Yeah. I mean, it feels too easy, but
It works. It's worked until it doesn't.
And it hasn't not worked yet. So
yes.
Rocket Labs, I sold a put there.
Okay.
Sold this.
You're getting in the memes now. I took off all my goofy memes, my INQ, my Oclo, CCJ. I got bailed out. APLD. This is one that was up like $8 on earnings. You're getting back in?
I'm back in. Yeah.
Oh no, I don't want any part of those.
I think it's interesting. Like I just have one contract on the 60 strike in November, but I mean, I picked up $600 for this, $590. It's up 50 cents right now because we're seeing it come off of the lows. But I mean, when you can pick up $600 on a $66 stock and just instantly get a 10% rebate, it feels good.
What could go wrong?
What could go wrong until a lot of things go wrong, but. Yeah, we'll see what happens. I mean, my break even is down at like 54, which is where that recent chop was. So we'll see. Either way, it's got such high implied volatility. I'll have no problem collecting more premium if I need to roll this out in time.
Getting that vol crush here into the close. We're at the lows of the session here, 2085 on volatility, even with the E-minis kind of selling off a couple points here going into the close here. Just about 8 minutes left to go. NASDAQ up 156. The Russell's still the weakest of the group. Been a good day. Good trading day. Good short on gold. That was fun. We did that into the close yesterday. That took that off, and then I scalped it all morning long. It was fun there. I'm wondering where the next move is.
Great question. Looks like they're trying to give us the 6,700 close narrative, selling off in the futures closer to 6,700. But yeah, I mean, what's on the horizon? Like the volatility is getting destroyed here.
Yeah.
We've got, again, pretty low expected move for Monday. I think 50 points is not that much, all things considered. And yeah, I mean, we're almost sub 20% IV in SPX for next week.
Yeah, it's pretty wild.
Is it done? Are we done with the turbulence here?
I feel like it can't be that easy, but probably.
Yeah. Well, you have a bunch of Mag 7 stocks reporting earnings next week and the week after, so those could certainly bring some added turbulence.
Yeah.
But if they all just rocket ship, I mean, might be the end of the fear.
Yeah. Well, it seems like the fear is ending right here with the way volatility is acting, NASDAQ rallying. Other things that have earnings next week. Have you looked at all the lists just to give everybody an idea? So you got
Tesla and Netflix are the two big ones.
Okay. You got Coca-Cola in there, GE, LMT, Netflix, Texas Instruments, GEV, Tesla, IBM, FCX in there, AAL, Intel, NEM.
Yeah, there's a lot of them.
Yeah. Have you gotten into any of the gold miners yet?
No.
You're staying away?
I'm staying far, far away from gold, unless it's shorting it, which doesn't feel good.
With GLD.
With GLD.
Which is small in itself.
Very small.
I agree with you there.
I don't feel the need to dabble in the mine, especially now. Like maybe earlier if I was bullish, but it's a crazy one.
Yeah.
But yeah, Intel and IBM are all of a sudden interesting again. Intel has a crazy high expected move for next week, which is interesting. For 4 points on a $37 stock price, I don't know when the last time Intel had well over a 10% notional value expected move.
Well, we don't remember it because we were never really trading it. So
True.
It wasn't a thing until this year.
Yeah. IBM is pretty close to 20-point move on a $280 stock. So still lots of implied volatility here. for earnings for these stocks.
Yeah.
But yeah, we'll see what happens next week. I think of the list that we talked about, if you just go to like the all earnings list, I think my favorites are going to be Netflix, Tesla, Intel, and maybe PayPal. But we'll see.
I sold puts in PayPal. I have that on ready to rock.
There you go. But yeah, I think the next couple of weeks we will have plenty of opportunity for trades, and we're writing a bunch of earnings previews on the Tasty Live News and Insights tab. So check that out if you want written content. I will throw a link in the chat right now for that.
Yeah. E-minis 6702, only up 33. Are we going to get it? Is it going to happen?
The 6700 pin?
150.
Yeah. I think somehow they're going to bring 25K and 6700 flat into the picture.
Let us stay right there.
Yeah.
Hey.
I see the money match promo thrown up.
Yes.
Love that. Scan that QR code. 1% cash back, or not cash back, cash match on any and all deposits during your 30-day window and commission-free trading. So come check us out.
Give us a try if you haven't.
I think you'll like it.
Yeah.
I think you'll like it. Yeah, some people in the chat looking at Bitcoin Saturday night rally. That'd be sick. I'd be into that.
Yeah, I think Bitcoin will tell you if the market's going to open up or down on Monday.
Yeah,
it has been kind of the front runner of the over the weekend move. So I think you can key in on that. I agree with that. My long Bitcoin delta is bigger than my equity deltas at this point.
I mean, yeah, makes sense.
Into this move.
Yeah, this is a catastrophic move for Bitcoin for now. But yeah, that's a good call out. We have been looking at Bitcoin futures just to get an idea of where the continuous markets are at.
Yeah.
So yeah, check that out if you're looking for maybe a feel of what the markets could bring on Sunday night.
As we go into the close here, E-minis not doing a whole lot much else. 6706 here, up 38. You got the NASDAQ up 175, the Dow up 245, and the Russell down 17 here. Oil up 14 cents, been looking like doo-doo. You got volatility futures at the lows of the session here. 2065 was the low tick. We're at 2071 right here. You got bonds down 10 ticks. Gold catching a little bit of a bid here, only down 59. Silver down $2.79. And then Bitcoin down 1,700 on the futures. Spot down 2,000. You think it's a rally next week?
I think so. Feels like it.
I think Monday you get a little bit more of a pullback. I think that's it.
The V contract futures are now down over 3 points.
Yep.
So we are basically out of backwardation. We'll call it flat out of backwardation. But this morning we had almost a 2-point backwardation in between V and X. So I think regardless.
They almost gave us our 6,700 on the dot. They had it right there a second before the close, and somebody just came in and said, I got to have another couple contracts here into the weekend.
Yeah.
Couldn't leave home without them.
Yeah. I think for next week's assumptions, not even looking at the E-minis, like the E-minis being green right now, I think matters less than the huge vol crush we're seeing in the near-term cycles. Or the near-term contracts. I think that is why I'm leaning towards a bullish week next week. Because this is a big volatility crush.
Yeah, big one. Mikey, that's it for us. Thanks everybody for joining us this week. We're going to take a quick little 90-second break, come back and do it all over again on Monday here. So, and we'll be here for first call on Sunday as well. So stick around for more content as we stream throughout, but we'll see you then. Let's see what happens with the markets. We'll see you then. Peace.
Peace.